Hello friends, good morning everyone. Welcome to the Rocket Revision batch on CA Intermediate for November 22 exams. So this is a marathon batch on GST exclusively for CA Intermediate covering the entire portion, but this important from exam point of view, and majorly I will be covering all the topics. So maybe some small points could miss. So 100% coverage cannot be done in any marathon. So therefore this majorly all the topics will be covered. So this will be like a revision. So if anyone wanted to revise quickly the entire GST, so then this video you can watch. And also amendments for November 22 exam will also be incorporated into this video itself. So therefore whatever amendments that are required for November 22 exam, so I will be discussing that also, all those amendments also. And this Rocket Revision batch is mainly based on, so this That's It book. So based on this That's It book only I will be taking the class, this Rocket Revision, and this That's It book is available in my website. So some of you might have already purchased, and even for regular batch students I have already given that. So if you want to buy this, you can buy. So this is like a small book, a handbook kind of, and hardly there are some 167 pages. So this will be sufficient for the last minute revision one day before the exam. So this video, please review this one day before the exam, and so that you will be getting the absolute revision. So you don't have to read anything else, so directly you can go to the exam. And then next thing is that, so this book is 199 rupees if you could not buy. So even you can get the soft copy of this in my app. So you can go to THARUN'S Brainary app or courses.tharunraj.com. So in that you can find the soft copy of this for 99 rupees, but I recommend to go for hard copy, and it's okay, fine. Ultimately you need to take the decision, but I'll be taking class from this book only. Okay, then next thing, this is like in GST, so 40 marks. So usually the questions are all predictable in nature only. So MCQs only students are finding it difficult. So now let's proceed to the GST part. So you can see this is the index, that is introduction to GST, meaning of supply, composite supply, mixed supply. These are the concepts that we are going to discuss. Okay, and wherever required little bit of examples or illustrations etc. So that I will just give it to you. So the first one is basic concept of GST. So what is the year in which GST is implemented? GST is implemented with effect from 1/7/2017. And how GST is formed? So all indirect taxes levied by central government except customs duty, but including CVD and SAD, got subsumed into GST. So what are the duties that were levied by central government in the past? So excise duty, service tax, central sales tax, that got subsumed into GST. And CST, you need to remember, CST levied by central government, but collected and retained by state government, Okay, so this is with respect to this central sales tax. Now all the old indirect taxes got subsumed. Then what about customs duty? Customs duty not subsumed into the ambit of GST. However, additional customs duties. What are these additional customs duties? Countervailing duty to counterbalance excise duty on imported article, special additional duty to counterbalance the sales tax on the imported article. So this CVD and SAD also got subsumed into GST. Okay, then indirect taxes levied in the past by central government. What are those indirect taxes? So value added tax, luxury tax, entertainment tax, betting tax, purchase tax. Okay, so these are the taxes that got subsumed into GST. So even this advertisement tax also got subsumed into GST. So value added tax. So total six you need to remember. So what are those six? Value added tax, advertisement tax, luxury tax, entertainment tax, betting tax, and purchase tax. That is octroi. So these are the 6 indirect taxes levied by state government in the past that got subsumed into GST. Okay. And what about entertainment tax levied by local authority? Entertainment tax levied by local authority not got subsumed into GST. Not only entertainment tax, any other local authority tax not got subsumed into GST. So these are the points that you need to remember. Okay. And then India adopted this dual GST model from which country? So we adopted this GST model from Brazil and Canada. And what is dual GST model means? Dual GST model means both central government and state government is having power to levy tax on the common tax base, on the common value, that is known as dual GST model. And this dual GST model is implemented in India through a constitution amendment first. So that constitution amendment is Constitution Amendment Act 2016. So that amendment has taken place in 2016 and we adopted this from Brazil and Canada, and where central government and state government is having power to levy tax on the common base. So that is about this dual GST model. And so as the decisions will be taken by both central government and state government, so there is a common body that was required. And what is that common body called as? So GST Council, which is a decision making body under GST. And this GST Council is not a government body but a constitutional authority. So Article 279A of the Constitution empowers the President of India to constitute this council. And who will be the members of this council? Union Finance Minister is its chairman, so one member. And then State Finance Minister, we have 31 states. How we have 31 states? So that is 28 states plus 3 union territories with state legislature. 3 union territories with state legislature. So the 3 union territories with state legislature is, so that Ladakh, sorry, Jammu and Kashmir, not Ladakh, Jammu and Kashmir and Delhi and Puducherry. So these are the, or Pondicherry, these are the 3 union territories with state legislature. So which means these are treated on par with states. So therefore we have 31 states, which means there are 31 state finance ministers that we will be having. So therefore, what are the members of the GST Council? So in GST Council there will be 33 members, 1 union finance minister and 31 state finance ministers and 1 MP of state affairs in charge of revenue. That is for 5 union territories. What are the remaining 5 union territories? The remaining 5 union territories without state legislature, legislature is, so number 1 Andaman and Nicobar Island, number 2 Lakshadweep, and number 3 Chandigarh, and number 4 Daman Diu, Dadra and Nagar Haveli, and number 5 is Ladakh. So these are the 5 union territories without state legislature. For these 5 union territories together there will be 1 union MP in charge. So that person will be taken. So total how many members will be there? So in total there will be 33 members. In total there will be 33 members in the GST Council. And what they will do? So they do the decision making of GST. And what are the types of GSTs that we have? We have CGST, SGST, then UTGST, IGST and GST compensation cess. CGST levied by central government on intrastate supply and SGST levied by state government on intrastate supply. UTGST levied by central government only on intrastate supply. And when? What is intrastate supply? Intrastate supply means if location of supplier and place of supply is in the same state, it is known as intrastate supply. If location of supplier and place of supply is in 2 different states, 2 different union territories, a state and a union territory, it is known as interstate supply. So whenever the intrastate supply that takes place within the state, then there will be CGST and SGST. Whenever intrastate supply that takes place within a union territory, then it will be CGST and UTGST. Okay. So then IGST is levied in case of interstate supply. Location of supplier and place of supply is in 2 different states, 2 different union territories, a state and a union territory, then there will be IGST. So this IGST will be levied by central government, but fully it will not go to the central government. So 50% out of that is transferred to the state based on place of supply. So sometimes the place of supply cannot be ascertained. Why place of supply cannot be ascertained? So there are some transactions which are deemed interstate supplies wherein the place of supply will be a foreign territory like that. So then in that case, to the consuming state it will be given, okay, wherever the goods are consumed or service are consumed, to that consuming state. If POS cannot be ascertained, it shall be paid to the consuming state. Then in addition, there is something called as GST compensation cess. On account of implementation of GST, there will be some loss of revenue to the states. So in order to compensate that loss of revenue to the states on account of GST implementation, this GST compensation cess is levied, and this GST compensation cess is levied for a period of 5 years from the date of implementation of GST. 5 years from the date of implementation. 5 years from the date of implementation of GST. So this GST compensation cess is levied, but it is not levied on all goods. It is levied only on notified goods, not on all goods here, only on the notified goods this is being levied, okay. Then next we have intrastate supply, interstate supply. Already I told you. So what are the two factors that decides whether it is an intrastate or interstate? Location of supplier and the place of supply, okay. If it is in the same state or same union territory, intrastate. Location of supplier and place of supply is in two different states or two different union territories, the state and the union territory, interstate supply. In case of whether it is intrastate or interstate, in question itself they will give what is the place of supply. In the absence of information in the question, you consider location of recipient as the place of supply, okay. So generally what will be taken as place of supply? So generally location of recipient, LOR, location of recipient shall be considered as place of supply, shall be considered as POS. So it will be given in the question, mostly it will be given in the question. Suppose in the question if it is silent, so then you take location of recipient as the place of supply and determine whether it is intrastate supply or interstate supply. Mainly this will be important for the purpose of the first question. In the first question we need to arrive at CGST, SGST and IGST liabilities, and accordingly we need to do the computation of net GST payable. For that this will help, okay. Then zero rated supplies. What are considered as zero rated supplies? Export of goods or services, supply of goods or services to SEZ is known as zero rated supply. These two are only considered as zero rated supply. So zero rated supply should not be understood as nil rated supply. So zero rated supplies will not be considered as nil rated supplies. These two are different, okay. So zero rated supplies means export of goods or services, supply of goods or services to SEZ is only considered as zero rated. On the other hand, nil rated means the rate of GST is nil. So in case of zero rated supplies, there are two options available. Option number one, we can pay IGST, or option number two, no need to pay IGST. In option 1 we will pay IGST and we will get refund of IGST. So therefore the tax incidence will be 0. In option 2 we will not pay any IGST and we will get refund of the GST paid on inward supply, ITC. So ITC refund we will get. So then also the tax incidence will be 0. So either option 1 or option 2 can be followed, and ITC can be availed on the inward supply. So I am making inward supply, on that inward supply I can take ITC, and if I am paying GST I will use this ITC for payment of GST and I will get the refund of that. Suppose if it is option 2, I will not pay any GST, but already on inward supply whatever GST I paid, that I will get it as a refund. So that is about zero rated supplies. So with this first segment is over. That is first concept, introduction to GST. Then the next area that we are moving on to is supply under GST. So in supply under GST, all the sections that we are referring to from now on will be CGST Act only. So IGST Act and all is not there. Suppose if there is any IGST Act reference, clearly I will mention, but for exam they don't have IGST Act reference. So therefore any section that we are referring to will be of CGST Act only. And what is the taxable event under GST? Taxable event means when there will be levy of GST. The levy of GST is on supply of goods or services, and this supply is defined under section 7. Section 7 subsection 1 talks about inclusions in the meaning of supply, and 7 subsection 2 talks about exclusions from the meaning of supply, and 7 subsection 1 capital A once an activity becomes supply, it will be classified into goods or services as per 7 subsection 1 capital A. Then 7 subsection 3 is that reclassification of supply into goods or services. Suppose if we classified supply of goods, we classified a transaction as supply of goods. So central government is empowered to reclassify it as supply of services and vice versa. But using that 7 subsection 3 power, they have not done anything so far. So therefore at present we have 7 subsection 1, 7 subsection 2 and 7 subsection 1 capital A. And whenever we are referring to 7 subsection 2, we need to refer to schedule 3. So the list of activities which are excluded from the supply is given in 7 subsection 2, read with schedule 3. That list is given in schedule 3. Also, what are the activities which are treated as supply of goods, which are treated as supply of services, that is given in schedule 2. So whenever we are referring to 7 subsection 1A, we need to give reference of read with schedule 2 of CGST Act. Then 7 subsection 1 inclusions. So first we will see inclusions in the meaning of supply. In these inclusions there is an amendment, that is, so now they have added one new activity, that is 7 subsection 1 clause AA. So there are total 4 clauses now, 7.1a, 7.1aa, 7.1b, 7.1c. So 7.1a is simple, any activity, that can be any activity. So they have given an illustrative list, any activity in the nature of, so sale, barter, exchange, license. So this 7.1a, actually it is any activity, but in law if you see, they have given list, that is debts RLL, okay. So section 7.1a, the reference is debts RLL. So D is disposal, and E is exchange, and B is barter, T is transfer, then S is sale, R is rental, L is license, and another L is lease. So these are the activities which are treated as supply under 7.1a. No, not these activities. This is just the illustrative list. So not these activities only treated as supply. So any activity will be treated as supply under 7.1a, but only 2 conditions should be satisfied. What are those 2 conditions? It should be for a consideration in the course or furtherance of business. So then it will become supply under 7.1a. Whereas 7.1aa is any activity, so between a person other than individual and its members for a consideration. What is this? So that is, first here who should be taken as the supplier and the recipient. The supplier here is in person other than individual. The supplier here is person other than individual. Who is person other than individual? Person other than individual means HUF, firm, AOP, BOI, company, body corporate, like that, okay. And recipient. So who is recipient? So members of that person, members of that person. For example, if you take the person as HUF, the members of that person is co-partners. If firm is taken as person, then members of that person is partners. If a company is taken as person, then the members of that company is shareholders, like that. So between a person other than individual and the members of that person, if there is any transactions, so that transactions will be treated as supply under section 7.1a. So that is this 7.1aa, okay. So previously itself it was becoming supply. For example, a resident welfare association or apartment owners association provides the services to their members. So previously also it was treated as supply under 7.1a, but there was a dispute. So because the members and the person are one and the same, how there can be services provided by a person to himself? So due to that reason, they have created this 7.1aa to establish the principle of mutuality. So therefore, this 7.1aa is any activity that can be again for goods or services between a person other than individual and its members. So both sides it will be treated as supply, that is members providing service to the person. For example, partners providing services or partners making any supply of goods to the partnership firm will also become supply under 7.1aa. That is about 7.1aa. Then 7.1b is import of services for consideration whether or not in the course or furtherance of business. In 7.1a we talk about any activity, but in 7.1b it is import of service. In 7.1a it is for consideration, 7.1b also for consideration. 7.1a in the course or furtherance of business, but 7.1b whether or not in the course or furtherance of business. And the usual example that I will be giving, so will be Netflix, Amazon Prime. So these are examples of not in the course or furtherance of business. And Zoom subscription. So Zoom meeting subscription, then cloud storage. All these are example of in the course or furtherance of business. Okay, so import of service for consideration whether or not in the course or furtherance of business. Then 7.1c. 7.1c talks about activities referred in schedule 1. So there are 3 schedules that you need to remember. So schedule 1 contains the list of activities. Schedule 1 contains a list of activities even though without consideration that will be treated as supply. Okay, so therefore supply under section 7.1c, whenever you are referring 7.1c, so there are some activities in schedule 1 even though without consideration constitute supply, so then you need to refer to 7.1c. so schedule 1. And schedule 2 is classification of goods or services. So supply of goods versus services. Supply of goods versus services under section 7 subsection 1 capital A. And schedule 3 is for the purpose of section 7 subsection 2, exclusions from the supply. So whenever you are referring to 7.1c, schedule 1, 7 subsection 1a classification, schedule 2, 7 subsection 2, schedule 3. Okay, so what are those activities in schedule 1? So we have DRIP, DRIP, D for disposal of business asset on which ITC is availed. R for related party transaction including transaction between distinct person. I for import of services from a related person or other establishment located outside India. And P for principal agent transaction. So disposal of business asset on which ITC is availed alone, whether or not in the course or furtherance of business, but all others should be in the course or furtherance of business. Okay, so DRIP, D for disposal of business asset. I have a business asset on which ITC is available and I am disposing it off without consideration. And then related parties, if there is any related parties or distinct persons between them, if there is any transaction, that will become supply. Then import of services from a related person. How 7.1b is different from 7.1c? 7.1b import of services from any person, but 7.1c import of services from a related person and other establishment located outside India. And principal agent transaction. And when an activity will become supply, suppose if an activity is not covered in 7 subsection 2, then it is not excluded. So and 7.1 should be checked. If such activity is not in 7.1 also, so then such activity is not a supply. Okay, then such activity is not a supply. Then such activity is not a supply. So first we need to check whether it is in 7.2. If it is in 7.2, then it is not a supply. Suppose if it is not in 7.2, then we need to check it is in 7.1. Yes, it is in 7.1, then it will become supply. If it is not in 7.1 as well as in 7.2, then it will not be a supply. Then what are the exclusions from the meaning of supply? That is given in 7 subsection 2 read with schedule 3. So we have total spalled slew. Yes, for sovereign functions of government. What is sovereign functions of government? Means all activities of government other than 4 are excluded from supply. Means these 4 activities are only covered under supply. So these 4 activities are only covered under supply. That is Department of Post, transportation of goods or passengers, airport or port services, services to business entities. And then P for post. Post refers to government post, constitutional post, nominated post. And A is actionable claims other than lottery, betting, gambling. Means only lottery, betting, gambling is covered under supply. All actionable claims are excluded from supply. Actionable claim means any instrument which satisfies the 4 conditions. So actionable claims means that, so first there should be right. So what is that right? Right to receive benefit or recover the debt, and that right should be transferable from one person to another person, and that right should be legally enforceable, and holder of right entitled to the benefit, entitled to benefit. So this is known as actionable claim. Bill of exchange, promissory note, lottery ticket, all these are actionable claims, but only 3 actionable claims are covered under supply. That is lottery, betting and gambling are covered under supply, and all other actionable claims are excluded from supply. And legal fees, which means fee collected by court or tribunal. Court or tribunal fees also excluded from supply. Then SPALL. Another L is land sale. So sale of land being immovable property, there is no GST. Even sale of building also there is no GST. But when sale of building will be excluded from supply? Sale of building will be excluded from supply if the entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Okay. So that is this. What is the first occupation? First occupation means a property when it is occupied, that is known as first occupation. And completion certificate means, completion certificate refers to the scenario where whenever the project is completed, we will get the completion certificate. If the entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier, so then it will be excluded from supply. Then E for employee to employer in the course of employment. So employee to employer in the course of employment is excluded from supply, and remember it should be in the course of employment. D for death related. Death related means funeral, burial, crematorium, mortuary, including transportation of the deceased. All death related activities are excluded from supply. So this is about SPALD. Then slow. Yes refers to sale before import. That is, whenever the goods are in transit, I am transferring the document of title to my buyer and receive some money on which I will not be required to pay GST, because anyhow he will be paying customs duty along with IGST. So due to that reason, whenever we are importing goods, we need to pay customs duty along with IGST. So whenever I transfer the document of title before import, so that person will pay the customs duty along with IGST. That's the reason why I am excluded from supply. And then sale in high seas over. Then liquor license by the state government. So state government will be granting the license to sell liquor, for which they get a consideration, that is also excluded from supply. Then outside the country movement of goods. Outside the country movement of goods means that, so that is starting point is outside India, ending point is also outside India. I am a seller, I have a branch outside India. You are a buyer, you have a branch outside India. From my branch outside India to your branch outside India, goods are moving, that will be excluded from supply. And then warehoused goods sold. Warehoused goods sold means whenever we import the goods, those goods will be kept in a customs warehouse without payment of customs duty. Now we transfer the document of title called as warehouse receipt to any other person. So now that person will clear the goods from the customs warehouse and pay the customs duty. So whatever money that we received will be excluded from supply. So these are the exclusions from the meaning of supply. Okay. Then there is one point here. Employer and employee are actually treated as related parties. So between employer and employee, if there is any transaction, that's a related party transaction. However, if employer is giving any gift to the employee, and if the value of the gift exceeds 50,000 rupees per annum per employee, then it will become supply. What if the value of the gift does not exceed 50,000 per annum per employee? Then it is not a supply. So this is gifts given by employer to employee. Okay. So these gifts are not covered under CTC. This is not covered under salary offer document. So these gifts are not covered under salary offer document. Not covered under salary offer document. Not covered under salary offer document. Then only it will be called as gifts. What if it is covered under salary offer document? Then it is not called as gift. It is called as perquisite. Perquisite will be forming part of salary, and that will be excluded from supply, because employee to employer in the course of employment is excluded from supply due to that reason. So suppose if it exceeds 50,000 rupees, whether entire value of the gift will be supply or only the excess amount will be supply, entire value of the gift will be supply. For example, if the value of the gift is somewhere 40,000 rupees, then it is not a supply. Then it is not a supply. Suppose if the value of the gift is 60,000 rupees, entirely it is supply. Entire amount is supply. Entire amount is supply under section 7(1)(c). Okay, the entire amount will become, not that extra 10,000 rupees. Then summary of 7 subsection 1. 7(1)(a), what is the activity? Any activity. Consideration, yes. Course or furtherance of business, yes. From whose point of view we need to see? Supplier point of view. 7(1)(aa), any activity between a person and its members. Consideration, yes. And course or furtherance of business, yes. And point of view, supplier point of view. Yes refers to supplier point of view, we need to see. Import of service, always we need to see from recipient point of view. So 7(1)(b), import of services, it may or may not be in the course or furtherance of business, it is from recipient point of view. 7(1)(c), read with schedule 1, DRIP, disposal of all these 4 cases, disposal of business asset, related party, import of service from related person and principal agent transaction. All these cases, consideration not essential. And in case of disposal of business asset, they have not given whether it should be in the course or furtherance of business, but other activities should be in the course or furtherance of business. And from whose perspective? Except import of service, everything should be in the course or furtherance of business. Okay, so DRIP, P is also from the supplier point of view. Except import of service, everything is from supplier point of view, and in case of import of service only, it will be from recipient point of view. Principal and agent transaction not specifically given as in the course or furtherance of business, but by default it will be in the course or furtherance of business. Okay, and principal agent transaction only goods are covered. So therefore we don't have services in case of principal agent transaction. So these are the points. 7 subsection 1. Then important definitions related to this. We have goods definition under section 2 clause 52. So goods means goods includes and goods excludes. Goods means what? Any kind of movable property. Goods includes actionable claims also and growing crops or things attached to or forming part of earth. At the time of entering into contract, it is immovable in nature, and at the time of delivery we agree to sever it, cut it and deliver. So therefore it will become movable. So that will also come under goods. And goods excludes. So money and securities. Money and securities are excluded from the meaning of both goods and services. So goods also excludes money and securities, and service also excludes money and securities. So transaction in money and transaction in securities is neither goods nor services. And services means what? Anything other than goods. And even service definition excludes money and securities. But transaction in money for a separate consideration. What is transaction in money for a separate consideration means? So I am exchanging one currency to another currency for which I am collecting some markup fee or currency conversion fee, etc. So that will be for a separate consideration, then it will become supply of services. Same way, transaction in securities is neither goods nor services. But transaction in securities, so I am arranging or facilitating, I am a stockbroker or a depository, so that will become supply of services. Okay, so transaction in money for a separate consideration is included in the meaning of service, and facilitation or arranging transaction in securities also included in the meaning of service. So this facilitating or arranging transaction in securities means, so this is like stockbroker services, stockbroker, depository, that is. Then transaction in money for a separate consideration. What is that meaning? Transaction in money for a separate consideration means, transaction in money for a separate consideration means sale of forex against markup fee, So we will be converting one currency to another currency, for which we will be collecting some currency conversion fee. So that will be taken as a transaction in money for a separate consideration. Then even goods definition as well as service definition excludes money and securities. So money and securities are neither treated as goods nor treated as services. And what is the meaning of money? Money is defined here. Money in the sense Indian currency or foreign currency or any instrument which is recognized by RBI. So Indian currency also will be treated as money, foreign currency also treated as money, any instrument recognized by RBI, but does not include old currency which is not in circulation. So therefore from this, what is that we can conclude? So sale of crypto. So because crypto is not recognized by RBI, so sale of crypto will be treated as sale of goods. Then same way we can also take that sale of old coins is also treated as sale of goods. Okay, that is with respect to this. Actionable claim, already we saw the definition. Right to receive a benefit, recover a debt which is transferable and legally enforceable, and the holder of such right is entitled to receive the benefit or recover the debt. Then the next definition, so section 2 clause, there are few definitions which you need to remember along with the clause. Section 2 clause 52 goods definition, and section 2 clause 102 service definition, and section 2 clause 31 consideration, and section 2 clause 17 is business definition. So these are the 4 definitions which is very important. Along with the clause you try to remember, and the remaining definitions you can write just section 2. So meaning of consideration as per section 2 clause 31, consideration includes monetary or non-monetary. So consideration is anything in return, that can be monetary consideration or non-monetary consideration. Monetary means payment received or receivable, non-monetary means it can be in the form of goods or services. And consideration definition excludes subsidy from central government or state government. Subsidy from CGST will never be treated as consideration. whereas subsidy from any other person will be treated as consideration, and consideration excludes refundable security deposit. If I am collecting a security deposit which is refundable in nature, that will not be treated as consideration. What if it is non-refundable security deposit? Then it will be treated as consideration. So consideration can be received from recipient or any other person. There is no condition that from recipient only we need to receive the consideration from any other person. What we need to see is presence of consideration, and consideration should be 3 in respect of, in response to, for the inducement of supply of goods or services. So for the purpose of supply of goods or services, in respect of that, if I receive some money, that will be treated as consideration. In response to that, if I receive some money, that is also treated as consideration. And you are inducing me, you are paying me some amount, making me to supply goods or services. So that amount you have induced to make supply, so that is also treated as consideration. So in respect of, in response to, or for the inducement of supply of goods or services. Whether donations are treated as consideration? No, donations are not treated as consideration, because against a donation we will not make any supply of goods or services. Suppose if it is a conditional donation, means against a donation we will make supply of goods or service, we have an obligation to make supply of goods or service, therefore it will become consideration and it will become supply under 7(1)(a). Whereas if it is an unconditional donation means I receive the donation but I don't have any obligation to do anything, then the donation is not treated as consideration, and accordingly so it will not become supply, okay, because consideration means any amount received in response to supply of goods or services. Suppose if money is received but there is no supply of goods or service, that is not treated as consideration. So that is his donation point. However, suppose if a person gives the money and he insists that his name should be displayed, whatever name that is displayed, it will be treated as conditional donation, it will become supply under 7(1)(a). If a person has given money and he did not ask us to display the name, but as a gratitude we displayed the name, so this display of name will become conditional donation if that display of name gives a business advantage to that person, the donor who is giving the donation, he gets a business advantage because of the display of name. So if business name is displayed, it will become supply under 7(1)(a). If business name, display of name does not result into business advantage, it will not be a supply. Then meaning of person. So person is defined under GST. So who is a person? Person under Income Tax Act plus central government or state government is known as person under GST. So which means whatever person under Income Tax Act, individual, HUF, company, firm, AOP, local authority, artificial juridical person, any other body corporate. This is the meaning of person under Income Tax Act. So to this meaning of person under Income Tax Act, you add central government and state government, you will get person under GST. And then meaning of business. So that is given in section 2 clause 17. So we have general meaning and specific activities. What is the general meaning of the business? So there are some 7 activities which will be treated as business, okay. So what is the general meaning of business? What is the general meaning of business? So we have trade. Trade refers to sale of goods. Then number 2, commerce, that is service sector. So insurance, banking, transportation, warehousing, service sector. And 3, manufacture, okay. So these 3, conversion of raw material into finished goods. And then profession. Profession is a skill which is obtained by way of qualification. And number 5, so vocation. Vocation is a skill that comes out of experience. And next, adventure, that is when we do some skill and get money, but that is as a passion, out of a passion, but not as a profession. So then number 7, wager. So wager refers to betting transactions or any other similar activity. So this is a general meaning, and its incidental or ancillary is also covered. This is the main activity, its incidental means supporting activity, supporting functions is also covered under supply. So business, incidental or ancillary to clause A, and whether there is continuity, regularity or not, even we may do 1 transaction or we may do 100 transactions, so that will become business, okay. This is the general meaning of business. Then we have specific activities. These are considered as specific activities. So number 1, supply or acquisition of goods including capital goods in connection with commencement or closure of business. At the time of commencement or closure of business, if we make any supply of goods or services, so that will be treated as business, even though that is not our activity. For example, at the time of closure of business, we will sell off the assets. Even though that sale of assets is not our business, but it will be coming under business. Then provision by a club. So club, that is maintenance charges collected by Resident Welfare Association. So any club or association or a society, they are collecting money from its members for the provision of facilities, that will also become business, specific activity. So these specific activities, even though not covered under general meaning or covered under general meaning, it will always be treated as business. That is this point. Okay. Then next, admission for a consideration of persons to any premises. So all entry tickets are covered under this activity. Then services supplied by a person who is holding an office. So there is a person who is holding an office which is accepted by him in the course or furtherance of his business, vocation or trade. So for example, a chartered accountant is a profession and he becomes central council member of ICI. So because of that he gets some money. So that will come under business. And then activities of a race club including by way of totalizer. That is, all activities of a race club will come including betting transaction. Totalizer means betting transaction. So then any activity of government. So government activities is also covered under business. However, only 4 are covered under supply. That is Department of Post, transportation of goods or passengers, airport or port services, and services to business entities. These 4 are only covered under supply. All other activities are excluded from supply. But all activities of government will come under business. Then meaning of related. So who will be considered as related? So total we have 9 points in the related definition. So such persons or officers or directors in one another's business. So for example, there is Mr. A and Mr. B. So Mr. A's business, Mr. A's business and Mr. B's business. Okay. In Mr. A's business, Mr. B is appointed. Mr. A and Mr. B are the owners. So Mr. A is appointed as officer in Mr. B's business and Mr. B is appointed as officer in Mr. A's business. Now this A and B will be treated as related. So then second point, such persons are legally recognized partners in business. That is, partners of a firm will be treated as related, and only partners of a firm are treated as related, but the firm and partners are not treated as related. Such persons are employer and employee. Employer and employee are treated as related. So any transaction between them becomes supply. But however, we have the gifts point. Gifts not exceeding 50,000 per annum per employee is not a supply. Then point number 4. So that is, any person directly or indirectly owns, holds or controls 25% or more of the outstanding voting stock or shares of both of them. That is, there are 2 companies having a common shareholder. That common shareholder is holding 25% or more in these 2 companies, makes those 2 companies related. So that's what I have given. There are 2 companies, X Limited and Y Limited. So Mr. A is there. Mr. A is holding 25% in X Limited and Mr. A is holding 25% in Y Limited. So now this X Limited and Y Limited will be treated as related. Then one of them directly or indirectly controls the other. There are 2 companies. One company directly or indirectly controls the other. Control means investment greater than 50% or majority common board of directors are controlling the operations. So then there exists a control, then they both are treated as related. Both of them are indirectly or directly controlled by a third person. So 2 people having the common person controlling. For example, A Limited is there. A Limited controls X Limited. A Limited controls X Limited. A Limited controls X Limited and A Limited controls Y Limited. So now even though X Limited is not controlling Y Limited, but X Limited and Y Limited are treated as related. What about A Limited and X Limited, A Limited and Y Limited? Anyhow they are related. So but X Limited and Y Limited, even though there is no control, they are treated as related. That is the 6th point. Together they directly or indirectly control a third person. For example, there are 2 major shareholders of a company. So Mr. A and Mr. B are 2 major shareholders of X Limited. A has invested 35%, so there is no control. B has invested 20%, there is no control. Together if you see, A and B has invested 55%, 35 and 20. So therefore this A and B will be treated as related. That is this point. Together they control a third person. Then they are members of the same family. Who are considered as family here? So family means, so spouse and children, whether or not dependent. For a person, spouse and children, whether or not dependent, their parents, grandparents, brothers and sisters, if they are wholly and mainly dependent on that person, then only they will be treated as related. Then sole agent or sole distributor. So these are the 9 points that you need to remember. Then meaning of various supplies. We have taxable supply, exempted supply, non-taxable supply, zero rated supply. So taxable supply means what? So taxable supply is actually a balancing figure. Zero rated supply means export of goods or services, and non-taxable supply means and even supply to SEZ. These 2 are zero rated supplies, that is export of goods or service, supply to SEZ. Whereas non-taxable supply, already we know, alcoholic liquor for human consumption and petroleum products. So alcoholic liquor for human consumption and petroleum products not covered under the ambit of GST. So therefore it is excluded from the ambit of GST, and petroleum products is excluded temporarily. So as and when GST council decide, it will come into the ambit of GST, but alcoholic liquor for human consumption will never come. And what are the petroleum products which are not treated as not covered under the ambit of GST or not covered under the levy? 5 petroleum products: crude oil, petrol, diesel, aviation turbine fuel and natural gas. These are the 5 non-taxable supplies, 5 petroleum products which are treated as non-taxable supplies. So what are the goods not liable to GST? Alcoholic liquor for human consumption, petroleum products, crude oil, petrol, diesel, ATF, aviation turbine fuel and natural gas. But kerosene, LPG, all these are covered under GST because they are not petroleum products in the list. So then what are exempted supplies? 3 points are treated as exempted supplies. Notified as exempted, government from time to time will notify, that will be treated as exempted. Even nil rated is also treated as exempted, and non-taxable is also treated as exempted. So exempted has 3 points, that is notified as exempted, nil rated and non-taxable. Then what is taxable? So balancing figure, if a supply is not covered under exempted or non-taxable or 0 rated, that will become taxable. Then so what is the meaning of aggregate turnover? The aggregate turnover includes all these 4 supplies. Taxable supplies will come, exempted supplies also will come. Then exempted includes non-taxable supplies, 0 rated, that is exports will come, and supply to SEZ will be treated as interstate supplies. So remember, all 4 are treated as aggregate turnover, but aggregate turnover is computed on all India basis. So it is never computed state-wise. Aggregate turnover on all India basis, and it excludes inward supply on which GST payable under RCM, because turnover is generally outward supply. So inward supply on which I need to pay GST under RCM. RCM means reverse charge mechanism, where liability to pay GST is on the recipient. So then that will not come into aggregate turnover. Even aggregate turnover definition excludes CGST, SGST, UTGST and IGST. So that is with respect to this. Then sale of flats or buildings. So when sale of flat will be covered under supply? If entire consideration is received after completion certificate, so then it will be excluded from supply. It will not be covered under supply. Otherwise it will be covered under supply. When? Suppose if entire consideration is received before completion certificate, or part consideration received before and part consideration received after, then it will be covered under supply. So now when part consideration is received before and part is received after, whether entire amount is covered under supply? Yes. And it will be treated as works contract service. If entire consideration is received after completion certificate, it will be treated as sale of immovable property. So first occupation means the date on which a flat is occupied by the buyer in the project, it is deemed as completion, and remaining flats unbooked, so comes out of supply. Okay. Then works contract. Works contract means what? Works contract, because if part consideration received before and part after, or if entire consideration received before, so in case of sale of flat, that will be treated as a works contract service. So works contract means what? Works contract means a contract involving supply of both goods and services for a single consideration, but that should be in relation to an immovable property. That should be in relation to an immovable property for a single consideration. Then it will be called as works contract service. Okay. And works contract will always be treated as services. In old indirect tax we had a dispute, but now it is always treated as service. And meaning of job work. Job work is also treated as supply of service. Job work means carrying out process on the goods belonging to other person. So some other person is giving me the material, on that I do the process. So but I am not, the major material is supplied by the recipient. I may buy some little material. For example, I am a tailor, I get the cloth. So major material given by the recipient, I just buy the buttons, thread, etc. So this will be called as job work service. So I will get the job charges, that will be treated as job work. Okay. So carrying out process on the goods belonging to the another person is known as job work. Suppose if that another person is registered person, then only it is called as job work. What if that another person is not registered person? Then it will be treated as some other services. Then meaning of distinct persons. So because we have related party transaction, including transaction between distinct person covered under supply 71C, who are treated as distinct person. So I have multiple establishments. One registration to another registration is known as a distinct person. So I need to get separate registrations in different states. So when I am doing business in different states, so when a person is required to obtain more than one registration, suppose if the place of business is in more than one state, he should get registered in each state from where he makes taxable supplies. Suppose if the place of business is in more than one place within the state, either he can go for separate registration or he can obtain a single registration. Suppose if he go for a separate registration, one registration to another registration is known as distinct person. In multiple states, if he obtains separate registration, one registration to another registration is known as distinct person. but within the state it is not mandatory to have a separate registration for each place of business. They can continue with the single registration. Only when they go for separate registration, then distinct persons will come. So what is the consequence of the distinct person? So if there is any transaction between the distinct person, for example, I have a head office in Tamil Nadu and branch office in Karnataka, any transaction between the stock transfers and all will become supply under 7(1)(c), because even though without consideration, transaction between distinct persons is treated as supply under 7(1)(c). That's why. Then GST on actionable claims already we have seen. So finally what you need to remember is that, so only lottery, betting, gambling is covered under supply and all other actionable claims will not come under supply. That much if you remember sufficient. Then so after completion of the activity, when an activity will become supply, so 7(1) inclusions and 7(2) exclusions. Now we need to see classification of the supply into goods or services. Suppose if it is a movable property, when it will come under supply of goods. If there is a transfer of title, it will become supply of goods. If there is a transfer of right to use, it will become supply of services. Transfer of title means sale. For example, I have a car. That car I am selling. So transfer of title. So then it will be supply of goods. The title may not be transferred at present. The title may be transferred at future date also. It will be treated as supply of goods only. So future title transfer means hire purchase. Today I am giving you the possession, but the title will be transferred to you upon payment of last installment. So therefore that is also treated as supply of goods only. Even though I am giving possession today, but I am agreeing to transfer the title at a future date. So it is treated as supply of goods. As suppose I have a car and I am giving that car on rent to you. So means I am not giving you the title, but I am giving you the right to use. That will become supply of services. And immobile property will never come under supply of goods, but it will come under supply of service if it is a construction that is bringing into existence an immobile property or transfer of right to use immobile property. Then IPR, intellectual property rights. Intellectual property like a copyright, trademark, patents, etc. If there is a temporary transfer, so not permanent transfer, temporary transfer, I am giving you use. So then it will be coming under supply of service. If there is a permanent transfer, it will be treated as supply of goods. Then there are some transactions that involves both supply of goods and supply of services. So that is in a single transaction, there will be both goods and services. How to classify that? Suppose if it is a notified transaction, what are the notified transaction? Works contract, information technology, software and supply of food. In all these three, there is partly goods element and partly service element. So works contract is what? Construction. So immobile property related. So goods element is cement, bricks, etc. and service is construction. Information technology, software. So will not be directly given, it will be put in one pen drive or hard disk, etc. So goods element and service element is there. Supply of food. Food involves both goods and services, but these three will always be treated as supply of services. So notified supplies, even though involves both goods and services, will always be treated as supply of service. Whereas other supplies involving both goods and services, we need to classify as goods and services based on composite supply and mixed supply. What is the rate that we take in case of composite supply? In case of composite supply, we will take the rate of principal supply. We will take rate of principal supply, correct? Rate of principal supply. So if the principal supply is goods, then entire transaction is treated as goods. If the principal supply is services, entire transaction is services. In case of mixed supply, what we will do? In case of mixed supply, we will take highest rate. In case of mixed supply, we will take highest rate. Suppose if the highest rate is goods, entire transaction is goods. If the highest rate is service, entire transaction is service. Like that, the composite supply and mixed supply should be classified. Then any other activity will not come under goods, it will come under service. That is doing an act, not doing an act, or tolerating an act. So that will come under supply of services. Okay. So this is with respect to supply, meaning of supply, section 7. Now we have composite supply versus mixed supply, that is given in section 8. So we need to understand what is the difference between composite supply, mixed supply. First, composite supply means two or more supplies. So naturally bundled in the ordinary course of business. So then it will be called as composite supply. But in mixed supply, it is not naturally bundled in the ordinary course of business of supplier. And how the composite supply should be? All the supplies involved in composite supply should be taxable. But in mixed supply, any combination, taxable, exempted, non-taxable, in that combination. How the price should be in case of composite supply? In case of composite supply, there should be either single price or separate price, but in case of mixed supply, there should be only single price. And principal supply, yes, principal supply should be there in composite supply, but in mixed supply, principal supply is not relevant. And rate of GST in case of composite supply, the rate of principal supply is applied on the entire transaction, but in case of mixed supply, we will take the highest rate and apply it on the entire transaction. AC and installation is naturally bundled. Naturally bundled means one cannot be supplied without the other, that is known as naturally bundled. In case of naturally bundled, so one cannot be supplied without the other, so it will become composite supply. So AC and installation naturally bundled. Transportation and insurance, if transportation is not there, insurance will not come, so therefore it is naturally bundled. And repairs during servicing, that is in case of servicing, they will replace the parts. Servicing of motor vehicles, they replace the parts, and they also charge the labor charges for replacement, naturally bundled. So then inverter and battery is not naturally bundled. Why? Because inverter alone can be sold separately. From seller point of view, inverter alone can be sold separately, battery can be sold separately. So it is not naturally bundled when it is sold together. Then renting of building and renting of furniture. Building can be separately given on rent, furniture can be separately given on rent. When you give it together, it is not meaning that it is naturally bundled. Then popcorn and coke. Popcorn can be sold separately, coke can be sold separately in a theater. If it is sold as a combo, it does not mean that it is naturally bundled. Now, if there are two or more supplies which is neither composite supply nor mixed supply, then what it will be? It will be individual supplies taxable accordingly. So first we need to check whether it is composite supply or not. For the three conditions we need to apply: whether all the supplies are taxable, naturally bundled in the ordinary course of business, and principal supply identifiable. If these three conditions are satisfied, it will become composite supply and we will take the rate of principal supply on the entire transaction. If any one condition is not satisfied, then we will check mixed supply or not. So that is mixed supply, only one condition, that is single price. Yes, it is not a composite supply, but there is only single price and it will become mixed supply. But the price is not single, separate is there. Then it is neither composite supply nor mixed supply, then it will be individual supplies taxable at the respective rates. Okay, so that is in case of composite supply and mixed supply. The next area is liability to pay GST. So there are total 4 sections, that is 5 subsections in this liability to pay tax. Section 9. Section 7 is supply, section 8 is composite supply, mixed supply, and section 9 is liability to pay GST. So in this section 9, subsection 1 says that on alcoholic liquor for human consumption there is no GST, and 9 subsection 2 says that petroleum products there is no GST, temporarily it is excluded from the ambit of GST. So when alcohol there is no GST, but existing indirect taxes continue to be levied on alcoholic liquor, even on petroleum products existing indirect taxes continue to be levied. Okay, and 9.3, 9.4 and 9.5 says that generally as per 9.1 and 9.2, liability to pay GST to government is on the supplier, that is known as forward charge mechanism. So in forward charge mechanism, what will happen is that there is a supplier, there is a recipient. Okay, supplier is making supply of goods or services for which the supplier will be charging from the recipient. The supplier will be charging from the recipient price and GST. Okay, so supplier will be charging price plus GST, and to government who will pay GST? So to government, supplier will pay GST. To government, supplier will pay GST. So this is known as forward charge mechanism. Okay, then reverse charge mechanism, but ultimately the burden is on whom? In forward charge mechanism is on recipient only, but who will pay to government, that is important. Then in case of reverse charge mechanism, what will happen? There is a supplier and there is a recipient. Okay, so supplier will be making supply of goods or services to the recipient, and for which recipient will pay only the price, he will not pay GST, because to government who will pay GST? Recipient will pay GST. So that is known as reverse charge mechanism. So ultimately the burden is on recipient. So therefore 9.3 and 9.4 talks about reverse charge mechanism, where liability to pay GST is on recipient, whereas 9 subsection 5 says that there are some notified transactions on which liability to pay GST is neither on supplier nor on recipient, but on the intermediary, that is e-commerce operator. Okay, now 9.3 notified goods and services, but notified goods we don't have in syllabus, only notified services. What is that list of notified services? Sir, CG got salads, that list is there which we will be learning. So that list of notified services. Then who will be liable to pay GST? Recipient. And how the supplier should be? Supplier may or may not be registered. Okay, supplier may be registered or supplier may not be registered, but the recipient has to compulsorily get registered. Whereas 9 subsection 4, 9 subsection 4 is applicable for inward supplies of a promoter or builder from an unregistered person. There is a promoter or builder in a real estate sector. He is making purchase from an unregistered person. Then in that case 9 subsection 4 will be applicable. So purchase by a promoter or builder from an unregistered person. Here supplier should be unregistered. Liability to pay GST is on recipient. Then there are total 4 notified services supplied through e-commerce operator. The amendment here is that, so E is added. So what are those notified services? 4 notified services. You remember with the keyword HATE, H-A-T-E. H for housekeeping service, that is Quicker or Urban Clap, etc. Then accommodation service, Goibibo, Oyo, etc. Accommodation services through e-commerce operator. And transportation of passengers. Previously, it was restricted. Transportation of passengers by radio, taxi, motor cab, maxi cab, motorcycle. But now, transportation of passengers by any motor vehicle is covered under 9.5, where liability to pay GST is on e-commerce operator. So Ola, Uber, Redbus, everything is covered now. But only passenger transportation, not goods transportation. Then eating food from a restaurant, that is Swiggy, Zomato, are covered into this list. So these are the 4 notified services through an e-commerce operator, where liability to pay GST is on the e-commerce operator but not on the supplier. And in that case, when it will come under 9.5, in case of housekeeping service and accommodation service, the supplier should be unregistered. Whereas in case of other 2 services, that is transportation services and eating food from a restaurant, whether the supplier is registered or unregistered, it will come under notified service 9.5. So for example, if it is a housekeeping service and the supplier is registered, will it come under 9.5? No, it will not come under 9.5. Then the liability to pay GST is not on e-commerce operator, on the supplier if they are registered. Same way, accommodation service, if the supplier is registered, they only will pay GST. So only when the housekeeping service, accommodation service supplier is unregistered, then it will come under 9.5. And in case of transportation and eating food from restaurant, the supplier be registered, unregistered, it will come under 9.5. Then, so as per 9.3, what are the notified services on which liability to pay GST is on recipient? So that you need to remember with a keyword, Sir CG got salads. Okay. So what is that? Security lending scheme. Security lending scheme of SEBI. So in security lending scheme of SEBI, you need to understand who is the supplier. So supplier is the lender of the security. Who is the borrower? Recipient, that is who is the recipient? The borrower of the securities is the recipient. And lender of the security will not pay GST on the lending fee, but the borrower of the securities will pay GST. That is the security lending as per SEBI. Then import of services. Import of service is covered under RCM. Okay, then the detailed points related to this is in exemptions, but what you need to remember is what is the list of services which are covered under RCM. Sir CG got salad, S for security lending, and I for import of service, R for renting of motor vehicles. Any conditions? Yes, there are conditions for RCM. So that conditions you need to remember. So in case of renting of motor vehicles, there are conditions. There are conditions in case of renting of motor vehicles. What are those conditions? Supplier should be other than body corporate, and recipient should be body corporate, and the rate of GST should be 5%. Then it will be coming under RCM. Then copyright services. Copyright services. So 4 copyrights are covered here. Original literary. Original literary means so books. Dramatic, that is screenplay writings. Then musical, composing music. Artistic works, sculptures, creating designs, drawings, etc. So these 4 cases, liability to pay GST is on recipient. And here there is one special point, that is in case of original literary, that is author is required to pay GST or the publisher is required to pay GST. Publisher is required to pay GST. I am an author, I am giving original literary to a publisher to publish the books. So in that case I will not pay GST, my publisher will pay GST. However, I have an option to pay GST under FCM. So if I opt for that option to pay GST under FCM for the next 1 year, I should only pay GST under FCM. Okay. In case of literary works, the supplier has option to pay GST under FCM, and if it is opted for next 1 year, the option cannot be withdrawn. So which means supplier only will pay. Sir, what about recipient? So recipient, RCM to FCM, there is no restriction anytime, but FCM to RCM, so 1 year lock-in. For the next 1 year, supplier only should pay GST. Then GTA services. GTA services, so is covered under RCM, but GTA is having an option to pay GST under FCM or RCM, but there is no lock-in, which means with respect to each invoice, either they can pay GST or they can authorize the recipient to pay GST, and there are no conditions here. Then government or local authority services to business entities. Government services to business entities, will also come under RCM. Then overseeing committee services to RBI. Overseeing committee will be appointed by RBI to restructure the NPAs, non-performing asset. They get a commission on that. They will not pay GST, but RBI will pay GST. Then transfer of right to use land, that is TDR, FSI and long-term lease. Transferable development right, floor space index and long-term lease of land. So then in that case, liability to pay GST is on promoter or builder. I am a landowner, I am giving the TDR, FSI, or I am entering into long-term lease. Long-term lease means what? For a period of 30 years or more. And I get a consideration on that, I will not pay GST, my promoter or builder will pay GST under RCM. Then yes, for sponsorship services. In case of sponsorship service also there are conditions. What is that? So in case of sponsorship services, so it will come under RCM only if the recipient is body corporate or firm. Then only it will be coming under RCM, otherwise it will not come. Then A for agent services. So what are the agent services? Total 5 agents. Insurance agent to insurance company. So insurance agent providing service to insurance company, on that insurance company will pay GST. Then recovery agent to bank or financial institution. So bank will pay. Direct selling agent to bank or financial institution. So bank will pay. But in case of direct selling agent, there is a condition. What is that? The supplier should be other than body corporate or firm, then only it will come under RCM. If the supplier is body corporate or firm, direct selling agents will do the marketing. If the direct selling agent is body corporate or firm, then it will be coming under FCM only. Only if the direct selling agent is other than body corporate or firm, it will come under RCM. Then business facilitator to banking company. Business facilitators will do remittance activities to the banking company, on which liability to pay GST is on banking company. Then agent of business correspondent to business correspondent, not business correspondent to banking company. So business correspondent will be appointed by banking company for the purpose of doing the functions of a bank. So now this business correspondent will appoint an agent. That agent will be providing service to the business correspondent, that is covered under RCM. These are the 5 agents covered under RCM. Then next, legal services. Legal services by individual advocate or firm of advocate to business entity covered under RCM. Same way arbitrator services provided to business entity covered under RCM. So yes for Sir CG got salad. Yes, security lending. I for import of service. R for renting of motor vehicles. Then C copyright service. G GTA service. Then GOT government services to business entity, overseeing committee services to RBI, and transfer of TDR, FSI and long term lease. And then salads. S for sponsorship services. A for agent services. L legal services provided by individual advocate or firm of advocates to business entity. A for arbitrator services to business entity. D for director services. So a director providing services to the company, on which the director will get remuneration, that is not salary, and on that liability to pay GST is on the company under RCM. Then yes, in case of security agency services. Security agency service also we have conditions. So in case of security agency services, what is that? Security agency services means like manpower supply. Security agency services also we have conditions, that is supplier should be other than body corporate, and recipient should be registered but not opting for composition scheme, or not registered only to deduct TDS, then only it will come under RCM. So 4 cases we have conditions. What are the 4 cases we have conditions? Number 1, renting of motor vehicle. Supplier should be other than body corporate, recipient should be body corporate, rate of GST 5%. And number 2, that is in case of sponsorship services, so recipient should be body corporate or firm, then only RCM. Then direct selling agent. In case of direct selling agent, supplier should be other than body corporate or firm. And in case of security agency, supplier should be other than body corporate, recipient should be registered but not opting for composition scheme, or not registered to deduct TDS. So these are the cases where liability to pay GST is on recipient under 9.3. Now we are moving on to 9.4. So there is a person who is promoter or builder, and he is making purchases from an unregistered person. Now what he purchased? He purchased capital goods. Now check whether capital goods are purchased from registered or unregistered. Purchased from unregistered, then he need to pay GST under RCM at the rate applicable to capital goods. Whatever is the rate applicable to capital goods, at that rate he need to pay GST under RCM. Why? Because he purchased from unregistered person. Suppose if purchases from an unregistered person is inputs and input services. That inputs and input services we need to exclude few things. So electricity, anyhow there is no GST. Electricity, diesel, petrol, natural gas, then TDR, FSA, long term lease already covered under 9.3. So these 5 should be excluded. Electricity, diesel, petrol, then natural gas and TDR, FSI, long term lease take out. So remaining inputs and input services should be these 5, even purchased from unregistered person, no issue. But remaining should be purchased from registered person. How much? 80%. 80% of the total inward supply should be purchased from unregistered person. If it is purchased less than 80% from an unregistered person, then we need to pay GST under RCM. Okay. So for example, if you take the total inputs and input services, total inputs and input services, total inputs and input services, purchased from registered person, purchased from unregistered person, purchased from registered person 200 lakhs, purchased from unregistered person 80 lakhs. So now we need to see what is the total. So the total is 280 lakhs. So now in this case, how much is purchased from unregistered person? 80 divided by 280, 80 divided by 280 into 100. So 80 divided by 280 into 100, that will be 28.57%, 28.57%. How much is allowed? Only 20% is allowed. What is the excess? Excess is 8.57%. Therefore, GST under RCM, GST under RCM section 9 subsection 4 will be, what is the extra? Extra is, so 280 lakhs into 8.57%, 8.57% will be 24 lakhs. So on the 24 lakhs, we need to pay GST under RCM at what percentage? Flat 18% we need to pay GST under RCM. So therefore 24 lakhs into 18%, so that will be 4,32,000 we need to pay GST under RCM. So first what we need to do, this is inputs and input service. Capital goods, we don't have this 80% point. First we need to take inputs and input services. Registered person 200 lakhs, unregistered person how much? Total. And what is unregistered person to total? So more than 20. On that excess amount we need to pay GST under RCM at 18%. What if it is cement? If it is cement, on cement always we need to pay GST under RCM. Okay. For example, another situation if you see, so purchased from registered person and purchased from unregistered person. One second. So purchased from so we're discussing 9 subsection 4. Yes. So purchased from registered person, unregistered person. So here we need to see cement and other inputs and input services, others. So cement from registered person 20, unregistered person 40 and others 280. So now what we need to do? First we need to see the total. What is the total? So 20 plus 40, 60, 280 plus 60, that will come to 340. Now, so on cement we need to always pay GST under RCM because we purchased it from unregistered person. So GST under RCM, with respect to section 9(4). Okay. First we need to take cement. What is the GST that we need to pay on cement? So cement will be purchased from unregistered person 40. So 40 lakhs into 28%. On cement alone we need to take 28%. So 40 into 28%. So that will be 11,20,000. 11,20,000. Then others we need to see what is the percentage from unregistered person. 80 upon 340. So total we need to take 80 upon 340 into 100. So 80 upon 340, so into 100, so will come to 23.529%, 23.529%. Okay, but it is more than 20%. So on excess we need to pay GST under RCM. So therefore what is that excess? 340 into excess how much? 3.529%. Okay, on that what is the rate at which we pay GST? 18%. So that is 340 into 3.529%. percent. So that will be 11.99, that is 12 lakhs will be taken. So 12 lakhs into 18%, 12 lakhs into 18%, 2 lakh 16,000. So therefore total GST that we need to pay under RCM will be 11 lakh 20 and 2 lakh 16,000. So that's how we need to do this. Okay. Suppose if it is more than 80% also on cement, we need to pay GST on RCM. That's why I told you first we need to take cement, unregistered person pay GST at 28% on remaining, then you see. So 20%, less than 20% means leave it, more than 20% means on the difference alone you need to pay GST under RCM at 18%. This is in case of section 9 subsection 4. Then next we have section 9 subsection 5. Liability to pay GST on e-commerce operator with respect to 5 cases. So HATE already we discussed that, and here some important points. When e-commerce operator is liable to pay GST, then they are not required to deduct TCS. Actually TCS is applicable to e-commerce operator, but that TCS is not applicable in case of 9.5 where liability to pay GST is on e-commerce operator. Then in case of notified services, what are those notified services? HATE, liability to pay GST is on e-commerce operator only. Okay. Yes. So therefore when e-commerce operator is liable to pay GST, that is notified services liability to pay GST is on e-commerce operator, and that e-commerce operator only will pay, but in case of other services supplier shall pay GST. Okay. Then every e-commerce operator who is liable to pay GST or who is liable to deduct TCS is compulsorily required to get registered. So e-commerce operators are compulsorily required to get registered. Then next one is that also every supplier of goods through e-commerce operator. So I am making supply of goods through e-commerce operator, I am also compulsorily required to get registered. And what about supplier of notified services? Supplier of notified services through e-commerce operator is required to get registered if they are supplying only through e-commerce operator. Okay. So this is like, you can just remember in these two cases, supply of notified services through e-commerce operator or other than notified services through e-commerce operator is required to get registered only when their aggregate turnover exceed threshold limit. That point you remember. Okay. So they are required to register. So there are three things: supply of goods through e-commerce operator, 3 compulsory registrations. Okay. So registration about 3 persons we need to understand. First, e-commerce operator is compulsorily required to get registered. Then supplier of goods through e-commerce operator compulsorily required to get registered. Supplier of services through e-commerce operator, notified or other, is required to register only when aggregate turnover exceeds threshold limit. Okay. Then exception to section 9 subsection 3. In case of 9 subsection 3, liability to pay GST is on recipient, correct? But there is one exception to that. That is in case of transportation of goods by vessel from where to where, outside India to India, when both supplier and recipient are located outside India. Supplier is transporter, recipient is the one who is receiving that service of transporter, both are outside India, but the transportation is from outside India to India. Liability to pay GST is on importer of such goods. So the importer of such goods is liable to pay GST in this case. So this is exception to 9.3, that importer of goods is neither supplier nor recipient in the transaction, but he will pay GST. Then the next area that we have is value of supply. One second here. Then next section 9 subsection over. So we are moving on to the next chapter, that's it, 15, value of supply. So value of supply as per section 15, what should be taken? So section 15, only one section that is applicable here. Value of supply equals to transaction value. What is transaction value? Transaction value means price involved in the transaction, that is known as transaction value. So price involved in the transaction means price actually paid or payable for the supply of goods or services. However, value of supply equals to transaction value if two conditions are satisfied. What are the two conditions? Number one, price must be the sole consideration, and number two, supplier and recipient are not related. If these two conditions are satisfied, then only we will be taking transaction value. And if any of these two conditions or both the conditions not satisfied, then the value shall be determined as per GST rules, that is not applicable for our exam. So this is what section 15 that we need to remember. Okay, value of supply equals to transaction value. Transaction value means price actually paid or payable for supply of goods or services. However, if two conditions are satisfied, then only transaction value will be taken, that is price must be the sole consideration, supplier and recipient are not related. If any one condition or both the conditions not satisfied, then the value will be determined as per rules. Now in this case you can see there is a supplier. The supplier is making supply of goods or services to the recipient, for which recipient will make the payment. This payment will be taken as a transaction value. For this transaction value, we have some inclusions. As per section 15 subsection 2, we have inclusions in the transaction value. What are they? You remember TRSIS. So as per section 15 subsection 2 clause A, taxes, duties and cess by whatever name called other than GST should be included. So taxes other than GST should be included in the value. That is section 15 subsection 2 clause A. Section 15 subsection 2 clause B is recipient incurring expenses on behalf of supplier. Any amount that the supplier is liable to pay, but recipient is incurring expenses on behalf of supplier, that should be included in the value. Then 15(2)(c), supplier incurring the expenses and charging it to the recipient before supply, that should be included in the value. The supplier incurs the expenditure and recovers from the recipient in the course of supply, that should be taken. Then 15(2)(d), that is interest, late fee or penalty for delay in receipt of consideration, that should also be included in the value. 15(2)(e), subsidy from whom? Subsidy directly into the price other than CG or SG. Subsidy should be directly into the price and it should be received from other than CG or SG. So then it will be treated as inclusion in the value. So T for taxes, duties and cess other than GST, R for recipient incurring expenditure on behalf of supplier, S is supplier incurring expenditure and charged it to recipient, I is interest, late fee, penalty for delay in receipt of consideration, and S is subsidy directly into the price other than from CG or SG. So these are the 5 inclusions that we need to take. 15(2)(a), B, C, D, E. Now suppose if recipient is incurring the expenditure on his own account, will that be included in the value? No. Same way, supplier is incurring the expenditure not in the course of supply but as a pure agent of the recipient, that is on behalf of recipient, that will also not come into the value. Then subsidy divided into 2, subsidy from CG or SG, that will be excluded from the value. Suppose if the subsidy from any other person, so then we need to check, is it directly linked to the price? Yes. So suppose if it is subsidy from CG or SG, ignore it. Subsidy from CG or SG, it should be excluded from value, means simply you need to ignore this. Don't consider it into the value. Suppose if the subsidy is from others, so then check whether it is directly into the price. Yes, directly into the price, then it should be included in the value. If it is not directly into the price, that will not be included the value, so that needs to be ignored. Okay, so therefore here what we need to do is that, so whenever we take this subsidy directly linked to the price or not directly linked to the price is what we need to check. What is the meaning of directly linked to the price? Directly linked to the price means subsidy with respect to outward supply. Subsidy connected to outward supply. Subsidy connected to outward supply. So then only it will be called as directly linked to price. Okay. Then what if it is not directly linked to the price? It's a general subsidy. That general subsidy is treated as donations. The general subsidy is treated as donations. So we don't have to do anything with respect to that. So this subsidy, general subsidy, whatever is there, so it should be simply ignored into the value. First of all, it is not connected to the value, it needs to be ignored. Then, so what we need to do, if it is directly into the price, if it is from CG or SG, it is to be excluded. In the given price, if it is included, you ignore. Okay, for example, you see this. First, so the given price is 40,000, and from this 40,000 we excluded the subsidy. That subsidy is 10,000. So therefore, how much is the price charged to the recipient? 30,000. So now we need a breakup of this 10,000. So the 10,000 subsidy from subsidy from CG is 6,000 and subsidy from others is 4,000. Like this we have a question. So then what we need to do is that first we need to check the given price is without considering subsidy or after considering the subsidy. The given price is after considering subsidy. After considering subsidy means what? Subsidy is reduced from the given price. Subsidy is reduced from the given price. That is the meaning of subsidy. That is the given price is after considering the subsidy. Subsidy is reduced from the given price. So then what we need to do? First we need to take the price. What is that price? 30,000 you take after considering subsidy. Then subsidy from central government to be included or to be excluded? To be excluded. In the given price it is already excluded. So therefore we will ignore subsidy from CG. Then subsidy from others to be included or to be excluded? That is to be included. In the given price it is reduced. So we need to add 4,000. So therefore what will be taken as the value in this case? 34,000 will be taken as the value in this case. So this is what we need to do. And next one. Suppose if you take the price is without considering the subsidy. Okay. Suppose if the same question, if we are taking price, the given price is 40,000. The given price is 40,000. Subsidy not reduced. Subsidy not reduced without considering the subsidy. Subsidy from CG. Subsidy from CG is 6,000 and subsidy from others. Subsidy from others. So subsidy from others is 4,000. So then what we need to do? So simply we will be taking the price after considering without considering the subsidy 40,000. Then subsidy from central government to be included or to be excluded? To be excluded, and the given price it is not excluded. So we will deduct. So we will deduct 6,000 and then subsidy from others 4,000 to be included or to be excluded? To be included. In the given price it is already included. So therefore ignore. Okay. So then what will be taken? 34,000 only. So therefore the price without considering subsidy or after considering subsidy depends upon the question. Suppose if the question is silent, you need to take the assumption that the given price is after considering the subsidy. Okay. If question is silent, consider price after reducing subsidy. So means the given price is after reducing subsidy. If the question is silent, you need to consider that the given price is after reducing the subsidy. Okay. So then section 15 subsection 1 meaning of value, section 15 subsection 2 is inclusions, 15 subsection 3 is exclusions from the value. What are to be excluded? So exclusion from the value divided into 3, that is discount given before at the time of supply. So discount given before at the time of supply is excluded, allowed as a reduction. Discount given after supply but the terms are agreed before at the time of supply, that is also allowed as reduction. So discount is divided into 3. Discount given before at the time of supply, allowed as reduction. Discount given after supply but the terms are agreed before the time of supply, then also it is allowed as reduction. If the discount is given after supply but the terms are not agreed before the time of supply, it is not allowed as a deduction. Okay. When discount is agreed before the time of supply, in invoice itself we will record it, so no need to give any credit note. But if the discount is given after supply and the terms are agreed before the time of supply, it is allowed as a deduction. But for that purpose we need to give a credit note. Credit note shall be issued and recipient should reverse the proportionate ITC based on that. And then suppose if the discount is given after supply and the terms are not agreed before at the time of supply, so then in that case this discount is not allowed as reduction. For example, 1 lakh I am selling and I gave a discount of 30%, but this is not agreed. Even though I receive 70,000 but I need to pay GST on 1 lakh, that is this. Then next one, whether GST is applicable on additional penal interest. So in order to understand this, interest under GST comes in 2 places. So interest under GST, okay. So that is taxability of interest. If you take taxability of interest, so we have interest in 2 places in GST. One is interest on loans, advances, deposits. Interest on loans, advances or deposits. This interest on loans, advances, deposits is actually exempted. So no need to pay GST on that. But interest on account of delay in receipt of consideration, interest on account of delay in receipt of consideration, interest on account of delay in receipt of consideration. So interest on account of delay in receipt of consideration, whether it will be treated as inclusion, yes, it will be treated as inclusion and chargeable to GST, chargeable to GST. Now in this case, in hire purchase transaction, so generally what happens, we will be having hire purchase transaction and hire purchase financing. In hire purchase transaction, the vendor himself gives the finance facility. So that interest collected in hire purchase transaction will come under interest on account of delay in receipt of consideration and chargeable to GST. Whereas in hire purchase financing, the vendor will not give the finance, there is the third party financier who will give the finance. So the interest collected by the third party financier will be interest on account of loans, advance, deposits, that is exempted. So therefore interest in hire purchase is taxable, interest in hire purchase financing is exempted. So interest involved in hire purchase transaction is taxable and interest involved in hire purchase financing is exempted. So now as interest in hire purchase transaction is taxable, on account of non-payment of an installment, a penal interest will be collected, that penal interest is also taxable. As interest in hire purchase financing is exempted, for non-payment of installment a penal interest is collected, that penal interest is exempted. If the main interest is taxable, penal interest also taxable. If the main interest is exempted, penal interest is also exempted. That is this point. Then, so rule 34, what is the relevant date for determination of exchange rate in case when the transaction is denominated in foreign currency? We need to convert it into Indian rupees. For the purpose of conversion into Indian rupees, in case of goods we need to take CBIC notified rate. In case of services we need to take GAAP rate. Okay, GAAP means generally accepted accounting principles. So this generally accepted accounting principles is the average of the buying rate and the selling rate. This GAAP rate, if you see, that is average of buying rate and selling rate as per AS 11. Average of buying rate and selling rate will be taken. Okay, that is in case of services. Rate determined as per GAAP prevailing on the time of supply. So which date? On the time of supply determined under section 13. In case of goods also, so rate notified by CBIC prevailing on the time of supply determined under section 12. So section 12 and section 13 talks about time of supply in case of goods and time of supply in case of services. So first we need to determine the time of supply. On that date, whatever is the CBIC notified rate, that should be taken for goods, and we need to determine the time of supply in case of service as per section 13, and on that date whatever is the GAAP rate, that should be taken in case of services. Suppose if you recognize a transaction at this rate and pay GST, but there is some gain or loss, what we need to do? Ignore. For example, we recognize the transaction at 75 rupees per dollar, but actually the receipt was 78 rupees per dollar. On the 3 rupees again should we pay GST? No need to pay GST again on that. Then there is one important circular here, that is TCS should not be included in the value. TCS collected under Income Tax Act. So I am a seller, you are a buyer, and from you I will be collecting TCS in addition to the price and GST. While computing the GST, TCS should not be included. Even though as per section 15 subsection 2 clause A, taxes, duties and cess by whatever name called should be included in GST, included in the value for computing GST other than GST. So therefore in this case, so this TCS should be included now as per 15 to 8. No, because what does the CBIC circular says that is that TCS is not a tax. It is an interim levy not having the character of tax. So therefore I am collecting TCS from the recipient. So no need to include it, because TCS is not a tax on income. TCS is a tax on expenditure. So no need to include it into the value. That is this. Then GST implications on debit note and credit note. So debit note and credit note is issued by supplier to recipient. So under GST, both this debit note and credit note is issued by supplier to recipient only. So recipient giving debit note or credit note to supplier we don't have. So when the debit note will be given, so generally recipient shows what balance in supplier books, that is debit balance. So if the debit balance increases, debit note; if the debit balance decreases, that will be credit note. So therefore whenever the actual value or tax is more than invoice value, means we are collecting extra amount, for that we will be giving a debit note. And whenever so the actual value or tax is less than the invoice value, then a credit note will be given. That is, we are reducing the invoice value. So increase in the invoice value debit note, decrease in the invoice value credit note. Okay, so increase in invoice value or tax, increase in value, increase in invoice value, increase in invoice value, or increase in tax, increase in GST, increase in GST. So then in that case, what is the document name? That is debit note. That is debit note. And decrease in invoice value. Decrease in invoice value or decrease in GST. Decrease in invoice value or decrease in GST. Then what is the name of the document? Credit note. Then the name of the document will be credit note. Okay. So that is the document to be given by supplier to recipient. Is there any time limit for issuance of debit note? No. But there is a time limit for issuance of credit note. What is that? 30th September of the succeeding financial year or date of filing annual return, whichever is earlier, that should be taken. And what is the consequence of debit note? Whenever supplier gives a debit note, supplier has to pay an additional liability. So the liability of the supplier will increase. What will happen to the recipient? Recipient ITC balance will be increased. So that is this. So supplier liability will increase and recipient ITC will increase. What supplier should do? Supplier should report that in GSTR 1 and GSTR 3B. So he need to add the debit note in GSTR 1 and he need to pay that liability through 3B. And what recipient will do? Recipient will take the ITC in 3B. And whenever credit note is given by supplier to recipient, what will happen? So whenever credit note is given by supplier, supplier's liability will come down. So because of the credit note, the liability will come down. So whatever is the regular liability, that will come down the moment we put this credit note. So the credit note should be reported in GSTR 1 and GSTR 3B, the liability should be reduced. And what will happen to the recipient? Recipient will reverse the ITC based on the credit note in his 3B. Okay. So this is the GST implications on debit note and credit note as per section 34. So actually this is given in section 34. So that is connected to value of supply, because whenever we collect the interest or late fee or penalty, we will be giving a debit note. So whenever we give the discount, post supply discount, we will give a credit note. So that's why I have just connected it here. Then next, the next area that we have is invoice and time of supply. So first, in this invoice and time of supply, there are total 3 sections. Section 31, which talks about due date of invoice. Section 12, which talks about time of supply in case of goods, and section 13, which talks about time of supply in case of services. So as per section 31, in case of goods, as per section 31 subsection 1, so we have 3 subsections for goods. First, we will determine the due date of invoice as per section 31. So in that, so for goods we have 3 subsections. So 31 subsection 1, 31 subsection 4 and 31 subsection 7. 31 subsection 1, normal cases, if supply involves movement of goods, so what is the due date of invoice? At the time of removal. If supply does not involve movement of goods, at the time of delivery will be taken as the due date of invoice. And in case of continuous supply of goods, continuous supply of goods means there will be successive supply of goods for which the payments are settled on a periodical basis. So now in that case, we need to check whether the account statement date or the payment date, as the case may be. That is, if the payment is receivable based on account statement date. If the payments are receivable irrespective of the account statement, then the payment receipt date will be taken. Then sale on approval or on return basis. First we will hand over the goods, and if the recipient likes that, he will agree, then they consider it as sale, otherwise he will be returning it. But what is the time limit for that? 6 months. So within 6 months he need to accept. If he is not accepting within 6 months, what will happen? After expiry of 6 months, it is deemed that he has accepted, and so the sale is concluded. So therefore, invoice to be given within 6 months from the date of removal or date of acceptance by the buyer, whichever is earlier. So these are the 3 points in case of goods. Whereas in case of services, we have subsection 5, subsection 6 and subsection 2, subsection 5 and subsection 6. Subsection 2, normal cases. So normal cases, banking and insurance sector, 45 days from the date of completion. Other cases, 30 days from the date of completion. That is the time limit by which invoice should be given. Whereas in case of continuous supply of services, what is continuous supply of service? A service which takes more than 3 months to complete and involves periodical payment obligations is known as continuous supply of service. So what is a continuous supply of service? Continuous supply of service means a service which takes more than 3 months to complete. Service which takes greater than 3 months to complete. And involves periodic payment obligation. Periodic payment obligation means installments. The money will be received in installments. Then it will be called as continuous supply of service. Okay. Then in case of continuous supply of services, so we need to check whether due date of installment is ascertainable from the contract. Yes. So for example, I am entering into contract with you to do the construction service, and the construction is going to take place for 1 year. Now in that case, So I have to receive the payments in installments, so that installments date by which I should receive is ascertainable, yes. Then the date by which I need to receive is the due date of invoice. Suppose if the date by which I need to receive is not given, but it is linked to completion of an event. Upon 30% completion you need to pay, 60% completion you need to pay, 100% completion you need to pay, like that. So whenever the 30%, 60% or 100% is completed, at that time I will be raising invoice, that is the due date of invoice. If there is no information like that in the contract, that is due date of payment is not ascertainable and the payment is not linked to completion of an event, then in that case, as and when the payment is received, that will be taken as the due date of invoice. Cessation of service means abruptly stopping the service. In case of cessation of service, immediately upon cessation the invoice should be given. So these are the 6 subsections that deals with due date of invoice under section 31. Then we have time of supply in case of goods and services. Time of supply in case of goods and service, goods is given under 12 and service is given under section 13, and this has many common points. Section 12.1 and 13.1 says that the time of supply is to determine the liability to pay tax. So when a person is liable to pay tax is determined based on time of supply. If time of supply happens in a month, so that month he need to pay tax, and for that month whatever is the due date by which he need to file GSTR 3B, that is 20th of the next month, he need to pay the tax. So therefore time of supply is mainly to determine the liability to pay tax, that is given in subsection 1. Subsection 2 talks about time of supply in case of FCM. So goods FCM 12 subsection 2, service FCM 13 subsection 2, and in case of 13 subsection 3 and 12 subsection 3 RCM. 12 subsection 3 goods RCM, 13 subsection 3 service RCM, and 12 subsection 4, 13 subsection 4 common, that is in case of vouchers, what is the time of supply, and subsection 5 also common in case of time of supply not ascertainable as per above provisions. Then subsection 6 is in case of interest, late fee or penalty, what should be taken as the time of supply. First you can see 12 subsection 2 goods FCM. So due date of invoice or actual date of invoice, whichever is earlier will be taken, but date of payment is not given, which means GST not payable on advances in case of goods covered under FCM. Whereas in case of services covered under FCM, check whether invoice is given within the due date. If invoice is given within the due date, then invoice date or payment date, whichever is earlier. If invoice is not given within the due date, then completion date or payment date, whichever is earlier, will be taken. And as date of payment is one of the date, whether GST payable on advances in case of services covered under FCM, yes. But in case of goods covered under FCM, GST not payable on advances. Then in case of services and goods covered under RCM, goods covered under RCM, we need to see the time of supply from the recipient point of view, because liability to pay GST is on recipient. So the date on which recipient has received the goods, the date on which recipient is making payment to supplier, or 31st day from the date of invoice, whichever is earlier, will be taken. Date on which goods are received, date on which recipient is making payment to supplier, or 31st day from the date of invoice, whichever is earlier. And here date of payment is one of the dates, so whether GST payable on advances in case of goods covered under RCM, yes. Then services, we don't have the date on which services are received, so that A point is not there, but B point is there, the date on which services are that is the date on which payment is made to supplier, and instead of 31st date in case of service, we need to take 61st day. So here instead of 31st day, we need to take 61st day from the date of invoice. Okay. So instead of 31st day, we need to take 61st day from the date of invoice. As date of payment is one of the date here. So whether GST payable on advances in case of services covered under RCM, yes. So in these 4, that is in case of goods FCM, in case of goods FCM and goods RCM, goods FCM, goods RCM, services FCM, services RCM, which place we need to pay GST on advances. So we don't have to pay GST on advances in case of goods covered under FCM, but goods covered under RCM, services covered under FCM and RCM. So in that place, GST can be payable on advances. Okay. So this is related to GST on advances. So kindly remember GST on advances, GST on advances. So in case of goods covered under FCM, not applicable, but all other places we need to pay GST on advances. Then 12 subsection 4 and 13 subsection 4, the provision is common in case of vouchers. Vouchers are divided into 2, identifiable vouchers, non-identifiable vouchers. Identifiable vouchers means that, so against which product or service that voucher can be redeemed is identified in that voucher itself. Then in that case, the date of issuance of voucher itself will be taken as the time of supply. Non-identifiable voucher, the voucher can be redeemed against any product or service, then the date of redemption will be taken as the time of supply. So in case of identifiable vouchers, at the time of issuance of voucher; in case of non-identifiable voucher, at the time of redemption of voucher. Okay. Then subsection 5, time of supply in case when we cannot determine the time of supply as per above provisions, what should be taken? So applicable in case of evasion of GST by a taxable person. So then that is no record, there is no details. Then whether a periodical return is required to be filed, yes, then the due date of that return is the time of supply. Where a periodical return is not required to be filed, so whenever that person pays the GST to the government, means whenever government recovers from him, that date will be taken as the time of supply in case of 12.5 and 13.5. Then 12.6 and 13.6 in case of interest, late fee or penalty for delay in receipt of consideration. So this is not taxable on accrual basis, this is taxable on receipt basis. So therefore the time of supply is only when it is actually received. So only one transaction in entire GST is taxable on receipt basis, that is this. So this will be the date on which the actual consideration, that is additional consideration, is received. So therefore GST is payable on receipt basis in this case. That is about subsection 6. So subsection 1 meaning subsection 2 FCM, subsection 3 RCM, subsection 4 voucher, subsection 5 cannot be determined as per above subsections, subsection 6 in case of interest, late fee, penalty. Then say that there are some additional points. First point already we discussed. In case of goods covered under FCM on advances, GST not payable and GST payable only upon invoice, because the time of supply is due date of invoice or actual date of invoice, whichever is earlier. But in case of services covered under FCM, so GST payable on advances. Then in case of services, as GST payable on advances, it so happens that, so whenever we raise bill, so we may receive some extra amount. For that extra amount, if that extra amount is up to 1000 rupees, we have two options. Either we can pay GST in that month itself. For example, the bill is for 1300 and odd, but we received 1500, that extra amount received. For that extra amount received in this month, so this is the month in which payment is received, but for which the invoice will be raised in the next month. So therefore for this extra amount, the time of supply can be taken as per normal provisions, means invoice date or payment date, whichever is earlier, or you can defer the liability to the next month, means we can take date of invoice itself as the time of supply. So up to 1000 rupees received in excess of the invoice, if the service is covered under FCM, time of supply can be the date of invoice 1. Okay, either means whenever for that extra amount received, we will raise invoice in the future now, that time, or determined as per 13 subsection 2, that is regular provision. Supplier has the option to choose. Then what is taken as the date of payment received? So in case of supplier, the date of payment will be date of entry in the books of supplier or date of credit in the supplier's bank account, whichever is earlier. What is the meaning of date of payment from the recipient perspective? The date on which entry is made in the recipient books, or date of debit in the bank account of the recipient, whichever is earlier. Okay. Then in case of supply between associated enterprises, who are associated enterprises? Associated enterprise is defined under section 92A of the Income Tax Act. So we don't have to remember what is the meaning of associated enterprises, but remember usually if 26% is there. Associated enterprises, what is the thumb rule that you need to remember? Greater than or equals to 26% investment, then it will be called as associated enterprises. Whether holding and subsidiary is associated, of course yes. So like that associated enterprises, where is the supplier located? Outside India. Where is the recipient located? In India. Then it is import of service covered under RCM na, yes, but usually associated enterprises will not raise the invoice. That's the reason why the date on which recipient enters in the books, or usually 61st day we need to take, but instead of 61st day, the date on which payment is made. Okay, so date of entry in the books of recipient or date of payment, whichever is earlier, should be taken. Generally if it is import of service RCM, what is the provision? Date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. But here they are telling date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier. That is a change. Then section 31 subsection 7. Section 31 subsection 7 is in case when the goods are taken outside India for exhibition, is it supply? No, it is not a supply. When the goods are taken outside India, it is not a supply because it is taken for exhibition. It is not for consideration. So 71A will not come, and 71C also will not come because it is not permanent transfer or disposal of business asset. So it is not a supply. However, section 31 subsection 7 gets attracted. If the goods are not brought back within 6 months, then it is deemed to be sold. Okay, so when the goods are taken outside India for exhibition, it is not a supply, but when the same is not brought back within 6 months, it is deemed as supply as per 31 subsection 7. Okay, then what are the various documents involved in GST? So this is given in other sections. Okay, section 31 we have discussed, subsection 147 for goods and 256 for service, but subsection 3 is not discussed. That is this section 31 subsection 3. So tax invoice, already we know who will be giving tax invoice to whom. Generally supplier will give tax invoice to recipient, but in case if the supply is covered under RCM and the supplier is unregistered, then the recipient will give tax invoice to the supplier. Generally supplier will give Generally supplier will give, but if the transaction is covered under RCM, then in that case and the supplier is unregistered, recipient will give the tax invoice to the supplier, and tax invoice is applicable in case of taxable supplies, taxable goods or taxable services. And what is the time limit already we have seen. Then in case of exempted supplies, a registered person who is making exempted supplies or a registered person who is under composition scheme will be giving bill of supply instead of tax invoice. Who will give? Supplier only will give it to the recipient. What is the time limit? The regular time limit for tax invoice will be taken for bill of supply also, but bill of supply is applicable only to a registered person who is making exempted supplies or who is under composition scheme. Then in case of low value supplies, what is low value supplies? Value of supply less than 200 is known as low value supply. In case of low value supply, neither invoice nor bill of supply required. If it is B2C supplies, B2C supplies means what? Recipient is unregistered and recipient do not require tax invoice, and a consolidated invoice or bill of supply is generated at the end of the day as to what are all the transactions that happened. Just for accounting purpose, we will prepare one sheet in that all the transactions, low value supplies we will enter and we will generate. That is known as consolidated invoice or bill of supply and generated at the end of the day. So in case of low value supplies, what is a low value supply? Value of supply less than 200 is known as low value supply. Tax invoice as well as bill of supply not required. If the recipient is unregistered, recipient is not in need of any invoice, and a consolidated invoice needs to be raised at the end of the day. Three conditions: recipient is unregistered, recipient is not in any need of invoice, and a consolidated invoice needs to be raised by the end of the day. What is a low value supply? Value of supply less than 200 is known as low value supply. Then in case of multiplex theatres, so what if it is equal to 200? That is not low value supply, less than 200. In case of a multiplex theatre, even if the value of supply is less than 200, even if they are making supply to an unregistered person, they need to give invoice. In that case, the e-ticket will be considered as invoice. This is an exception. So in case of multiplex theatres, an invoice to be issued even if the value of supply is less than 200. Then there is something called as revised tax invoice. So in this revised tax invoice, first there is a concept connecting to this called as effective date of registration that we need to understand. For example, a person commenced business. A person commenced business. That business is commenced on somewhere 5/5/2021. He commenced the business and his aggregate turnover exceeds threshold limit. His aggregate turnover exceeds threshold limit. His aggregate turnover exceeded threshold limit on 25/11/2021, and then he applied for registration. He applied for registration, and that registration he applied on 10/12/2021, and the registration certificate granted. The registration certificate granted on 15/12/2021. So these are the dates. Now in that case, what is the effective date of registration? First, when is he liable to register? He is liable to register from 25/11/2021 because that is the date on which aggregate turnover exceeds threshold limit. From the date, whether he applied for registration within 30 days. Yes, he applied for registration within 30 days. As he applied for registration within 30 days, the effective date of registration is 25/11/2021. That will be taken as the effective date of registration. Okay, that will be taken as effective date of registration. That is the date on which he is liable to get registered. That will be taken as the effective date of registration. Now, so when the registration is granted 15/12/2021, so from 25/11/2021 to 15/12/2021, whatever is the outward supplies, on those outward supplies, so he cannot give the tax invoice. Why he cannot give tax invoice? Because so he is not registered. So he can give a revised tax invoice at a later time. That is after 15/12. After 15/12, whenever he get the registration certificate, he can give a revised tax invoice. But what is the time limit within which the revised tax invoice should be given? Within 1 month. Okay. From 15/12/2021, within 1 month. Within 1 month. Okay. So registration certificate granted 15/12/2021. Then revised tax invoice. Revised tax invoice should be given within 1 month, means 15/1/2022. By the time the revised tax invoice should be issued in this case. So that is with respect to revised tax invoice. And here, suppose if he applied for registration on a different date. So it is not on 10/11/2021, but he applied for registration on somewhere like 31/12/2021 he applied for registration, and thereafter the registration was granted on 5/1/2022. Okay, now in that case, can he give revised tax invoice? No, revised tax invoice cannot be issued. Why? As the application for registration is made beyond 30 days, the effective date of registration is the date on which registration certificate is granted. So revised tax invoice cannot be issued in this case. So revised tax invoice cannot be issued if application for registration is not made within 30 days. So only when the application is made within 30 days, then effective date of registration is the date on which we are liable to register. From that date till the date we get registration certificate, we can give revised tax invoice, and that revised tax invoice should be given within 1 month after the date we get the registration certificate. Okay. Then next, receipt voucher. Receipt voucher is a document given by supplier to recipient in case of advance. So whenever the payment is received before the invoice, to evidence that the payment is received, so receipt voucher will be given by supplier to recipient. There is no time limit, which means immediately it should be given. What if payment is received? It is required to be issued only if the payment is received before the invoice. What if the payment is received after invoice? Receipt voucher is not compulsory but mandate and optional. If you want, you can give. Okay. Then payment voucher. Payment voucher is given by recipient to supplier covered under RCM. Only in case of RCM payment voucher will come 9394. So in case of RCM, recipient is required to give the payment voucher to the supplier. Okay. Whether the supplier is registered or not, the payment voucher will come. Then refund voucher. Refund voucher is first before the invoice date we received money. So we gave for advance we gave a receipt voucher. Now before the invoice that advance is refunded. We cancel the supply. Then we need to give refund voucher. What if the money is returned after invoice date? Then in that case refund voucher will not come, but there will be something called as credit note that will be applicable. Okay. So for example, say this, there is a invoice date. Before invoice date, if the payment is received, before invoice date if the payment is received, so what is the name of the document? Receipt voucher. Receipt voucher. Okay. Then suppose if the payment is received after, but not mandatory, whatever mandatory only I am discussing, then amount refunded before invoice, if the amount is refunded, then what is the document? Refund voucher. Refund voucher. If the amount is refunded after the before the invoice, then it is refund voucher. What if the amount is refunded after invoice? What if amount is refunded after invoice? Then what is the name of the document? Credit note. The name of the document is credit note. Okay. This is what you need to remember. So if the amount is refunded after issuance of invoice, then a credit note shall be issued by supplier to recipient. Then delivery challan. Delivery challan will be applicable whenever there is no supply but movement of goods. So from head office to branch office within the same state, no separate registration, it is not a supply. Then for movement of goods, there is a requirement of delivery challan, or goods sent on job work basis. So we are sending it on job work, then also delivery challan. Or we are removing the goods but we don't know how much will be sold. So in that case also delivery challan. In case of transportation of goods for reasons other than by way of supply, so then supplier will be giving delivery challan, not specified, means immediately it should be given. Then there is something called as HSN code in invoice. HSN code in invoice means in every invoice, so if it is goods we need to enter HSN code, if it is services we need to enter SAC code. Okay. So HSN code is a 8-digit number. Actually HSN code in invoice is required only in case of goods, that too. So it is a 8-digit number. It is a 8-digit number. 8-digit code. So it is a 8-digit code. Okay. And so we have a relaxation now. If aggregate turnover during the previous year does not exceed 5 crores, then 4 digits we need to enter only for B2B. If the aggregate turnover during the previous year exceeds 5 crores, whether it is B2B or B2C, we need to enter 6 digits. And in case of services, so for services, note, for services, what is the code? For services, it is SAC, Service Accounting Code, Service Accounting Code, and this Service Accounting Code is a 6-digit code. And we don't have any relaxation, we need to enter all the 6 digits. So that is with respect to HSN code in invoice. Then there is a concept of E-Invoice, then dynamic QR code and other aspects. We'll take a small break and thereafter we will continue with this. We'll take a break up to 9:30 and then we will continue from 9:30 related to this other aspects. Meanwhile, if you have any doubts, you can just put it in that chat, and after break I will reply to those queries. Okay, thank you. Okay friends, welcome back. Welcome back everyone. There are few queries. I have a doubt that in time of supply that limit for E-invoice is about 20 crores or 50 crores. See, actually the updated limit is 20 crores and in some old questions it is given as 50 crores. So therefore wherever you see 50 crores you change it to 20 crores for November 22 exam. Everywhere it is 20 crores only. Okay. Then so please explain contract of service as per Income Tax Act. So that will be part of income tax. I am not an income tax faculty per, sorry. Then next, this revision is for all chapters at a single stretch. Yes, this revision is of all chapters at a single stretch. Sir, validity of delivery challan. There is no validity for delivery challan. Delivery challan once issued, it is for that movement. So rather than invoice, there will be a delivery challan that will be given. Sir, will you be doing important sum for exams? So not now. So I'll be doing it one day before the exam. Sir, is it needed to buy both revised book and that's it book for November 22 or that's it book is enough? Revised book is enough. That's it book is only like revision, last minute revision. But revised book contains not only this revision but also past exam questions, RTP questions and all. Okay, so that will be detailed, little detailed. So requesting you to timestamp, yes, once the lecture gets over. So I'll ask my team to do the timestamp so that you can check the chapters. Okay. Then next we will be proceeding on to E-invoice and dynamic QR code. E-invoice means, so when we upload a normal invoice into the portal, invoice registration portal and obtain JSON, that is convert it into JSON file and upload it into the invoice registration portal and obtain three things from the invoice registration portal, then it is called as a E-invoice. That is invoice reference number, quick response code and digital signature. So obtaining the following from the invoice registration portal with respect to a normal tax invoice by uploading the JSON. JSON means JavaScript object notation, that is one file format. Okay. Then it is known as E-invoice. So invoice reference number, quick response code and digital signature. These are the three things. So invoice reference number, quick response code and digital signature. Obtaining these three things from the invoice registration portal is known as E-invoice. And whenever you generate the E-invoice, it does not mean that you need to carry the physical copy of the invoice. So physical copy of the invoice is not required. So whenever the proper officer is asking, we can produce the QR code that is mentioned on the E-invoice, that is sufficient. Then what are the types of transactions for which E-invoice is required? B2B transactions which are outward supplies. What about B2C? For B2C we have dynamic QR code. Zero rated supplies, that is exports. Then credit notes and debit notes. B2B invoice containing both taxable and exempted supplies. So in this case E-invoice is required. Then when E-invoice is required, like limit aggregate turnover during the previous year, any previous year does not exceed 20 crores, E-invoice not required. Only when it exceeds 20 crores, E-invoice is required, and that too it should be for B2B supplies. Then invoice should be in a prescribed form. That is a normal invoice which you prepare in your billing software should be in a prescribed form, that is form GST INV1. And suppose if the aggregate turnover during any previous year does not exceed 20 crores, then E-invoice is optional. E-invoice gets auto populated in GSTR1 and e-way bill portal. Then there is concept called as dynamic QR code. Dynamic QR code means we have to collect the payment by scanning the QR code. So this dynamic QR code is not generated by the government portal, but it is generated by the supplier using the payment gateway. So there are 5 entries that should be there on the dynamic QR code: supplier GSTIN, then bank account and IFSC code and UPI ID, then invoice number and date and invoice value and the tax. So these numbers together should be created as a dynamic QR code, and once you scan the dynamic QR code, automatically the amount will come and we can make the payment. But to whom this dynamic QR code is applicable? If their aggregate turnover in any previous year exceeds 500 crores, then only dynamic QR code is required. 500 crores. Aggregate turnover in any previous year exceeds 500 crores. So then only dynamic QR code is required for B2C supplies. Okay. Then so this dynamic QR code is not required. There is one exception, that is if the payment is collected after preparing the invoice, then only dynamic QR code is required. Suppose if the payment is already collected and then we are preparing the invoice, dynamic QR code is not required, but a cross reference of that payment collected should be given. If payment is received before at the time of generating invoice and cross reference of such payment received is mentioned in the invoice, then no need to mention dynamic QR code in invoice. Then there are non-applicability of dynamic QR code and E-Invoice. E-Invoice is not applicable in few cases. You remember biggest: B for banking company, I for insurance company, G for goods transport agency, another G for government department or local authority, E for exhibition of film in a multiplex theatre, S for SEZ unit, and T for transportation of passengers by any mode. For these people, so E-Invoice is not applicable even if the aggregate turnover exceeds 20 crores in the previous year. Whereas dynamic QR code is not required in few cases, that is big 2. Even if the aggregate turnover during any previous year exceeds 500 crores, dynamic QR code is not required, big 2. B for banking company, I for insurance company, G for government department or local authority, another G for GTA, then 2. T for same, that is transportation of passengers by any mode. O alone is different, that is we don't have that in E-Invoice, that is O for OIDR supplier located outside India, and E for exhibition of film in a multiplex theatre. So except this, everything is same. So biggest minus S plus O. So that is what the cases where dynamic QR code is not required and E-Invoice is not required. This can be tested as short note question. So with this we completed invoice and time of supply. Then the next topic is input tax credit. Input tax credit is a very important chapter. So in input tax credit we have 3 sections: section 16 which talks about conditions for availment of ITC, and section 17 apportionment of credit and block credit, and section 18 input tax credit in special cases. In that GSTR1, so we need to understand how to avail ITC and how much ITC to be availed. So for that we need to know certain data. GSTR1 is a return which will be filed by every supplier reporting their outward supply data. Whenever GSTR1 is filed by the supplier, the data reported by the supplier, invoice details, based on the invoice details, the recipient detail will be there. So to that recipient, portal will be preparing GSTR2A and GSTR2B inward supplies details and making it available to the recipient. But previously we used to take input tax credit based on GSTR2A plus 5%. But now as per the updated provisions with effect from 1/1/2022, with effect from 1/1/2022, how much is the ITC availed in GSTR3B? This is a formula which we need to remember, very very important. ITC availed in GSTR3B equals to ITC availed. Availed means we will take the credit in GSTR3B. So ITC availed in GSTR3B. ITC is input tax credit, that is GST paid on inward supply, equal to. So we need to see what is the ITC reflected in GSTR2B. ITC reflected. So ITC reflected in GSTR2B. GSTR2B is a statement which is prepared by the portal and made it available to the person based on the outward supplies GSTR1 filed by the respective supplier. Suppose if you are the recipient, your suppliers will be filing GSTR1, based on that when GSTR2B will be made available to you. So ITC reflected in GSTR2B. For this ITC reflected in GSTR2B, you need to take out, so that is ineligible ITC. Ineligible ITC will also be called as matched ITC. Means what is matched ITC? That ITC which is coming in 2B is known as matched ITC. Even ineligible ITC will also come in GSTR2B. What is ineligible ITC? Ineligible ITC means ITC with respect to non-business purpose. Non-business purpose means we are making some purchases and we are using it for non-business purpose, personal purpose. On that, GST paid will come in 2B, but we cannot take that ITC. So that should be taken out. It may come in 2B, but we cannot take it out. ITC with respect to exempted supplies. ITC with respect to exempted supplies. That is, we are making some purchases and we are using it for exempted outward supplies. Actually, it will come in 2B, but we should not take credit with respect to this. And then C, blocked ITC. Blocked ITC means there are some inward supplies on which we cannot take ITC. That will also come in 2B, but we cannot take that, should take out. Then to this we need to add one, that is GST paid under RCM. Whatever GST that we paid under RCM, GST paid under RCM. So because GST paid under RCM will not come in GSTR2B, it is not matched. So now the sum of this is known as, ITC availed in GSTR3B. So eligible matched ITC, eligible matched ITC. So what is the steps that we need to do? First we need to take out ITC reflected in GSTR 2B. From that we need to take out ineligible ITC. What is ineligible ITC with respect to non-business purpose, exempted supplies and blocked credits? Then we need to add GST paid under RCM, that is known as eligible matched ITC. That eligible matched ITC we can take and we can set off with the liability. Now, so 2A is now not relevant, only 2B, which is a static month-wise auto-drafted statement. So when GSTR 2B will be generated, GSTR 2B will be generated by 13th of the month following every month. 13th of the month following every month. 13th of the month following every month. So if the suppliers have filed their GSTR 1 by 13th, that data will be coming in this GSTR 2B. Then 3B is a consolidated statement for availment of ITC for payment of tax, etc. And annual statement. Previously we need to do the reconciliation, but now it is not required because what we take as ITC is only the matched ITC. So with effect from 1/1/2022, we don't have to do any reconciliation, but up to December 2021 we need to do the reconciliation. Okay. Then next here you can see what are the steps that are involved. First, recognize the ITC in the books, but that is not your ITC, just for the book sake. Then monthly matching. So you will take the credit based on 2A and 2B. How much you will take as ITC in 3B? Eligible ITC as per GSTR 2B. Now 2B only. So 5% matching is withdrawn. That 5% matching is withdrawn. Matching not required in case of GST paid under RCM. Then annual reconciliation. So up to December we need to do that reconciliation between 2A and 3B, and if you have taken extra credit, that needs to be reversed along with interest. If there is any shortfall, you can take that as credit. Okay, that is the steps. Blocked credit that is used for exempted supply will also be reflected in 2A 2B, but the same cannot be availed as ITC. What is the difference between 2A and 2B? 2A is a dynamic document and which changes based on GSTR 1 of the supplier. Whenever GSTR 1 of the supplier is changing, 2A will change. But 2B, so 2B is static document, it will not change, and therefore we need to take now ITC based on so GSTR 2B only. Okay, then this is about the information relating to how much ITC we will take. This will be given as one adjustment in the question. Now, manner of utilization of credit, this is given in section 49 subsection 5, that is whenever we take the credit, how much credit can be taken and with what you can set off. First, we can take the ITC of CGST, SGST, UTGST and IGST. In that, first you need to remember there is no cross utilization with respect to there is no restriction with respect to IGST, which means IGST credit can be set off with any liability and any credit can be set off with IGST liability. That is this point. There is no restriction with respect to IGST. Then second point in the first principle is that between the remaining means CGST, SGST and UTGST, cross utilization not possible, means respective credit can be used for payment of respective liability, cross utilization not possible. This is first principle. And the second principle is the priority. So what we need to do, first when we have IGST credit, use it for payment of IGST liability, then the balance if any can be used for payment of CGST, SGST, UTGST in any manner, any proportion. Whereas the other three credits, CGST, SGST and UTGST, first for payment of that liability, then balance if any can be set off with IGST payable. Then principle 3, before utilizing CGST, SGST credit, the credit of IGST should be completely exhausted. Then only we need to touch CGST, SGST credit. And principle number 4, when we have IGST payable and all the credits, first anyhow you will use IGST credit and then CGST and then only SGST or UTGST credit. Now, there are multiple answers because IGST credit after utilizing for payment of IGST liability can be utilized for payment of CGST, SGST in any manner, any proportion. For example, if you see, so CGST, SGST and IGST, so we have the liabilities 5,000, 5,000 and 5,000 is our liability, Now we have credit ITC. So ITC we have 2,000 CGST, 2,000 SGST and 10,000 IGST. So now what we need to do in that case? So first for the gross liability we will set off IGST credit first. So when we set off the IGST credit for payment of IGST liability, so the liability if you see, the liability will be 5,000, 5,000 and 5,000. We will be using 10,000. So first we will pay 5,000 rupees, then the balance we have. So multiple answers are there, but ensure that you are properly planning, because if you use entire 5,000 for CGST, there will be excess ITC carried forward. So then unnecessarily there will be liability. So ensure that you are dividing equally or in such a way that so optimum you are utilizing minus CGST and SGST, that is 2000 and 2000. Now whatever is the balance that is left is known as net liability. What is that net liability? 500 CGST, 500 SGST and 0. So therefore this is, sir, any alternative answer? Yes, alternative answer also possible. I can use 3000 for payment of CGST, 2000 for payment of SGST. Then the net liability will be 1000 of SGST. But what we need to see, what valuers will see is that the net liability total should be same. The net liability total will be 1000. Alternative answers may be there. So then which will be correct only? We will get marks. So even though our answer is not as per the suggested answer, we will get marks. But only thing we need to check that the net liability total will be same. So IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, SGST in any proportion. So multiple answers possible in exam. In my view, that depending upon CGST, SGST liability, it should be apportioned. Okay. Then we have conditions for availment of ITC as per section 16. Section 16 says that there are total now 7 conditions. So these are the 7 conditions. All these conditions should be satisfied for the purpose of availment of ITC. First, only a registered person can avail ITC, unregistered person cannot avail ITC, and the inward supplies on which they want to take ITC should be used or intended to be used in the course or furtherance of business. Used means used for the existing business. Intended to be used means we have purchased it now, we are not using it now, we will be using it in future. Can we take the credit? Yes, we can take the credit. So, but it should be used in future in the course or furtherance of business. Number 3, the person who want to take ITC should be in possession of the tax paid document. What is a tax paid document? Either tax invoice or debit note or ISD invoice. ISD invoice means input service distributor invoice. The head office will distribute the credit to the branch officers for distribution of credit. So they will be giving a ISD invoice or bill of entry. So these are the documents on the basis of which credit can be availed. So therefore, the person who want to take ITC should be in possession of the tax paid document and should have actually received the goods or services. So condition number 1 should be a registered person. Condition number 2 should be used, inward supply should be used in the course or furtherance of business. Condition number 3 should be in possession of tax paid documents. Condition number 4 should have actually received the goods or services. So these are the things to be done by the recipient. Now what supplier should do? Supplier should have reported the details of outward supplies in GSTR1. Now this is an amendment for November 22 exam. Previously this condition was not there. Supplier should report the details of outward supplies in GSTR1 and should file the GSTR1 by the due date. Then only recipient will be able to take the ITC. What if supplier files a GSTR1 later? So whenever GSTR1 is filed by the supplier, at that month only it will be reflected in 2B of the recipient, and GST can be taken as ITC by the recipient whenever it comes in his 2B. Then these 2 conditions are to be followed by the supplier. So supplier should have furnished the details in GSTR1. Number 2, supplier should have made the payment of tax. Supplier should have paid tax with respect to such supply. Then so remaining conditions to be followed by the recipient, and recipient, how he can take ITC? He can take ITC only by filing a return called as GSTR 3B. So recipient can take ITC by filing the ITC claim in GSTR 3B. So therefore should have filed the return. These are the 7 conditions. Then what is the meaning of input tax? Input tax means CGST, SGST, UT, GST or IGST, and even IGST paid under RCM. CGST, SGST, UT, GST, IGST under RCM. On import of goods we pay IGST, that also can be taken as credit. So whatever tax paid under FCM, whatever tax paid under RCM, and on import whatever IGST paid, that can be taken as input tax credit. But input tax credit does not include input tax paid under composition scheme. So whatever GST that we paid under composition scheme cannot be taken as ITC. Because first of all, a person opting for composition scheme should not charge GST. Even if he charges GST, that GST paid by us cannot be taken as credit. Okay. Then what are the contents of invoice? That is, so invoice, a person to take the credit should be in possession of the tax paid document, but in the tax paid document, that is tax invoice, what are the minimum details that should be present to be called as an invoice for taking the ITC? It should contain the GSTN of the supplier, it should contain GSTN of the recipient, then description of the goods or services, then value and tax, and if it is interstate supply, place of supply. These are the 6 minimum details that should be present in order to be called as a valid invoice for the purpose of availment of ITC. Then what is the meaning of inward supply? Inward supply can be inputs, input service or capital goods. So purchases is divided into 3: inputs, input service, capital goods. What is inputs? So purchases which are charged to P&L. What are capital goods? Purchases which are capitalized in the books of the recipient. And what is input service? Any service. But all these 3 should be used in the course or furtherance of business. Then deemed delivery concept is there. One of the conditions says that a person only when he actually receives the goods or services he can take ITC. So invoice should be there and goods or services should be received. In case of bill to ship to transactions, bill to ship to transactions means under the direction of the recipient, the goods or services are provided to a third person. So there is a supplier, and there is a recipient. Okay, there is a supplier and a recipient, and there is a third person. Now the supplier will be delivering the goods or services to the third person. Goods or services will be provided to the third person on the instructions of the recipient, and invoice will be raised to the recipient. Now, so what is the billing address? Billing address will be recipient address, and shipping address will be third person's address. Now in that case, who will be able to take the ITC? This recipient will be able to take ITC. Why? Because he is having the invoice. Even though he has not actually received the goods, the date on which this third person has received the goods, it is deemed that the recipient has received the goods and the recipient can take ITC. So that is this deemed delivery concept. Then suppose if goods are received in lots or installments, when the ITC can be availed only upon receipt of last lot or installment, provided it is with respect to a single invoice. So for example, separate invoices separately, if it is received, we can take, but against a single invoice, when the goods are received in lots, we can take ITC only on receipt of last lot. Then reversal of ITC, if the recipient is not making payment to supplier within 180 days from the date of invoice. So I am the supplier, you are the recipient not making payment to the supplier within 180 days from the date of invoice. Now what recipient should do? So much of the ITC availed based on the invoice should be reversed along with interest at the rate of 18% per annum, and that interest should be computed from when? From the first date after availment of ITC till the date of reversal. So it is a self-assessment exercise to be done by the recipient, and recipient has to always do this, otherwise penalty will be applicable. If the recipient has not made payment to supplier within 180 days from the date of invoice, then so much of the ITC available by the recipient, so needs to be reversed. How it will be reversed? In GST 3B it will be reversed along with interest at 18% per annum from the first date after availment of ITC till the date of reversal. And this 180 days condition is not applicable in 3 cases, that is supply under 71C, supply without consideration. Then 15(2)B, payment made to some other person on behalf of supplier. Supplier did not receive, some other person received, but okay, indirectly received by the supplier. And number 3, RCM 9 subsection 3 and 9 subsection 4. So these are the 3 cases. This 180 days condition is not applicable. Now as and when the recipient makes payment to the supplier, so within 180 days he did not pay, so he reverts. And as and when the recipient makes payment to the supplier after 180 days, so recipient will be able to take the ITC. Okay. Then next, ITC not available in case of depreciation. Section 16 subsection 3, one point is there. While computing the income tax depreciation, section 32 block of assets method, we will be taking opening WDV, add purchases minus disposal. So in that purchases, if you take the value, invoice value fully including GST, then depreciation would be calculated on GST component also. So ITC not available. That is this. For example, purchase price of the capital goods is 10 lakhs, GST is 1,20,000. If depreciation is computed on 11,20,000, then ITC of 1,20,000 not available. Then the time limit for availment of ITC, section 16 subsection 4, that is 20th October of the succeeding financial year or date of filing annual return, whichever is earlier. The credit note time limit is 30th September of the succeeding financial year, but time limit for availment of ITC is 20th October of the succeeding financial year, or B, date of filing annual return, whichever is earlier. But this time limit is not applicable in case of re-availment of ITC. First we avail the ITC, payment not made within 180 days, so we reverse the ITC, again we are re-availing, so the time limit is not applicable in that case, means we can take. And in case of debit note, previously we need to check the invoice date, and based on that we used to determine the time limit, but no, now see the debit note date itself. Based on the debit note date itself, we will determine the time limit for availment of ITC. So this is about section 16. Then section 17. Section 17 is inward supplies. So when you are using it for taxable outward supply, we can take ITC. Inward supply used for business purpose also, we can take ITC. Suppose if it is used for exempted supplies or non-business purpose, ITC not available. What if it is used proportionately, that is used for both taxable and exempted, business and non-business, proportionate ITC available. What proportionate? So in case of taxable and exempted, to the proportionate of taxable ITC is available. For example, I am making purchase of some inputs, and using these inputs I am making 2 products, FGA and FGB. And FGA is taxable and FGB is exempted. FGB is exempted. And what is the value of FGA? The value of FGA is 10 lakhs and the value of FGB is 4 lakhs. Okay. Now on these inputs, what is the value of these inputs? The value of these inputs is 1,50,000 into 18%, that equals to 27,000. So now how much credit will be available? Proportionate ITC. What is that proportionate ITC? Proportionate ITC is simple. 27,000 into full credit we will not get, because we are using partly for taxable and partly for exempted. To the extent it is used for taxable we will get. So therefore 27,000 into 10 divided by 14, that is 19,285. 19,285.7. So 286 rupees can only be taken as credit. So not full 27,000 can be taken as credit. That is the meaning of this proportionate ITC available. Business and non-business, they need to give the ratio. Based on that ratio we will take the calculation. Now where zero rated supplies will come? Zero rated supplies classified along with taxable only. So zero rated, whether we pay GST or non pay GST, two options are there, but it will always be treated as taxable for the purpose of computation of ITC. Then what is the meaning of exempted supplies? So exempted supplies for the purpose of ITC is given under 17 subsection 3. But this definition of exempted supplies is only for computing the ITC, not for the purpose of payment of tax. For the purpose of payment of tax, exempted means only 3, that is notified as exempted, nil rated and non-taxable. For the purpose of availment of ITC or computation of ITC, exempted means these 3, that is notified as exempted, nil rated, non-taxable. In addition to that, some more transactions also treated as exempted supply, that is outward supply covered under RCM. I am making some outward supply which is covered under RCM, so that will also be treated as exempted supplies. Then next, so we have not a supply, actually sale of land, sale of building, not a supply, but it is also treated as exempted supply. Then sale of securities, not a supply but treated as exempted supply. Okay, so total 7 points. So what is that? Notified as exempted, nil rated, non-taxable. Supply covered under RCM, my outward supply covered under RCM. Sale of land, sale of building, sale of securities. Okay, so these are the 7 points which are treated as meaning of exempted supply. In case of land and building, what should be taken as value? Stamp duty value should be taken as a value of exempted supplies. In case of sale of securities, what should be taken? 1% of the sale value of security should be taken as the value of exempted supplies. Then there are two transactions which are actually exempted but for ITC purpose treated as taxable. Interest on loans, advances, deposits by a person other than banking company. For a banking company it is exempted only, both for payment of GST as well as for availment of ITC. But for a person other than banking company, financial institution, NBFC, so for others interest is actually exempted, but for ITC purpose it will be classified under taxable. Same way, transportation of goods by vessel from where to where? India to outside India, it is actually exempted supply, but for the purpose of ITC it will be treated as taxable. Okay, then next, if gifts are free samples, if any gift or free sample is given and that becomes supply under 7(1)(c), for example, employer giving a mobile phone on gift as gift to an employee, the value of the mobile phone exceeds 50,000, that will be supplied. Now on purchase of that gift, can they take ITC? Yes, they can take ITC. That is with respect to this. Generally gifts, if any goods are purchased and distributed as gifts or free samples, it is a blocked credit, ITC not available. But if that gift or free sample becomes supplied, then ITC can be availed. So this is about section 17, 1, 2 and 3. Then 17 subsection 4 is special provision for banking company, financial institution and NBFC. So there are two options available. Option number 1, they will take the proportionate ITC. What is a proportionate ITC? So that is, so they will be taking like normal. So far what we have seen, total ITC into taxable by exempted, that is proportionate ITC they will take. Or option 2 they have. So option 1 is regular way. What is that regular way? Total ITC into what by what? Taxable divided by total, taxable divided by total, that is known as proportionate ITC. Whereas option 2 is there. Option 2 is ad hoc. Ad hoc means how much ITC they will take. So whatever is the total ITC into 50% they will take as input tax credit. So that's the difference between these two options. And exclusive used for non-business purpose and exempted supplies, ITC should not be availed. Remaining 50% ITC shall be lapsed. Okay. And restriction of 50% shall not apply to tax paid on supplies with respect to another registration of the same entity. Means inward supply from distinct person, no need to reduce 50%, take full credit. And this option needs to be exercised in the beginning of the financial year, and that will be applicable throughout the financial year. So this is about 17 subsection 4 special provision for banking companies, but only applicable for banking company, financial institution and NBFC, not for others. Then we are moving on to an important area, that is blocked credit, 17 subsection 5. So there are some inward supplies on which we cannot take ITC at all, that is known as blocked credits. Even though it is used for business purpose, we cannot take. Number 1, motor vehicle related block credit. Motor vehicle divided into 3. For transportation of persons, so that is like normal cars, two-wheelers, bus, etc. Transportation of persons, vessels and aircrafts and other motor vehicles. Other motor vehicles not in the block credit. We can take credit always. And in case of vessels and aircrafts and for transportation of persons, we have some block credit. Other motor vehicles means lorries, trucks, etc. We can happily take the credit. We don't have any restriction. Now, motor vehicle for transportation of persons divided into 2. Capacity does not exceed 13, capacity exceed 13. Capacity exceed 13 is not a block credit, means ITC available. Capacity does not exceed 13 is a block credit, but we have 3 exceptions where even though it is a block credit, ITC available. What are they? If it is used for further supply, means I am purchasing and selling the motor vehicles, or I am purchasing the motor vehicle and giving it on rent, so then also I can take ITC. Then number 2, so used in the business of transportation of passengers. Number 3, used for driving skills. These 3 cases, actually capacity does not exceed 13 is a block credit, but these 3 cases ITC available, other cases ITC not available. Then vessels and aircraft. Vessels and aircrafts is actually block credit, but 4 exceptions we have. Even though it is block credit, ITC available. What are they? So if it is used for further supply, used in the business of transportation of passengers, imparting driving skills. One more point, used for transportation of goods. So these 4 cases ITC available, other cases ITC not available. And then 4 services in relation to motor vehicle: repair and maintenance service, authorized service station services, then we have life insurance services, and hiring, renting and leasing of motor vehicles. These are the 4 services in relation to motor vehicles. I am purchasing motor vehicles, for that I will receive these 4 services. If motor vehicle is eligible for ITC, then these 4 services also eligible for ITC. If motor vehicle purchased is not eligible for ITC, on these 4 service ITC not available. For example, I am purchasing, a company purchase a car for transporting its employees. Car capacity does not exceed 13, not covered under exception, so it's a block credit. Instead of purchasing the car, if they take the car on rent, on the rental charges whatever GST paid, can they take as ITC? No. So because as the car purchase is block credit, so these services in relation to car is also block credit, like that. So further supply means what? Purchase and sale of motor vehicles or motor vehicles given on rent. Repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. There is no restriction at all. Generally, when you take bumper to bumper insurance and something happened to that vehicle, accident, then in that case, so insurance company will make the payment. So now insurance company receives the repair services. Can they take ITC with respect to that? Yes, there is no restriction. Then suppose if hiring, renting and leasing a motor vehicle is under a statutory obligation by employer to employee, then in that case whether ITC available? Yes. Suppose if a company is required to provide the cab facility to their employees mandatorily who are working in night shifts, now if they receive rent a cab service, can they take ITC? Yes, because it is under a statutory obligation. Then construction related block credits. So far what we have discussed is motor vehicle related block credits. Now construction related block credits, that is I am into construction, that is I received any service or I received works contract service or I purchased any goods for construction of an immobile property, ITC not available. Now there are 3 exceptions. The restriction is only to the owner of the property, not to the supplier. Suppose if there is a works contractor or a builder, he purchased the material for the purpose of providing construction to his client, can he take ITC? Yes, he can take ITC. The restriction is only to the owner of the property, not to the supplier. Then second, if the construction expenditure is charged to P&L, then we can take ITC. And then number 3, if that construction of immobile property is plant and machinery. So plant and machinery other than telecom towers or pipelines laid outside factory, other than these 2. So then in that case also ITC available. So the above discussion is not applicable to supplier, only to the owner of the property. Construction of plant and machinery, even though immobile ITC available, plant and machinery excludes telecommunication towers and pipelines. If construction expenditure is charged to P&L, then also ITC can be availed on inward supplies. Then other blocked credits. Membership of a club, health and fitness center is a blocked credit. So any membership of a club, health and fitness center, but exception is suppose if it is provided by employer to employee under a statutory obligation, ITC available. Then travel benefits extended to employees on vacation. So suppose if a company is making payment to the employee who is going on a vacation. So then on that whatever GST paid cannot be taken as ITC on the travel expenditure. Suppose if the employee is going on a business visit, yes. So travel expenditure GST paid can be taken as credit. And what is the exception? Statutory obligation provided by employer to employer under a statutory obligation. Then NRTP, non-resident taxable person, is a person who come from outside India to India, who is not having any physical place of business in India, and this person, so whatever GST that is paid in India, he cannot take as ITC. He is required to register, and that to compulsory registration. Only on one inward supply he can take ITC, that is on import of goods. IGST paid can only be taken as ITC. Then next, food and beverages, beauty treatment and insurance. Food and beverages, outdoor catering, beauty treatment, then insurance, life insurance and health insurance is block credit. But we have three exceptions to this. Exception number 1, inward supply, outward supply, same category. That is, I am running a canteen, I buy food and beverages, I sell food and beverages, I can take ITC. And number 2, that is inward supply, part of outward supply. I am into the business of transportation of passengers by air. I also provide food facility, so I will be receiving outdoor catering service. Inward supply is part of outward supply, so I can take ITC. And then exception number 3, statutory obligation. Suppose as per Factories Act, I need to provide food to my workers working in the factory. Now I receive the outdoor catering service. Can I take ITC? Yes, because it is under a statutory obligation. Then other block credits from a person opting for composition scheme. Yes, because first of all, the person opting for composition scheme should not charge GST. Even if he charges to you and you have paid it, you cannot take it as ITC. Then any goods purchased for personal consumption, you cannot take ITC. Then goods lost, stolen, written off. So you purchase some goods which are lost, stolen, destroyed, written off, or you disposed it as gift or free sample, block credit. But for this gift or free sample, we have an exception. What is that? If that gift or free sample becomes supply, then we can take ITC on that. Okay. This is about blocked credit, section 17. Then section 18. Section 18 talks about input tax credit in special cases. So we have 18 subsection 1, availment of ITC on closing stock. There are 4 situations wherein we can avail the ITC on closing stock. Number 1, a person who is liable to get registered and he is getting registered within 30 days. He is liable to get registered and make application for registration within 30 days. Number 2, a person who voluntarily gets registered. Number 3, a person who is under composition scheme going into normal scheme. Number 4, a person whose outward supplies were exempted now becomes taxable. In all these 4 cases, so there will be some closing stock on which they would not have availed ITC. Now they can avail the ITC. So which date closing stock should be taken? In the first case, before the date they are liable to get registered. Second case, before the date they got the registration certificate. Third case, before the date they are converting from composition scheme to normal scheme. And fourth case, before the date their exempted supply becomes taxable. So at that time, whatever is the purchases which is in closing stock, GST paid would not have availed as ITC. Now after this, they can take the ITC on closing stock. Now, what is the meaning of closing stock for the purpose of 18(1)(a), 1(b)? 1(a) is what? 18(1)(a) is liable to get registered and you are making application for registration within 30 days, and 18(1)(b) voluntarily getting registered. What is the meaning of closing stock? Inputs as such held in stock. Inputs in the form of WIP. Inputs in the form of FG held in stock on that. And what is the closing stock for the purpose of 18(1)(c), 1(d)? 1(c) is what? Composition scheme. You are under composition scheme, you are going into normal scheme, or a registered person whose outward supplies was exempted now became taxable. What is the meaning of closing stock? These 3 same, that is inputs as such held in stock, inputs in WIP, inputs in the form of FG held in stock. Extra we have capital goods also. On capital goods also we can take ITC. Which date closing stock should be taken? Immediately preceding the date of liable to register and immediately preceding the date of registration. Here immediately before the date they are going from composition scheme to normal scheme, and immediately before the date of conversion of exempted supplies into taxable. And what is the time limit for availment of ITC? So ITC should be availed within 1 year prior, in the sense like those closing stock should have been purchased within 1 year prior. For example, so today we are making like today is the closing stock, then the invoice date to the closing stock should be within 1 year. So invoice date to the closing stock date should be within 1 year. Then there are some special points in this regard. ITC with respect to GST paid on inputs can be availed. So whatever GST paid we can, but for capital goods we need to reduce. There is like a depreciation. So what is that? Minus 5% for every quarter or part thereof from the date of purchase till the date of conversion. So first we need to take ITC on capital goods. How much ITC can be taken on capital goods? capital goods are used. So we need to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion from the GST paid. Remaining amount you can take as ITC. And to take this ITC, we will not take this ITC by filing GSTR 3B. So we will be filing a declaration in form GST ITC 1, and in that form that should be certified by a CE or CMA if the amount exceeds 2 lakhs. And by when that form should be filed? Within 30 days. So suppose if it is 18(1A)(1B), within 30 days from the date when you get registration certificate. In case of 18(1C)(1D), within 30 days from the date of conversion. Then 18 subsection 3, transfer of ITC. Whenever there is transfer of business from one person to another person, in that case whatever is a balance in input tax credit in the electronic credit ledger of the transferor will be transferred to the electronic credit ledger of the transferee. For that purpose, transferor should be filing one form. What is that form? ITC 02. ITC 01 is for availment of ITC on closing stock. ITC 2 is for transfer of ITC. So where there is a change in constitution on account of sale, merger, demerger, etc., but it should be with specific provision for transfer of liabilities. The said registered person shall be allowed to transfer the ITC which remains unutilized in his electronic credit ledger to such sold, merged, demerged or transferred business. And transferor furnishes details of the transaction on sale in ITC 02, and that should be certified by a CA/CMA about what? That this transfer of business is with specific provision for transfer of liabilities. Then in case of demerger, credit shall be transferred to the new entities in what ratio? Suppose if it is a merger, say for example A Limited and B Limited gets merged into AB Limited, Now whatever is the balance in the ITC from A Limited will go to AB Limited. So they will file one ITC 2. Same way, whatever balance that is there in B Limited will also go to AB Limited. So they will be filing one ITC 2. So A Limited and B Limited, whatever credits that are there, that will go to AB Limited. Correct? This is in case of amalgamation. Suppose if there is a demerger. So amalgamation or merger, no issue. But in demerger there is a problem. Say for example, AB Limited is getting demerged into two entities, A Limited and B Limited. Now single ITC is there. So how that ITC should be transferred? So we need to take the assets ratio. So what is the assets? Total assets ratio. What is the total assets of A Limited and B Limited? Assets of A Limited is 100 lakhs. Assets of B Limited is 60 lakhs. This is the assets. And what is the ITC that is there? 5 lakhs. So then what we need to do? So ITC transferred to A Limited. ITC transferred to A Limited will be 5 lakhs into 100 divided by 60. So 100 by 160. 100 divided by 160 will be given to A Limited. So 5 lakhs into 100 divided by 160, that will be 3,12,500 will be ITC transferred to A Limited. Same way, ITC transferred to B Limited. ITC transferred to B Limited will be same. 5 lakhs into 60 divided by 160. So that is the balance. Okay, that will be 1,87,500 will be transferred. So in what ratio? In the assets ratio. In the assets ratio we need to transfer. Okay, and whether that assets is the assets on which ITC availed or not. Okay, then transfer or change in ownership also includes change in ownership due to death of sole proprietor. So when there is a death of sole proprietor also, this 18(3) will be applicable. So from the sole proprietor, whenever the business is continued by the successor, so ITC will be transferred. And one more case, when a single registration is getting separated into multiple registrations, and from that single registration whatever ITC that is there, that will be transferred to multiple registration, same way on the assets ratio as on the date of registration. For example, so A Limited is having a business, having 3 businesses in Tamil Nadu. So they are having business in Chennai and Madurai and Salem. They are having business in 3 places. Now in that case, they obtained a single registration. So they had a single GSTIN, and in that single GSTIN, the ITC balance was 5 lakhs. ITC balance was 5 lakhs. Now they are obtaining 3 registrations now. So single registration is getting separated into 3 registration. What is the assets ratio? So the assets ratio is say 50 lakhs in Chennai and 30 lakhs in Madurai and 20 lakhs in Salem. This is the assets. Okay, this is the total assets. So now the registration, single registration is getting separated into multiple registrations. Now that 5 lakhs will be transferred. So ITZ, how much ITZ that will be transferred to these three entities? ITZ that will be transferred to these entities is 5 lakhs into 50 divided by 100. So that is 2,50,000. 2,50,000 will be given to Chennai, and then so 30 divided by 100. 5 lakhs into 30 divided by 100, that is 1,50,000 to Madurai, and balance will be given as ITZ to the other entity. So what is that balance? So 1 lakh. So 1 lakh will be given to Salem. So like this it should be done. Okay. Next, when a single registration gets converted into multiple registrations in the state, then also ITZ against a single registration can be distributed to multiple registrations by filing form GST ITZ 2A. Assets ratio on the date of new registration should be considered for this purpose. Then now section 18 subsection 4 read with section 29 subsection 5, reversal of ITZ on closing stock. When this reversal of ITZ on closing stock will arise? In 3 cases. That is, you are under normal scheme and you are going into composition scheme, normal scheme to composition scheme, or the taxable supplies becomes exempted supplies, normal scheme to composition scheme, opposite of 18(1)(c). So composition scheme to normal, now opposite is, so that is you are under normal, you are going into composition, or you are making taxable supplies to exempted supplies, or cancellation of registration. In these 3 cases, we need to take whatever is the closing stock. So a closing stock is inputs as such held in stock, inputs in WIP, inputs in FG. On that inputs, how much ever ITC we took, that we need to reverse. On capital goods also we need to reverse the ITC, but how much? So total ITC availed on capital goods divided by 60, because 60 months will be taken as the life of the capital goods into balance life. So proportionately we need to do the reversal. So while availing, we avail GST paid minus 5% for every quarter or part thereof from the date of invoice till the date of conversion. Whereas here while reversing, so total ITC on capital goods divided by 60 months into balance useful life, we need to do the reversal. Then next, inputs and capital goods can be purchased anytime. So in case of 18(1)(c) 1D, there was a restriction that it should be purchased within 1 year for the closing stock. So but it is not there. So here there is no time limit for reversal. So if ITC not availed on such inputs and capital goods, reversal shall not arise. So suppose if capital goods is purchased 5 years before, so then also reversal shall not arise. Then Tran 1 credit should be considered if the inputs and capital goods are purchased in earlier tax regime. So in earlier tax regime, if they have purchased, then it converted into GST. So they would have filed one Tran 1 form. So in the Tran 1, whatever credit is there, that should be taken. If invoice pertaining to such inputs is not available, say that inputs we have taken the credit, now it is in the closing stock and we need to reverse, but that invoice is missing, then we need to take market value. We need to take market value, and that will be duly certified by a CA-CMA. And what are the ITZs that needs to be reversed will be filed in ITZ 3. So far we have seen 4 forms: ITZ 1, availment of ITZ on closing stock; ITZ 2, so that is for transfer of ITZ; and ITZ 2A, single registration getting separated into multiple registrations; then ITZ 3, reversal of ITZ on closing stock. Suppose if there is any balance in ITZ even after reversal, it shall be lapsed. That is, so ITZ on closing stock, ITZ on closing stock, if you see, ITZ on closing stock is 1,50,000. Balance in ITZ is 3 lakhs. Okay, balance in ITZ is 2,70,000. Then what will happen? So first we will adjust 1,50,000 out of 2,70,000. Okay, so what we will do? First we will take balance in ITZ 2,70,000, and from this we will reduce ITZ on closing stock. ITZ on closing stock, how much? 1,50,000. Now whatever is the balance, that shall be lapsed. Balance lapsed. Balance in ITZ that shall be lapsed. That will be, so 1,20,000. 1,20,000 is the balance in ITZ that shall be lapsed. Suppose if the ITZ on closing stock is 1,50,000, but we have only 1 lakh in the balance. So 1,50,000 will be adjusted 1 lakh. Still 50,000 we need to pay. So if there is any shortfall for reversal, then such shortfall shall be payable using cash ledger. And this computation should be made separately for CGST, SGST and IGST. Then 18 subsection 5 we don't have. 18 subsection 5 is related to application of rules. 18 subsection 6, that is in case of capital goods, we purchase capital goods. On that capital goods GST paid is availed as ITC. Now that capital goods are disposed of. When the capital goods are disposed of, what we need to do? We need to first take ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal. Say for example, on 15/4/2021 we purchased capital goods, and that capital goods value is 10 lakhs. On that GST is excluding GST at the rate of 12%. So, and what we did, we disposed it off, we sold it, okay, sold on 25/11/2022 for 7,50,000 excluding GST at 12%. Okay. Now in this case what we need to do, as per section 18 subsection 6 we need to compute the GST payable. So first so much of the ITC availed minus 5% for every quarter or part thereof. How much ITC would have been availed? 10 lakhs into 12%, 1,20,000 minus 5% for every quarter or part thereof from the date of purchase till the date of disposal. Here we need to take calendar quarter. Calendar quarter means, so April, May, June, that is one quarter. Then July, August, September, one quarter. October, November, December, yet another quarter. So 3 quarters in 2021. Then next year 2022, Jan, Feb, March, April, May, June, July, August, September, October, November, December, even quarter or part thereof. So total 7 quarters. Okay, 7 quarters we need to reduce. So 7 quarters into 5%, 5% for every quarter or part thereof. So 7 5s are 35. So 1,20,000 minus 35% we need to reduce, that will be 78,000. This is A. Or B. B is what? GST on sale value. What is the sale value? 7,50,000. 7,50,000 into 12%. 7,50,000 into GST on sale value. So 7,50,000 into 12% comes to 90,000. So what is the GST payable? Whichever is higher. Whichever is higher, that is 90,000 will be the GST payable. So we have purchased some capital goods. On that capital goods GST paid is availed as ITC, and that capital goods are disposed of. Then in that case, so what will be the GST payable? ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal, or GST on sale value, whichever is higher. So 90,000 will be taken. And this section is not applicable in case of refractory bricks, which are used in the factory for kilns to heat the equipments, then molds and dies, jigs and fixtures. These 3 goods sold as scrap, then this section is not applicable. Then what we need to do? We need to pay normal GST on sale value. Okay, then in that case we will pay GST on sale value, normal sale value, that's it. Okay, we will not do this computation, ITC avail minus 5%, all these things we will not do. So with this, input tax credit is over. We completed input tax credit, a big topic, but this is what you need to remember. All key points I have covered. Okay, then in case of original literary, 1 year lock-in period starts from the date, that is the date on which they opt. That's how 1 year will be computed. Okay, then series of question discussion. Already I have done all past exam question, RTP question and MTP questions. So it is there in my app. So therefore you can see that fast track batch. So for 500 rupees only, so it is being provided to our students, that to those who purchase the revised book, it is given to them. So you can check that. Okay, so all the questions I have discussed in that itself. And I will be doing a 50 questions, mighty 50. So the top 50 questions discussion I'll be doing, and this I'll be doing it 1 day before the exam. Okay, so but definitely that will also be done. If the time permits, I will do it now itself, in the sense like even before that itself. And even consolidated questions, like many students are finding it difficult in attempting the first question. So that consolidated question discussion also I will put it in the YouTube. You can check that. Okay. So then the next chapter is registration. Registration, first we need to understand. So total we have 9 sections in registration chapter. section 22 to section 30. Section 22, 23, 24 talks about the legality of registration. Section 22, when a person is required to get registered. Section 23, exemption from registration. Section 24, that is compulsory registration. And section 25 is 25, 26, 27 procedural. 25 talks about the procedure for registration. 26 deemed registration. 27 special provisions applicable for CTP and RTP. Then 28, 29, 30. 28 is amendment in registration. 29 cancellation of registration, and 30 is revocation of cancellation. So first, section 22 says a person is required to get registered whenever their aggregate turnover exceeds the threshold limit. What is that threshold limit? So suppose you are doing business in one state or you are doing business in multiple states. You are doing business in one state. Now that one state is MMTN, Manipur, Mizoram, Tripura, Nagaland. So you are doing business in one state. 3 points you need to remember. Is that one state MMTN? In MMTN, Manipur, Mizoram, Tripura, Nagaland. Manipur, Mizoram, Tripura, Nagaland. Yes. Then the limit will be 10 lakhs. Suppose if that state is in U stamp, Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya. Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya, and P, Puducherry. U stamp states. Yes. Then the limit will be 20 lakhs. Let it be goods or services. All states, if you are exclusively engaged in supply of goods, it will be 40 lakhs. Other cases, it will be 20 lakhs. Only goods 40 lakhs, both goods and services 20 lakhs, only services 20 lakhs. Then some important points in this regard. Aggregate turnover should be computed on an all India basis and not state wise. And the limit of 40 lakhs is applicable only in case of exclusive supply of goods. Then if a person is engaged in exclusive supply of services or supply of both goods and services, the limit of 20 lakhs or 10 lakhs should be considered. Then suppose if the supplies are made from multiple states. And so 3 points you need to remember again. Number one of the state is a special category state and taxable supplies are made from that state. 2 conditions. One of the state is a special category state. For example, Tamil Nadu, Karnataka and Nagaland. One of the state is a special category state. And taxable supplies and exempted supplies are made from this state. Then taxable supplies 4, 8, 2, exempted supplies 4, 2, 1. Okay. So now we need to take the aggregate turnover. What is that aggregate turnover? The aggregate turnover will be 4 plus 4 plus 8 plus 2 plus 2 plus 1, that is 21 lakhs. Okay. Now what is the applicable threshold limit? As one of the state is a special category state and taxable supplies are made from that state, the applicable limit will be 10 lakhs. So as it exceeds 10 lakhs, therefore they are required to get registered like that. Okay. So one of the state is a special category state and taxable supplies are made from that state, then in that case 10 lakhs is the limit. So then if supplies are made from multiple states and none of the state is MMTN U stamp, and exclusively engaged in supply of goods 40 lakhs. So one of the state is a special category state and taxable supplies are made from that state 10 lakhs. None of the state is MMTN U stamp and supply of goods 40 lakhs. In all other cases, it will be 20 lakhs, balancing figure. Then, so 40 lakhs limit is not applicable in case of persons who voluntarily get registered or who are compulsorily required to get registered. Also, persons who are exclusively engaged in supply of certain notified goods. What are those notified goods? Pan masala, tobacco and tobacco products, ice cream, edible ice. Then we have bricks and roofing tiles extra. So now that is an amendment. So persons who are exclusively engaged in supply of these goods cannot get 40 lakhs limit. It will be 20 lakhs only, even though they are engaged in supply of goods, but 20 lakhs limit only will be applicable. So persons making supply of ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles. That aerated water is not there. That is for whom? Composition scheme. And here person who is making supply means let it be manufacturer or trader. This will be applicable. Then section 22. So section 22, liability to get registered, we have just now seen. As and when aggregate turnover in a financial year exceed threshold limit, as discussed above, they need to register. Exempted from registration, section 23, who are exempted from registration, they are exclusively engaged in exempted supplies. Okay, exempted supplies includes non-taxable supplies. Agriculturist who is engaged in cultivation of land and selling the produce out of cultivation of land, not at all required to register whatever may be the turnover. Then supply covered under RCM. So my outward supply is fully covered under RCM, I am exempted from registration. These are the 3 cases a person is exempted from registration, not at all required to register. Then compulsory registration in 22. In 22 itself there is compulsory registration. That is, if you are already registered under earlier law, you should also register under the current law, and if there is any transfer of business, the transferee should register, and if there is any amalgamation or merger, that then also that newly formed company should register. But this compulsory registration under 22 is we need to register, and we can make application for cancellation of registration if turnover falls below the threshold limit. The difference between compulsory registration in section 22 and the compulsory registration under 24 is that in case of 22, so register and then make application, then apply for cancellation, if aggregate turnover falls below threshold limit, okay. But that is not possible in case of compulsory registration under section 24. Compulsory registration under section 24, definitely you need to register whatever may be your threshold limit. Then what are the cases where a person is compulsorily required to get registered? You remember it as I creations. I for interstate supply of goods, not services, interstate supply of goods. C for casual taxable person other than handicrafts. I also interstate supply of goods other than handicrafts. Handicrafts means a good should be made completely out of hand, then only it will be called as handicraft goods. Then R for recipient liable to pay GST under RCM. Then E, e-commerce operator, compulsorily required to get registered. A, agent making supply on behalf of principal. Then T, TDS deductor. Then so TI, input service distributor. O, OIDR supplier located outside India, making supply to non-taxable recipient in India. N for non-resident taxable person, NRTP who come from outside India to India, and casual taxable person come from other state to this state. And S for supplier of goods through e-commerce operator, okay. So bricks can be made out of fossil, or bricks can be made out of clay, any kind of bricks, okay. What you need to remember is bricks and roofing tiles. Bricks made up of fossil meals, which means that so there will be like lot of dead bodies or something fossil inside the earth. So that would have been converted into a kind of white color rock. So that bricks made out of that, okay. So everything will be covered. So you just remember bricks and roofing tiles. So then, so this 24, irrespective of threshold limit, they need to register. Then an important point, suppose if a person is making outward supply under RCM, so he is exempted from registration. He has some inward supplies on which he need to pay GST under RCM. Then as per 24, he is compulsorily required to get registered. Now which section will prevail? Section 23 overrides every section. So section 23 only will prevail. Means one, he is exempted from registration, he is exempted from registration. Then section 24 overrides 22 subsection 1. So section 24 compulsory registration is when, so generally a person is required to get registered only when aggregate turnover exceeds threshold limit, but section 24 says they are compulsorily required to register even if aggregate turnover does not exceed threshold limit. That is that point. Then, so three sections we completed, 22, 23 and 24, 25, procedure for registration. So when a person is required to get registered, we have seen, and what is the procedure for registration? 6 forms we need to know: REG1 application for registration, REG2 acknowledgement, REG3 notice, and REG4 reply to the notice, REG5 cancellation, that is rejection of application, REG6 certificate of registration. Now whenever you make REG1 application, acknowledgement will be generated immediately, and within 7 working days either they need to give notice in REG3 or they need to give certificate in REG6. And suppose if they are giving notice in REG3, then we need to give reply in REG4 within 7 working days. Once we give reply within 7 working days, from the date when they received our reply, within 7 working days from that date, either they need to cancel in REG5 or they need to give certificate of registration in REG6. So these are the time limits that we have. Then, so this procedure for registration is not applicable in some cases, that is not U. N for non-resident taxable person, O for OIDR supplier, TDS, TCS deductor, and UIN, unique identification holder. Who is a unique identification holder? So unique identification holder means there is UN agency or embassy, UN agency or embassy or consulate, okay. UN agency or embassy or consulate. So these people are known as, UIN holder. These people are known as UIN holder. So these people are also not required to follow the procedure for registration above. Then other authentication is mandatory. So that is every person who is making application for registration should complete the Aadhaar authentication, and that Aadhaar authentication should be completed within 15 days from the date of submission of Part B of REG 1. So whenever they make application in REG 1, so Part B, within 15 days they need to complete. Then the date of authentication will be taken as the date of application. Okay, means within 15 days they need to do. What will happen within 15 days they are not doing? So then it is deemed that the application is filed without Aadhaar authentication, and the registration will be granted subject to physical verification of the place of business. Okay, then applicability of Aadhaar authentication, to whom it is applicable and to whom it is not applicable. So for individual or sole proprietor, if you take, every citizen of India should undergo authentication, but if he is not a citizen of India, not required. HUF, in case of HUF, only Karta is required to undergo authentication, others not required. Firm or LLP, only authorized or managing partner required to undergo authentication, but others not required. Company or body corporate or any other entity, only authorized signatory required to undergo authentication, others not required. And in case of government and its family, central government, state government department, local authorities, statutory body and public sector undertaking, they are not required. And last, UIN holder. So these people are not required to undergo authentication. Okay. So even if they are registered or desirous of getting registered, they are not required to undergo authentication. Then there is something called as deemed registration. So simply you remember, you can make an application with authentication or without authentication. You can make application, okay, by selecting authentication or without selecting authentication. You can make an application by selecting authentication, or without selecting authentication, without selecting Aadhaar authentication. Okay, you can make an application by selecting Aadhaar authentication or without selecting Aadhaar authentication. If you make a application by selecting authentication, you can complete or not complete. You may complete authentication or you may not complete authentication. If you complete authentication, okay, you may get notice or notice not issued. Notice issued, notice issued, notice not issued, notice not issued. Okay. So now these are the total 4 points that we have for deemed registration. This is the logic. First, application divided into two, selecting authentication without selecting authentication. That selecting authentication again divided into complete, not complete. Then again complete, you completed but notice issued, notice not issued. Now suppose you have made an application without selecting authentication. What is the time limit within which the registration certificate should be given? Within 30 days from the date of application. Aadhaar authentication not opted and registration not granted within 30 days. Not granted within 30 days from the date of application, deemed registration. Okay, not granted within 30 days. Registration not granted within 30 days, deemed registration. Okay, within 30 days not granted, deemed registration. Then you selected authentication, but you did not complete authentication within 15 days. So first 15 days to complete the authentication from the date of application, and if you are not completing, then only 30 days will come. So 15 days plus 30 days. Aadhaar authentication not completed within 15 days, then within 30 days after expiry of such 15 days, registration is deemed to have been granted. Then selected authentication and you completed and notice is also issued. Then in that case, selected authentication and you completed and notice is also issued. Then after notice, you gave a reply to the notice. Within 7 days from reply, within 7 days from reply, they have not granted registration. Okay, say this, that is Aadhaar authentication completed and neither REG 5 or not REG 6 granted within 7 working days from reply in REG 4, then also deemed registration. And then notice not issued. Notice not issued means we make an application and within 7 working days, 7 days, okay, here 7 days is 7 working days, 7 working days, within 7 working days from application, so they have not granted registration. Okay, so that is the first point, that is Aadhaar authentication completed and neither REG 3 nor REG 6 within 7 working days, then also deemed registration. These are the 4 points in deemed registration. Very important short note question, if it is asked, you need to write these 4 points. Okay, then what is the time limit for making application for registration? So within 30 days from the date you are liable to get registered, but in case of CTP, NRTP, at least 5 days before commencement of business, they need to make application for registration, that is this. And then special provision relating to CTP NRTP section 27, that is, what is the maximum validity? That is, maximum validity of registration is 90 days. Number of days they are seeking registration are 90 days, whichever is lower. And after 90 days, if they want to extend for a further period of 90 days, it is possible on sufficient grounds being satisfied, and for that they need to make application for registration again. And at the time when they go for application for registration as a CTP NRTP, they need to deposit advance tax. How much advance tax to be deposited? Their net tax liability. How much is their net tax liability that they need to estimate, and that estimated net tax liability they need to deposit. That deposited amount will go into the cash ledger, and the balance in the cash ledger will be used for payment of their liability. If there is any excess amount, that will be refunded to them at the time of cancellation of registration, or any shortfall they need to pay. Okay. Then this CTP NRTP difference is that CTP comes from other state to this state, NRTP come from outside India to India. Both will be coming occasionally, and they don't have any physical place of business. And CTP will get a normal registration, NRTP will get a special registration, and the application for registration of CTP is REG1, and the application for registration of NRTP is REG9. So that is REG9 here, REG9, okay, not REG10, REG9. And CTP will be filing regular returns, NRTP will be filing returns in form GSTR 5. And CTP will get the normal registration through permanent account number, whereas NRTP will not have a permanent account number. So based on passport, they will get the registration done. Then section 28, amendment in registration. So whenever we submitted the registration application initially, and if there is any change in that registration details, then we need to make an application for amendment in registration. This amendment in registration, we have two things, core fields and non-core fields. Three things are called as core fields, that is change in name, change in address, and change in top management. These three are called as core fields: change in name, change in address, and change in top management. And these three changes is subject to approval by the officer, whereas any other change, automatically the change will take place in the portal once we make application. And retrospective is possible only with the permission of the commissioner. And if there is any change in constitution resulting in change in permanent account number, if the permanent account number itself changes, then we cannot go for amendment, we need to cancel and go for fresh registration. What is the procedure for this? First, we need to file an application in REG 14 for the purpose of amendment within 15 days from the date of change. And once we make application in REG 14, then if everything is found in order in REG 15, within 15 working days, REG 15 within 15 working days, they will be passing the order for amendment. If not, then they will give a notice within 15 working days. So within 15 working days, they will give a notice, and we need to give a reply to the notice within 7 working days. After reply within 7 working days, either they need to reject the application or they need to pass the order. So this is the procedure that we need to follow in case of amendment in registration. Then section 29, cancellation of registration. When there will be cancellation of registration, total 8 cases. In that, the first 3 cases, either the registered person can make application for cancellation, or proper officer can initiate cancellation. That is, you transfer the business or discontinue the business, or you are no longer liable to get registered, or change in constitution resulting in change in permanent account number. Either registered person can make an application for cancellation, or proper officer can initiate cancellation. And now for making application for cancellation, other authentication is necessary. Then next, suo motu cancellation by the officer. If the registration has been obtained by fraud, if you have obtained registration by fraud, or you obtained voluntary registration and not commenced business within 6 months, or you have not filed returns for consecutive 3 periods in case of composition scheme, and consecutive 6 periods in case of normal scheme, and then contravention of the provisions of act or rules. These 5 cases, proper officer will initiate cancellation, and they will be giving a show cause notice in REG 17. When you make application, the application will be made in REG 16. Then what is the meaning of contravention of the provisions? Here you can see contravention of provisions that leads to cancellation. What is the meaning of contravention of provisions? So you are giving an invoice which is not a valid invoice. So first one is wrong address. Wrong address. You are not doing business from the place where you have obtained registration. Number 2, that is wrong invoice. Number 3, wrong ITC. You have availed the ITC in contravention of section 16. 3 wrongs you need to remember. That is wrong address. You are doing business in a different place. then wrong ITC, you are availing ITC in contravention, then wrong invoice. So these are the three wrongs. Then next, three violation of anti-profiteering, violation of anti-profiteering. So anti-profiteering provisions you have violated, and violation of furnishing bank details. Generally we need to furnish the bank details, okay, within 45 days. Within 45 days from the date we have obtained registration, so we need to furnish the bank details. 45 days from the date we have obtained registration or date of filing, due date of filing 3B, whichever is earlier, that is the time limit by which we need to give bank details. We have not given. And violation of rule 86B. Violation of rule 86B means that as per rule 86B, we need to pay 1% of our gross liability through cash ledger, 99% should be paid through credit ledger. So therefore this violation you have done, you have not followed that. So then also there will be contravention of provisions leading to cancellation of registration. Apart from that, liability in GST are 1 greater than 3B for one or more tax periods. So whatever you have reported in 3B 1 as your liability is more than what you have actually paid in 3B for one or more tax periods. So these are the 7 cases where it leads to contravention of provisions and that leads to cancellation of registration. Then whenever your registration is required to be cancelled, they will be suspending your registration. So once a registered person has applied for cancellation of registration or the proper officer seeks to cancel the registration, so they will be suspending the registration during the pendency of the proceedings, okay. So that is, suppose you make an application for cancellation. From the time you make application for cancellation till the conclusion of cancellation proceedings, our registration will be suspended. Suppose if they initiate cancellation, so then also whenever they specify till the time of conclusion of cancellation proceedings, our registration will be cancelled. During the period when our registration is suspended, so we cannot give tax invoice on outward supply and we cannot take ITC on inward supply by filing a return, okay. GSTR 3B. Then revocation of cancellation of registration, section 30, that is whenever they pass a cancellation order, so then within 30 days from the date of cancellation order, which can be extended for a further period of 30 days by additional or joint commissioner, extended for a further period of 30 days by commissioner, okay, we can make an application for revocation. Suppose if the cancellation is on account of non-filing of returns, we need to file the returns and we need to make application for revocation, okay. Suppose, so once we make application for revocation, if the officer is satisfied, so they will be revoking our cancellation order and then we can continue with the registration. So these are the points you need to remember for registration chapter. So total 9 sections we have completed, okay. So sir, is there any video about amendments in November 22 from May 22? So actually all those amendments I am covering in this. So separately if you want amendments material, you can download it from my website tharunraj.com. In the downloads you can see amendments material for November 22 exam from May 22. All the amendments I have compiled and I have given, you can follow that amendments, okay. So that is with respect to this part. So we will take a small break and then we will continue with the remaining topics. Okay friends, welcome back. So the next area that we are going to discuss is composition scheme. So composition scheme is a simplified scheme for payment of GST at reduced rates, and a person who is opting for composition scheme has got two disadvantages. What are the two disadvantages? That is, they cannot take ITC on their inward supplies, and moreover they cannot collect the GST. Whatever they pay to the government, they cannot recover that from the recipient. These are the two disadvantages of a person opting for composition scheme. Number one, they cannot take ITC on their inward supplies. Number two, they cannot recover the GST from the recipient. And there are two composition schemes, that is section 10.1 and 10.2a. Section 10 deals with composition scheme. 10.1 is applicable to manufacturer, trader and supplier of food service provider. Whereas 10.2a composition scheme is applicable to manufacturer, trader and any service provider. And 10.1 is applicable when the aggregate turnover during the previous year does not exceed 1.5 crores or 75 lakhs in case of 8 special states, then it will be applicable. So aggregate turnover during the previous year does not exceed 1.5 crores. So what are those 8 states for which 75 lakhs will be applicable? So those 8 states for which 75 lakhs limit applicable are, so MMTN, so the same, and then USAM, MMTN, USAM. So MMTN is Manipur, Mizoram, T for Tripura, Nagaland, then Uttarakhand, then Sikkim, then Arunachal Pradesh and Meghalaya. So these are the states for which 75 lakhs will be applicable. For other states it will be 150 lakhs. This is for 10.1. And so what is the benefit of reduced rates? So for a manufacturer, they need to pay 0.5% CGST, 0.5% SGST on the total turnover. A trader is required to pay 0.5% CGST, 0.5% SGST on the taxable turnover. But a service provider, supplier of food service provider, is required to pay 2.5% CGST, 2.5% SGST on the total turnover. This is about 10.1. In 10.2a, so to whom it is applicable? Manufacturer, trader, any service provider, and their aggregate turnover during the previous year should not exceed 50, only 50 lakhs, all states 50 lakhs. And what is the benefit of reduced rate? They need to pay GST instead of normal rate at 3% CGST, 3% SGST on total turnover. Then 10.1, what is the current year limit? Current year, same 1.5 crores or 75 lakhs. If they cross 1.5 crores or 75 lakhs during the current year, they are disqualified from the composition scheme for the remaining part of the year. Also next year they cannot. Same way 10.2a, it will be 50 lakhs. So current year up to 50 lakhs they will be under composition scheme. After crossing 50 lakhs they will be going into normal scheme. And difference in the condition. The difference in the condition is S9 RCM and 9 RCM. What is this S9 RCM? So S for service provider other than supplier of food or beyond 10% limit. A person who is opting for composition scheme under 10.1 can provide services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. A person opting for composition scheme under 10.1 cannot render any service other than supply of food, but they can render any service other than supply of food up to 10% of turnover during the previous year or 5 lakhs, whichever is higher. If they cross that limit, then they are disqualified from composition scheme under 10.1. Okay, so that is this. Yes. N for non-resident taxable person, NRTP. Then I for, so interstate supplies. Whenever you make interstate supplies, you cannot go for composition scheme. And another N is non-taxable supplies, that is petroleum products and alcoholic liquor for human consumption. E for supply of goods or services through e-commerce operator. This is S9. R for recipient liable to pay GST under 9.4 on which GST is not yet paid. C for casual taxable person. And M for manufacturer of notified goods. What are those notified goods? Those notified goods are ice cream, edible ice, pan masala, tobacco and tobacco products. Extra we have aerated waters, bricks and roofing tiles. This bricks and roofing tiles is latest amendment. So manufacturer of these goods cannot opt for composition scheme, but a trader of these goods can opt for composition scheme. Yes. So this is about S9 RCM. But in case of 10.2a, as any service provider can opt for composition scheme. So this yes point is not there and remaining are applicable. That's the difference in condition. What is the disadvantage in composition scheme? Already I told you, a person opting for composition scheme cannot avail ITC on their inward supply and cannot charge that composite tax to customer. So they shall issue bill of supply but not tax invoice. Then what is the meaning of aggregate turnover? We need to understand the meaning of aggregate turnover. So already we have seen aggregate turnover means taxable supply, exempted supply, non-taxable supply, zero rated supply. It excludes inward supply covered under RCM and taxes. Apart from this, you need to remember two more points for the purpose of aggregate turnover for composition scheme. That is, whenever there is interest on loans, advances, deposits, even though it is exempted, but that will not be coming in aggregate turnover. Also, pre-registration turnover will not come in aggregate turnover. So the meaning of all turnovers is given here. So aggregate turnover for determining the eligibility of composition scheme. We come across turnover in three places in composition scheme. One is aggregate turnover for determining the eligibility to opt for composition scheme. Second is turnover for computing the 10% limit. 10% of turnover during previous year or 5 lakhs, whichever is higher. So for that. And then next, turnover for payment of GST under composition scheme. Now for aggregate turnover, we need to take aggregate turnover, previous year aggregate turnover should be taken, and aggregate turnover will be always computed on all India basis. Taxable, non-taxable, exempted, zero rated, everything will come, but interest on loans, advances, deposits will be excluded, and non-taxable supplies will also be taken. Okay. So, but non-taxable supplies should not be there now, that should not be there for the current year. Previous year we can have non-taxable supplies, and even inward supply and taxes normal, pre-registration turnover will be included. What is pre-registration turnover? Say for example, I commenced business on 5/4, I commenced business, 5/4/2021, I commenced business. Okay. Now, exactly somewhere on 30/11, my aggregate turnover exceeds 20 lakhs. My aggregate turnover exceeds 20 lakhs. Okay. And what is my total aggregate turnover? Total aggregate turnover is 160 lakhs. Total aggregate turnover is 160 lakhs for the financial year. Now, so while taking the aggregate turnover from here to here, this 20 lakhs should also be taken. Yes. So which means what is the aggregate turnover? 160 lakhs. So not only post-registration turnover. So what is the pre-registration turnover? Pre-registration turnover is 20 lakhs and post-registration turnover is 140 lakhs. So both 20 and 140 should be taken, and aggregate turnover is 160 lakhs. So current year they cannot opt for composition scheme. So these are the changes you need to remember for aggregate turnover for determining eligibility to opt for composition scheme. Whereas what will be taken as the turnover for computing the 10% limit, that is also previous year turnover only, but it will be computed state wise. Aggregate turnover is computed on all India base, whereas turnover for 10% limit is computed state wise. Apart from that, everything is ditto same. There is no change. Everything is same. Even pre-registration turnover will be included. Then, what is the turnover for computation of GST under composition scheme? We need to take current year turnover and it should be computed state wise or union territory wise. And here we should not be having non-taxable supplies, interstate supplies and exports. Why? If you have non-taxable supplies, interstate supply and export, you are disqualified. A person who is making interstate supply of goods or services, or a person who is making non-taxable supplies, is disqualified from composition scheme. So it is not applicable. Then one more point is that pre-registration turnover is excluded. So what does it mean? It means that, say for example, current year we are under composition scheme. Okay, current year only we commence business. And up to say 4/5/2021 we commence business, and up to 30/9/2021 exactly our aggregate turnover was 20 lakhs, and thereafter up to 31st March 2022. So here the aggregate turnover, pre-registration turnover is 20 lakhs, and post-registration turnover is so 180 lakhs. Now in this case, for this 20 lakhs there is no GST. Why no GST? Because pre-registration turnover will be excluded, no need to pay. Then what about the post-registration? So for the next 150 lakhs it will be composition scheme, or next to 130 lakhs it is composition scheme. Next to 130 lakhs it is composition scheme, and beyond that 130 lakhs, 50 lakhs, it will be normal scheme. So for this 130 lakhs, composite rate, okay, composite rate, whereas for this 50 lakhs, it will be normal rate. Normal rate is payable. So therefore, first to 20 lakhs threshold limit, no need to pay GST, and thereafter, so up to 150 lakhs. So the difference on that composite rate and thereafter the normal rate. So this is the meaning of turnover for the purpose of payment of GST. So this differences we need to understand. So that is this meaning, aggregate turnover. Then person opting for composition scheme can provide service up to 10% of turnover during the previous year or 5 lakhs, whichever is higher, and exempted services by way of extending deposit should not be taken, and the tax rate applicable for these services, that is while computing the 10% turnover or 5 lakhs, whichever is higher, on that service what rate will be applicable? The rate applicable to a trader, whether they are trader, manufacturer or service provider, but for the services they need to take the rate applicable to trader, that is 1% on taxable turnover. Then some procedural provisions related to this, that is if a person is already registered, they need to apply for composition scheme in a form CMP2, and not already registered, now only they are getting registered in the registration application REG1 itself, they can select. But if they are already registered, they need to go for composition scheme, they need to wait till the end of that financial year. Only before commencement of the financial year we can go for composition scheme. If they are getting registered this year only, then directly they can make a registration application and they can go for composition scheme anytime. And a person who is opting for composition scheme should display that they are under composition scheme as composition taxable person on the every notice and signboard displayed at principal place of business and additional place of business, and they need to file a quarterly statement, quarterly return in CMP 08 by 18th of the month following every quarter, and they need to file an annual return in GSTR 4 by 30th April of the succeeding financial year. So a person opting for composition scheme will pay tax also 18th of the month following every quarter, file return also CMP 8 18th of the month following every quarter, and they need to file an annual return not 31st December of the succeeding financial year, 30th April of the succeeding financial year in GSTR 4. And what is the validity of the composition scheme? If all the conditions are satisfied, option remains valid. Suppose if the conditions are not satisfied, they need to come out of the composition scheme, and they have a grace days of 7 days. Within that they need to come out of the composition scheme. So CMP2 is for entry into composition scheme. Entry into composition scheme CMP2. Whenever we file CMP2 for entering into the composition scheme, we need to reverse the ITC on closing stock. So therefore we need to file ITC 3 for reversal of ITC on closing stock. Reversal of ITC on closing stock, we need to file ITC 3. Okay. So whenever we are entering into composition scheme CMP2, we will be filing one form ITC 3 for the purpose of reversal of ITC on closing stock. Same way, when we come out of the composition scheme, exit from the composition scheme is CMP4. CMP4 is for exit from composition scheme, and whenever we exit from the composition scheme, we can take the ITC on closing stock. ITC 1, availment of ITC on closing stock. Avail ITC on closing stock. Avail ITC on closing stock. So that is with respect to this. Okay, and then self withdraw, that is whenever, so before the date of withdrawal, they will be filing an application in form GST CMP4. So whenever they want to withdraw, anytime they can withdraw from the composition scheme. Suppose if they breach the condition, still they are continuing in the composition scheme and they are not eligible but continuing in the composition scheme. So then proper officer will issue a notice to them asking them to come out of the composition scheme. In notice is in CMP 5, and thereafter they need to give a reply to that notice within 15 days, and in CMP 6 thereafter within 30 days they will pass an order either allowing composition scheme or denying the composition scheme. So 5, 6, 7, 5 is notice, 6 is reply, 7 is order, and notice anytime and reply to the notice within 15 days, and within 30 days they need to pass an order. So that is this. So these are the overview of various forms that are involved. And then suppose if they pass an order denying the composition scheme, whether the denial is prospective or retrospective, it can be prospective or it can be retrospective, but not before the date they committed the breach. Say they committed breach on one day, thereafter they continued in composition scheme, thereafter proper officer identified. Now proper officer can give an order for denial of composition scheme prospective or retrospective backwards, but not before the date they committed the breach. Now whatever tax they already paid under composition scheme will be reduced from the tax they need to pay under normal scheme and the differential amount they need to pay. So that is about composition scheme. So with that we completed composition scheme. Now the next area is exemptions in GST. Exemptions. So this is a very important topic. So whenever we are learning exemptions, now we need to connect with person liability to pay GST under RCM. That is also to be understood. Okay. So first, agriculture related services. So exemptions in GST, agriculture related services. Any service in relation to agriculture or agricultural produce is exempted. So what is the meaning of agriculture? Agriculture means cultivation of plants and rearing of all life forms of animals other than horses. For what purpose we are rearing? For food, fiber, fuel, raw material or any other similar products. So that is agriculture. So any service in relation to agriculture, that service is exempted. Same way agricultural produce. Agricultural produce means the primary produce out of agriculture on which no processing is done. But some process as is usually done by a cultivator which does not alter its essential characteristics. So like coconut, tender coconut is agricultural produce. Even coconut is also agricultural produce. So then any service in relation to agricultural produce is exempted. Rice is not an agricultural produce, but because paddy to rice is not usually done by a cultivator, so rice is not an agricultural produce. But in case of rice, they have given few services as exempted. Loading, unloading, packing and storage of rice is exempted, these 4 activities. Then there are like artificial insemination of livestock. So through injections there will be reproduction. So for the purpose they will be doing artificial insemination. Other than horses will be exempted. Why? Horses, no exemption is available because horses is no way connected to agriculture. Then service by way of storage or warehousing of some goods, even though they are not agricultural produce, but its storage is exempted. What are they? Cereals and pulses, nuts and spices, jaggery, raw vegetable fibers such as cotton, flax, jute, unmanufactured tobacco, coffee and tea. So cereals and pulses, nuts and spices, jaggery, cotton, flax, jute, and then unmanufactured tobacco, coffee and tea. These 6 goods, even though they are not agricultural produce, but its storage is exempted. Same way, storage of minor forest produce like Ayurvedic herbs, shikakai, etc. These are all available in the forest. So storage of this minor forest produce is also exempted. Then number 8, fumigation in a warehouse of agricultural produce is exempted. Fumigation means so filling the warehouse with pesticides, insecticides, etc. So but that warehouse should be a warehouse to keep agricultural produce, then it is exempted. Okay. And copra, so in this list, if it is agricultural produce, I have not given. Copra is agricultural produce. Copra is dry coconut. That is also an agricultural produce. So whatever is agricultural produce, I have removed because anyhow storage and warehousing of agricultural produce is exempted because any service in relation to agriculture or agricultural produce is exempted. That's why. Then fumigation of a warehouse. A warehouse is a warehouse to keep agricultural produce. That warehouse is filled with fumigation, that is pesticides, insecticides, etc. For that charges collected will be exempted. Then slaughtering of animals. Slaughterhouses will kill the animals, take the flesh, pack it and sell it to the retails. So then whatever charges that these slaughterhouses are getting will be exempted. Then second one, pension services. Any contribution for pension scheme under Atal Pension Yojana or any state government pension scheme, for that pension scheme amount collected will be exempted. Then next, number 3, banking and other financial services. So in that first point, services provided by RBI is exempted. Services provided by RBI is exempted. Now services provided to RBI, if it is in relation to management of forex reserves, exempted, and any other service will be taxable. But in that, service provided by overseeing committee to RBI will be covered under RCM. Then next, transaction in money. Transaction in money without consideration, neither goods nor services. But transaction in money for a separate consideration will be treated as service. And if the consideration is represented by way of interest or discount, it is exempted. If the consideration is any other commission, charges, that will be taxable. Even interest on credit cards will be taxable. Interest involved in credit cards is also taxable. Then number 3, services provided by a banking company to its basic savings deposit account holders under Pradhana Mantri Jan Dhan Yojana. So under PMJDY scheme, some people will open the accounts, so nil balance accounts. To them, if any service is provided other than interest, interest is anyhow exempted, any other service that will be exempted. Then forex transactions, that is foreign exchange transactions between banks and between forex dealers, between banks and forex dealers is exempted, but between banks or forex dealers and the customers will be taxable and it will be covered under FCM. Then services by an acquiring bank. There is an acquiring bank which will do the settlement of the transaction with respect to card payments. Whenever we make a card payment, there is an acquiring bank which do the settlement, will take the money from the recipient and will be crediting it to the supplier. For doing this work, they will be getting a processing charges. So if the amount, if the swipe amount of the debit card or credit card or any card is only 2000 rupees, then on that processing fee will be there, but there is no GST on the processing fee. If the swipe amount exceeds 2000 rupees, there is processing fee. On that processing fee, GST is payable. Then business facilitator or business correspondent working for rural area is exempted. So business facilitator, business correspondent, agent of business facilitator, agent of business correspondent working for rural area, they get the commission is exempted. Whereas if they are working for urban area, it will be taxable. In that, business facilitator to banking company is covered under RCM, but business correspondent not RCM. Agent of business correspondent to business correspondent is only covered under RCM. So we can remember, like, business facilitator will never pay GST on their outward supplies and inward supplies. On their outward supplies, bank will pay. On their inward supply, the supplier will pay. But business correspondent always will pay GST. On their outward supply, they will pay. On their inward supplies also, agent will not pay, but they will pay. That is with respect to this. Then there is a financial intermediary in a multi-service SEZ, they get some money that is exempted. Just remember that there is a financial service intermediary where in multi-service SEZ in India, they provide services to the customers outside India, they get some money and that is exempted. That is the 7 points. Then in case of healthcare services, the following are exempted. That is any healthcare service in relation to, so that is a clinical establishment, healthcare service in a clinical establishment, authorized medical practitioner, paramedics, including ambulance service is exempted. What is healthcare services? Healthcare service means diagnosis, that is before treatment or care for any disease, illness, injury and pregnancy in any recognized system of medicine. But it does not include 3: hair transplantation, plastic surgery and cosmetic surgery. But these 3 also will come under healthcare service when? If it is to restore the anatomy of the body parts affected due to congenital defects, that is by birth, developmental abnormalities during the growth, or injury or trauma. So then in that case, it will come under healthcare service. This healthcare service can be in any recognized system of medicine in India. Yoga is also considered as a recognized system of medicine. Then the money collected will be exempted by authorized medical practitioner, clinical establishment, paramedics. Paramedics means those who assist the authorized medical practitioner, that is nurse, compounder, lab technician, physiotherapist will come into that. Then second point, cord blood banks will preserve the stem cells. For preserving the stem cells, they will collect some money that is exempted. Then veterinary clinic, healthcare service in relation to animals and birds is exempted. Then biomedical waste treatment operators. So these people will collect the medical waste from the clinical establishments. So whatever medical waste they will collect and they will dispose it off, for which they get some charges, that is exempted. Then clinical establishment means any place where the healthcare service is provided. Authorized medical practitioner means a person who is having minimum MBBS degree and registered with medical council. Paramedics means nurse, lab technician, physiotherapy. So renting of rooms to inpatients and food supplied, any service provided to inpatient is exempted. So food supplied to outpatients, visitors, etc. will be taxable. And there is a consulting doctor who provides service to the hospital, that is also exempted. Hospital providing the service to the patient is also exempted. Then there are some rehab professionals. These rehab professionals will be working in medical establishments, exempted. Educational institutions, exempted. If they are working in rehab centers, exempted, provided that rehab centers is established by central government, state government or charitable trust. Then there are some entry tickets which are exempted. So in that, irrespective of the ticket price, it is exempted. So first, relating to animals, zoo, wildlife sanctuary, tiger reserve, these 3 related to animals exempted, whatever may be the price. Then 3 entry tickets related to the place, that is museum, then national park and protected monuments. Then 2 tickets related to sports, that is FIFA Under 17 Women's World Cup 2020, AFC Women's Asia Cup 2022. Okay, these are the total 8 tickets which are exempted irrespective of the ticket price. Then there are some 9 tickets which are exempted only when the ticket price does not exceed 500. What are they? 4 related to performance, dance, music, concert and theatrical performance. Then 4 events, award function, circus, sporting event and pageant, beauty show, okay, 4 plus 4. Then planetarium, entry to planetarium. These are the 9 entry tickets which are exempted if the ticket price does not exceed 500. Then services by specified organizations. These are the specified organizations: ESIC, Employee State Insurance Corporation; CMPFO, Coal Mine Provident Fund Organization; EPFO, Employee Provident Fund Organization; SEBI, Securities and Exchange Board of India; NCCCD, National Center for Coal-Chain Development; IRDA, Insurance Regulatory and Development Authority; then Foreign Diplomatic Mission; National Pension System Trust. These are the specified bodies. These specified bodies getting consideration from any person will be exempted. Then insurance services, that is group life insurance service. Group life insurance service by Army, Navy, Air Force and Coastal Guard, Central Armed Police Forces. So these 5 cases: Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces, they will be getting money for group insurance. They will be collecting monthly contribution, that is exempted. Then there is one insurance company. There is one insurance company which is providing general insurance, but this general insurance service is provided under government notified schemes and it is exempted. Usually that government notified schemes will be for agriculture and farmers, below poverty line, women and infants, unemployed. So then it is exempted. Then life insurance. So there is an insurance company which provides life insurance under government notified scheme. How to identify? The scheme ends with the word Yojana. And even micro life insurance is also exempted if the sum assured does not exceed 2 lakhs. It should be a micro life insurance and the maximum sum assured should be 2 lakhs. Then it is exempted. Then insurance services provided to government is also exempted. So there is a government, to that government one person will be providing insurance services, one insurance company will be providing insurance services. Whatever money that is received will be exempted. Then reinsurance of any exempted insurance service is also exempted. That is, so first there is an insurance company which will be providing services which is exempted. So the outward supply of the insurance company is exempted. Now the insurance company takes reinsurance from another insurance company, that reinsurance is also exempted. If the main insurance is exempted, its reinsurance is also exempted. That is this point. Then charitable and religious services. Charitable and religious services. So here there is a charitable trust under 12AA. Wherever reference to 12AA is there, there is reference to 12AB also, because 12AA is the charitable trust and 12AB is also now a charitable trust. So wherever 12AA comes, 12AB is also included. So there is a charitable trust under 12AA, and the specified charitable activities they provide, for which whatever money they are collecting is exempted. What are those specified charitable activities? Public health, religion, spirituality, yoga. Okay, so public health, then advancement of religion, spirituality and yoga. Second point. First point, public health. Second point, advancement of religion, spirituality and yoga. Number 3, educational programs to physically, mentally traumatized persons, prisoners and persons over 65 years residing in rural area. Persons over 65 years, not generally, but residing in rural area. Residing in rural area. Then number 4, environmental preservation. These are the 4 activities that will be treated as charitable activities, and whatever money that is being collected, that will be exempted. Then services by an old age home run by central government, state government, charitable trust. There is a old age home which is run by central government, state government or charitable trust, and what is the money that they are collecting per month? 25,000 rupees, and they are providing old age home for a people aged 60 years or more. That is exempted, but that old age home should be run by central government, state government or a charitable trust. And then services by a person by way of conduct of religious ceremony, that is Pandit, Purohit, priest, whatever money they are collecting, exempted. Then services by special organizations for religious pilgrimage. There are 2 religious pilgrimages, Kailash, Manasarovar and Hajj, and for that whatever special organization conducting the tour will be exempted. Then education services, what are exempted? Services provided by an educational institution to its students, faculty and staff is exempted. So there is an educational institution, and that educational institution providing service to its students, faculty and staff, whatever money that educational institution collected will be exempted. And what is the meaning of that educational institution? Educational institutions are divided into 3. Category 1 up to 12th standard, category 2 that is so beyond 12th standard and for obtaining a qualification recognized by law. So then category 3, approved vocational education. So all these 3 category institutions, fees collected will be exempted. Now services provided to educational institution. Now educational institution is not the supplier, educational institution is the recipient. In that, transportation, then catering, security and housekeeping, these 4 services in relation to category 1 is only exempted. Transportation service, security, catering, housekeeping service to category 1 is exempted. Category 2 and 3 will be taxable. Then, so admission to the educational institution or conduct of examination of the institution, all 3 category institutions it is exempted. Then say like online periodicals and journals, only for category 2 it is exempted. So this is the exemption with respect to service provided to educational institution. So this is service provided by educational institution. Then suppose if there is an educational institution which will conduct the entrance examination, and for conducting the entrance examination, if they conduct any entrance exam fee, that is exempted. Then under DDUGKY, Deen Dayal Upadhyaya Gramina Kaushal Yojana, there will be some training providers who will go to the rural area and provide the training in skills for which they collect some money, that is exempted. Then services provided with respect to training program for which 75% of entire expenditure, for which greater than or equals to 75% of entire expenditure is borne by government. So then it is exempted. Previously it was 100% expenditure borne by government exempted, but now it is greater than or equals to 75% of the entire expenditure is borne by government, then it will be exempted. Okay. Then next there is a skill development corporation, National Skill Development Corporation or Sector Skill Council or assessment agent or training partner under this National Skill Development Corporation or Sector Skill Council. If they offer any skill development program, that will be exempted. Then training in recreational activities relating to arts and culture, any arts that can be, you know, dancing, singing, etc., culture, languages, so that is exempted. But recreational activities relating to sports is exempted provided they are registered as a trust, section 12A8 trust. Then services by assessment bodies under skill development initiatives, that is there will be some people, assessment bodies, who review the curriculum, so for which they get some money paid by the government, that is exempted. Then suppose if there is an Anganwadi school, for that Anganwadi school if catering service is provided, is it exempted or not? Yes, it is exempted, because Anganwadi school will come under education institution category 1. So supply of catering services to category 1 institution is exempted. Then whether examination board, government examination board which will conduct the exams will be treated as educational institutions. Yes, so whatever entrance exam fee collected by them will be exempted. Then next one, transportation services provided by government. Services provided by government divided into 2: specified activities which are covered under supply and other activities excluded from supply. What are the specified activities which are covered under supply? 4 activities: Department of Post, transportation of goods or passengers, airport or port, and services to business entities. So these are all covered under supply. In this Department of Post, so we have exemptions, that is, what are the services which are exempted? What are taxable? We will see. Speed post, express parcel post, life insurance and agency service. These 4 are only taxable. All other services are exempted. Okay. These 4 services are taxable. Then transportation, we need to refer to the transportation chart. Airport or port always taxable. Services to business entities, we have some specific exemptions, 15 specific exemptions and 2 general exemptions, and in other cases it will be taxable. What are those specific exemptions? Municipality or Gram Panchayat services like water charges provided, water charges collected for supply of water. Then interdepartmental services, so say income tax department receiving service from state police department, that is exempted. Then there is a telecom spectrum. This telecom spectrum belongs to government. They are allocating this telecom spectrum before 1/4/2016. Both one-time charges as well as annual royalty will be exempted. Assignment of right to use natural resources. On or before 1/4/2016, only one-time charges is exempted, but the annual royalty will be taxable. Right to use natural resources to individual farmer, it can be assigned anytime, and both one-time charges and annual royalty is exempted. Merchant overtime charges under customs. So customs will be working after office hours, for which they will be collecting some extra charges called as merchant overtime charges. That merchant overtime charges is exempted. Then share of profit petroleum, that is along with royalty, sometimes government will also be receiving a share of profit. So that share of profit is known as profit petroleum. That profit petroleum collected by the government will be exempted, but royalty will be taxable. Then safety certificate charges, for giving safety certificate, officer will collect charges, that is exempted. Then registration charges under any law for the time being in force, vehicle registration, building registration, land registration, all those registration charges. Then consideration for tolerating an act, that is we entered into contract with government, we breached the contract for which they are collecting some damages, so that damages collected will be exempted. Then fee for birth certificate, death certificate, driving license, visa and passport, for these 5 certificates they will collect some money, that is exempted. Then guarantee commission, when they give loans to the public sector undertaking, banks give loans to the public sector undertakings, government will guarantee the loans taken by PSU, for which PSU will pay guarantee commission to the government, that is exempted. Then excess royalty collection contractor, so excess royalty collection contractor is an intermediary who collects the variable royalty and who gives the fixed royalty to government. So as already on variable royalty, leaseholder will be paying GST, so excess royalty collection contractor is not required to pay, he need to pay only on the difference between fixed royalty and the variable royalty. Then these 2 points are amendments, that is fee for FSSAI license from food business operators. So food business operators is required to get a FSSAI license, for which they pay some charges, that is exempted. Then national permit charges or state permit charges for movement of vehicles between 2 states, so that national permit or state permit charges is exempted. Then apart from these 15 specific exemptions, any other service we need to check whether it comes in the general exemption. In that, the first point, services other than renting of immovable property, so to a business entity whose turnover during the previous year does not exceed threshold limit, for example advertisement services, advertisement service is not in the list of 15, so that is provided to a business entity whose turnover, that is the business entity turnover during the previous year does not exceed threshold limit, so this service is exempted. Then number 2, so this number 2 is if the value of supply does not exceed 5,000, then it is exempted. These 2 are independent exemptions, okay. If the value of supply does not exceed 5,000 per invoice, for example, so police department provided security services to Taj Hotel, which is not there in the list of 15 exemptions, and Taj Hotel turnover during previous year exceed threshold limit, so we need to see how much charges collected, 3,000, it does not exceed 5,000, therefore it is exempted, like that, okay. Now apart from these specific exemptions and general exemptions, remaining cases services provided by government to business entity will be taxable. And so first one, Department of Post taxable FCM, second transportation depends, airport or port FCM, services to business entities majority RCM, but only one case it will be FCM, that is if the service is provided which is renting of immovable property to a registered recipient, it will only be that is unregistered recipient, it will only be FCM, all other cases it will be RCM. So services to business entity renting, if the recipient is registered RCM, otherwise FCM, all other services provided to business entity will be RCM. Now services provided to government, so far what we have seen is services provided by government. Service provided to government is that generally government is required to do some activities under constitution, they outsource it to some other person, that person to whom they outsource they received some money, so that is exempted for that services. Previously this exemption was given for government authority and government entity, now this exemption is applicable only in case of government, okay. So government has to do some functions under article 243 or 243H of the constitution, now they outsource it to some other person, that person provides pure service, exempted, or that is involving both goods and service, where the value of goods does not exceed 25% of the total value, then also it is exempted, okay. Suppose if there is a person who purchases the wheat and convert it into wheat flour and supply it to the government, now in that case, and for public distribution, ration shops, now in that case definitely the value of goods is more than 25%, so therefore it will not be exempted. Then any training program for which greater than or equals to 75% of the total expenditure is borne by central government, state government or union territory, that will be exempted. Then services provided by any institutions or NGOs under the central scheme of scholarship for students with disabilities, so only with if entire expenditure is borne for students with disabilities, so then it is exempted. Then renting of movable property, we have so 3 exemptions, that is hiring of a means of transport more than 12 passengers. I have a means of transport and that I am giving on rent to a, that is state road transport undertaking that has a capacity to transport more than 12 passengers, the rent charges or hiring charges received will be exempted. Then hiring of a means of transport to a GTA, so there is a goods transport agency, to that goods transport agency I am giving the vehicle on rent for which I collected the rent, that is exempted. Then I have an electric vehicle. That electric vehicle has a capacity to transport more than 12 passengers. That I am giving on rent to a local authority. Now whatever rent that is collected will be exempted. These are the three renting of movable properties that is exempted. Then renting of immovable property. If it is a residential property, when it is exempted, only if it is given on rent for residential purpose, it is exempted. Whereas commercial property, when exempted, commercial property given for residential purpose, that is for a temporary stay, if the charges per day is less than or equals to 1000, then it is exempted. Then precincts of a religious place meant for general public, that is, there is a religious place meant for general public registered as a trust, temple, etc., and its precincts is given on rent for what purpose? Accommodation. If it is less than 1000, it is exempted. Not equal to 1000, less than 1000, it is exempted. Then suppose if the precincts are given for conducting marriage function, hall is given on rent, less than 10,000 per day, exempted. If it is given for shops, then it is less than 10,000 per month, exempted. Otherwise it will be taxable, entirely taxable. Then in case of renting of motor vehicles, who will be paying GST? So we have RCM. If supplier is other than body corporate, recipient is body corporate, rate of GST is 5%, then RCM, otherwise it will be FCM. Then sports related services, two exemptions we have. Sponsorship to a recognized sporting event is exempted. So a recognized sporting event is collecting some sponsorship money. That money collected by recognized sporting event will be exempted. From whomsoever it may collect, it is exempted. And suppose if it is an unrecognized sporting event, then it will be taxable. If the recipient is body corporate or firm, it will be coming under RCM. If the recipient is other than body corporate or firm, it will come under FCM. That is in case of sponsorship. Then services provided by individual as a player, a referee, umpire, coach, team manager. Okay, there is an individual who is a player, referee, umpire, coach or team manager. If they provide service to recognized sports body, it is exempted. Suppose if they provide service to unrecognized sports body, that is taxable. But apart from these five, any other person providing service to recognized or unrecognized, it will be taxable. Then what is a recognized sports body? National Sports Federation or Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services, Cultural and Sports Board and Panchayat Sports Board, total 6. That is National Sports Federation, Indian Olympic Association, Inter-University Sports Board, Central Civil Services, Cultural and Sports Board, Paralympic Committee and Panchayat Sports Board. These are the 6 sports boards which are treated as recognized sports body. Then next one, services by an unincorporated association or a body. There is an unincorporated association or a body collecting money from its members. So membership fees. Suppose if it is a trade union, exempted. Suppose if that service itself is exempted. Then if it is a resident welfare association, the maintenance charges collected is exempted if that amount does not exceed 7,500 per month per member per month. 7,500 per month. Then suppose if it is an industrial or agricultural labor association, the membership fees is exempted. Suppose if it is an entity, any other entity, so that is exempted if the membership fees is up to 1,000 rupees per annum. So for resident welfare association, it is per month, whereas all other associations, it will be 1,000 rupees per annum, it is exempted. And transportation of passengers. So we are in transportation services. Transportation services is divided into two: transportation of passengers and transportation of goods. In case of transportation of passengers, so first we have 4 modes. Railways. In case of railways, so when it is exempted, other than AC or first class, exempted. Other than AC or first class, exempted. Then next, this metro, mono and tramway is exempted. These are the 2 exemptions. In case of airways, so starting point or ending point is in northeastern states or Bagdogra and West Bengal, exempted. Or if they are receiving, so consideration from government towards viability gap funding for a period of 3 years, that is exempted. Then transportation of passengers by waterways. Inland waterways exempted. If it is coastal waters, other than for tourism purpose, it is exempted, means public transportation. Then if it is transportation of passengers by roadways, so if it is non-AC stage carriage means which stops at every stage of its journey. So there is a stage carriage. Stage carriage means which stops at every stage of its journey. Contract carriage means, so that is point to point. Non-AC stage carriage exempted. Non-AC contract carriage other than tourism or hire is exempted. Metro cab, that is metered cab or auto rickshaw is exempted. These are the cases it is exempted. Okay. So what are the transportation of passengers by road that is exempted? Stage carriage, non-AC stage carriage, non-AC contract carriage other than tourism or hire, then metered cab or auto rickshaw exempted. But now there is an amendment, that is, if these three are through e-commerce operator, for example, normal auto exempted. If that auto is through Uber or Ola, then it will be taxable. Okay, if these three are through e-commerce operator, then it will be taxable. That is this. Then next, transportation of goods service. Transportation of goods service, if it is railways, specified goods is exempted. And if it is, what are those specified goods transported by railways? These specified goods come in three places: railways, then even in case of waterways also we have specified goods, coastal waters, and GTA also we have specified goods. So GT also we have specified goods. What is this specified goods? These specified goods are agricultural produce, food grains including flours, pulses, milk and salt, organic manure, relief material for natural or man-made disasters, then defense and military equipment. Then we have one more, that is railway equipment, but only in case of the other than GTA. So agricultural produce, food grains including flours and pulses, milk and salt, organic manure, newspapers and magazines, defense and military equipment, relief material for natural and man-made disasters. These 6 are applicable for GTA, and railway equipment and material is applicable for railways as well as waterways. Okay, these are the specified goods. Airways, India to outside India exempted, outside India to India, both ways it is exempted. Okay, but domestic transportation will be taxable. Waterways, inland waterways exempted, then India to outside India exempted. So then coastal waters, specified goods is also exempted. All other cases it will be taxable. Then roadways other than GTR courier agency will be exempted. So GTR courier only will be taxable. In GTA again we have 5 exemptions. Transportation of specified goods exempted. Freight does not exceed 1500 per carriage. So we are transporting goods in a single carriage. Freight does not exceed 1500 per carriage, or freight does not exceed 750 if it is a single consignee. Means more than one person's goods are transported. For each person we are charging not more than 750, then it is exempted. If goods belonging to one person is only transported, for that the freight collected does not exceed 1500 is exempted. Then recipient is central government, state government, union territory, local authority registered only to deduct TDS. So that is also exempted. If the recipient is individual, HF or AJP, unregistered and not having a factory, then also it is exempted. These are the 5 cases it is exempted. Yes, Bhopal gas tragedy is a man-made disaster. For that, if any goods are transported, that is exempted. Then in case of GTA, either FCM or RCM, they need to decide. So when it will be FCM, so if the rate is 12%, if it is 12% rate FCM, 5% rate, then it will be RCM. Then import of services. Import of services is divided into 2. OIDR services and other than OIDR services. OIDR means online information database access and retrieval services. Who imported these services? These services are imported by non-taxable online recipient. Who is a non-taxable online recipient? See, OIDR service is always taxable. What is a OIDR service? A service which is mediated through internet and it is automated is known as OIDR services. This OIDR services is imported by NTOR other than NTOR. Who is NTOR? Non-taxable online recipient means any unregistered person importing services for other than business or commerce is known as non-taxable online recipient. In that case, who will pay GST? Supplier will pay GST under FCM. Whereas if the importer is other than non-taxable online recipient, they will pay GST under RCM. This is in case of OIDR services. Other than OIDR services imported by non-taxable recipient is exempted. Who is non-taxable recipient? Individual, then trust and government. Individual, trust and government will be called as non-taxable recipient. Okay. Individual importing for personal purpose, trust importing for charitable activities, government importing for other than business or commerce. Then it will be exempted. And other than OIDR service by other than non-taxable recipient taxable under RCM. Then whenever they are liable to pay GST under RCM, they need to compulsorily register. Even that OID or supplier is also compulsorily required to get registered. Construction services, construction of an individual house is exempted. Then that individual house means house occupied by a single family is known as individual house, and that is exempted. Then construction, repair, alteration, renovation of specified projects. Which projects? Housing for All Mission and Urban Awas Yojana, Pradhana Mantri Awas Yojana. For this, both construction and repair is exempted, but for individual house only construction is exempted. Then TDR, FSI and long term lease. I am transferring TDR, FSI and long term lease. I am a landowner. You are the promoter or builder, so you need to pay GST under RCM. However, you have an exemption. Suppose using the TDR, FSI and long term lease, if you construct a residential flats and proportionate to the residential flats booked before completion certificate, we get the exemption. Okay, we'll try to understand this with an example. So value of inward supply of TDR, FSI is 10 lakhs and GST payable is 18%, 1 lakh 80. Now we need to see how many are the residential flats used, that is using this TDR, FSI. How many is the residential flats booked before completion certificate? So 28,000 square feet. What is the total carpet area of the project? Total carpet area of the project 50,000. So to the extent of 28 divided by 50, we will get the exemption. So 1,80,000 into 28 divided by 50, 1,800,000 is exempted. So remaining amount we need to pay GST under RCM. Then next one is, so up to 1/3 is exempted. 1/3 of your so whenever the value of land is included, okay, sale value of flat, whenever the land value is included, 1/3 is exempted with respect to that. So that is with respect to construction services. Then advocate services, services provided by individual advocate other than senior advocate or firm of advocates. We have 4 exemptions. If they provide service to an individual other than business entity, exempted. If they provide service to another individual advocate or firm of advocates, exempted. If they provide service to government, exempted. If they provide service to any other business entity whose turnover during the previous year does not exceed threshold limit, that is exempted. These are the 4 cases exempted. Remaining case it will be taxable and liability to pay GST is on recipient. Whereas in case of senior advocate and arbitrator, we have 3 exemptions. That is individual other than business entity exempted, government exempted, and recipient is business entity whose turnover during previous year does not exceed threshold limit, exempted. So these cases it is exempted, other cases it will be taxable under RCM. Then 3 exemptions under IGST Act, that is both supplier and recipient are located outside India. All services are exempted except one service, that is transportation of goods by vessel from outside India to India. That service alone will be taxable, and we already saw that importer of such goods is liable to pay GST. Then there is a tour operator, where the tour operator is in India and the tour operator is providing tour to a foreign national, and that too where the tour is conducted outside India. Now whatever charges the tour operator collects will be exempted. Then there is a seller outside India, buyer outside India. There is an intermediary in India who connects that seller and buyer, for which he get a commission. That commission is also exempted. These are the 3 exemptions. Then miscellaneous exempted services. Transfer of a going concern, that is there is a business as such I am transferring, for which I get some consideration. So transfer of business as a going concern as a whole or independent part thereof will be exempted. Then next, supply of services associated with transit cargo to Nepal and Bhutan. So transit cargo to Nepal and Bhutan means Nepal and Bhutan are landlocked countries. So goods will be going from India to Nepal and Bhutan. This is known as transit cargo. For that any service provided will be exempted. Then there will be independent journalists, Press Trust of India or United News of India. They will be selling the news, for which they get money, that will be exempted. Then there are public libraries which will be giving lending of books, for which lending fee collected, that is exempted. Then there is an organizer of business exhibition who is organizing the exhibition outside India, for which charges collected will be exempted. And public conveniences such as urinal, lavatories, etc. So they will collect 1 rupee, 2 rupee for public toilets. So that money collected is exempted. Then toll charges for allowing a person, a vehicle to use that road, the toll charges is exempted, even if the toll charges is paid by way of annuity, that is also exempted. Then there is a performance artist. That performance artist is performing in folk or classical art form of music, dance or theatre. So genre is folk genre or classical, music, dance or theatre. where the consideration per performance does not exceed 1,50,000 is exempted. Suppose if it is exceeding 1,50,000, then it will be entirely taxable. However, if they act as a brand ambassador, then it will be taxable even if it does not exceed 1,50,000. Then services by way of training or coaching in recreational activities relating to arts, cultural or sports is exempted. Already we discussed this point. Then satellite launch services. Satellite launch service is provided by ISRO, Indian Space Research Organization, Antrix Corporation, New Space India Limited. That satellite launch service is exempted. Okay. So these are the various exemptions that we have in GST. Now, next we are left with small topics: payment process, returns, GST practitioner and e-way bill. Okay, we'll take a small break. So this break is for me because I am having throat pain. A small break for me, a 10 minutes break, and thereafter I will continue with these remaining topics. With that, this GST rocket revision is over. Okay. Okay friends, the next area that we are going to see is payment process. So payment process, these are all some miscellaneous topics mainly useful from MCQ point of view. So first section 49 says that every registered person, against every registered person, GST network will be maintaining 3 ledgers: electronic liability ledger, electronic credit ledger and electronic cash ledger. So electronic credit ledger, whatever balance that is there, can be used only for payment of tax dues, whereas the balance in electronic credit ledger cannot be used for payment of other dues. So in electronic liability ledger, totally there will be 5 dues. Okay, tax dues, TIPFO, TIPFO. So in electronic liability ledger, there will be these 3 tax, these 5. Tax dues means whatever tax that is payable, interest, P for penalty, F for fees, late fees, and O for others. Now, whatever balance that is there in the electronic credit ledger can be used only for payment of tax dues but not for other. But the balance in electronic cash ledger can be used for payment of tax dues as well as other dues. How money will come into credit ledger? Whenever we take ITC through 3B, that will come into credit ledger, which can be used for payment of liability ledger. How money will come into the cash ledger? So whenever we make a deposit into the cash ledger through challan, that will come, and any TDS, TCS deducted by the recipient and refunds, so that will come into the cash ledger. Then we have forms here, PMT1. PMT1 refers to electronic liability ledger, and PMT2 is electronic credit ledger, and PMT3, like that one form is there. For what purpose? Whenever refund is sanctioned for credit into the credit ledger. So whenever we have made some excess payment of tax, that money will come into the credit ledger for the credit. So they will pass an order, that is PMT3, refund order. Refund order is PMT3. PMT4 is communication of discrepancy. Suppose if there is any discrepancy in the balances, for communication of the discrepancy, so they will be filing PMT4. Then PMT5 is electronic cash ledger. Okay, then PMT6 is deposit challan. Deposit challan, for deposit money into cash ledger we use a challan, that is PMT6. Then PMT7, the payment gets debited in our bank account. Okay, bank account debited, but it is not reflected in the cash ledger, then we will file PMT7. PMT8 is not there, but PMT9 is there. PMT9 is for transfer of balances, transfer of balance between cells, transfer of balances between cells in cash ledger. In electronic cash ledger, say under tax CGST, we need to shift it to interest IGST. For that, we will be filing PMT9. These are the various forms that we have in payment process. Then balance in electronic credit ledger and cash ledger, after payment of interest, penalty, fee or any other amount may be refunded. And refund from cash ledger, no restriction, but refund from credit ledger is possible only in 2 cases. That is, refund on account of zero rated supplies and inverted tax structure. What is inverted tax structure? The tax rate on outward supply is less than the tax rate on inward supply, then we will get the refund. Also in case of zero rated supplies, we will get the refund. Then what are the various modes of deposit into the payment challan? Either we can make a deposit through internet banking, debit card, credit card, NEFT, RTGS or cash deposit. But cash deposit is restricted only up to 10,000 rupees per tax period. Then PMT3, PMT4 we have seen, PMT7 we have seen, and PMT9. Then there are 2 rules here, Rule 86A and Rule 86B. Rule 86A says that whatever credit balance that is there in the input tax credit ledger, so that will be suspended for a maximum period of 1 year by the proper officer. When? Suppose if the supplier is missing or not doing business from the place where they have obtained registration, or recipient is missing or not doing business in the place where they have obtained registration, or ITC availed without actual receipt of goods, or ITC availed against an invoice for which GST is not yet paid by the supplier, or the invoice or debit note is missing. So in these 5 cases, whatever ITC that we have availed in our credit ledger can be suspended for a period of 1 year, and after 1 year, so the proper officer may give that credit back, or suppose if that credit is fake credit or fraud credit, then that will be disallowed. So then Rule 86B, Rule 86B is that whatever liability that we need to pay, so that liability we have to pay 99% through credit ledger and 1% through cash ledger. But this Rule 86B is applicable only if turnover in a month exceeds 50 lakhs. So then only this 86B will be applicable. And if the turnover in a month exceeds 50 lakhs, while computing the turnover, we should take out zero rated, exempted and taxes. Even non-taxable should be taken, which means what turnover? Taxable turnover. In a month it should exceed 50 lakhs. Then we need to pay 1% of the gross liability through cash ledger, even if there is sufficient balance in the credit ledger. But this is not applicable to government department, public sector undertaking, local authority and a statutory body. Also, there is a relaxation. Suppose if a person has deposited more than 1 lakh in each of the preceding 2 years in income tax, then not required. If they are eligible for a refund of more than 1 lakh in the preceding year, also 86B not applicable, or cumulatively up to that month in the current year, if they have already paid 1% through cash ledger, then also it is not applicable for the next month. Like that, we need to decide. And then exemption with respect to 86B is there. Then refund to the original source. Refund to the original source means whenever we have made excess payment of tax, that excess payment of tax can be made partly through cash ledger and partly through credit ledger. Now, for example, if there is GSTR 3B, GSTR 3B of July 2022. So this July 2022 GSTR 3B, so we have paid through electronic credit ledger 40 lakhs and through electronic cash ledger 20 lakhs. Okay. So total 60 lakhs we paid this way. But there is some excess payment of tax. Excess payment of tax. That excess payment of tax is 1,20,000. How it will be refunded? It will be refunded into the electronic credit ledger. 1,20,000 into 40 by 60. 40 by 60 will go to electronic credit ledger and 20 by 60 will go to electronic cash ledger. 1,20,000 into, so 20 by 60 will go to electronic cash ledger. That is 1,20,000 into 40 divided by 60. So 80,000 rupees will go to electronic credit ledger and 40,000 rupees will go to electronic cash ledger. That is this. So, but this is applicable only in case of excess payment of tax. Then the said amount, if found admissible, proportionate amount debited from credit ledger shall be recredited to credit ledger by an order in form GST PMT 3. Okay. Then the next area is returns under GST. We have various returns with the time limits. GSTR 1 is to be filed by every person relating to their outward supplies, and if they are opting for QRMP, quarterly return monthly payment, the due date of GSTR 1 is 13th of the month following every quarter. Whereas if they are not opting for QRMP, it is 11th of the month following every month. And they need to also furnish invoice furnishing facility, IFF. This invoice furnishing facility is for the purpose of reporting the invoices. In case of QRMP, as the supplier will be going for QRMP quarterly return, then the recipient can take ITC only on a quarterly basis. Due to that reason, they can report the invoices, B2B invoices on a monthly basis in IFF, invoice furnishing facility, and that is by 13th of the month following every month. Then GSTR 3B is a consolidated return that contains the details of outward supplies, inward supplies, gross liability, input tax credit, and if they are not going for QRMP, then it will be 20th of the month following every month. If they go for QRMP, then 22nd or 24th of the month following every quarter, which case 22nd. So therefore there are some notified states for which 22nd. Remember, GMCA, Gujarat, Madhya Pradesh, Chhattisgarh and Andhra Pradesh, and states below that, GMCA and states below that, it will be 22nd. All other states it will be 24th. Then next, CMP 8. CMP 8 is a return to be filed by a person opting for composition scheme by 18th of the month following every quarter. Then GSTR 4 is an annual return filed by a person opting for composition scheme by 30th April of the succeeding financial year. Then GSTR 5 is a return to be filed by NRTP, non-resident taxable person, that is 20th of the month following every month or 7 days from expiry of registration, whichever is earlier. Then GSTR 5A is a return to be filed by OADR supplier regular, 20th of the month following every month. GSTR 6 is a return to be filed by input service distributor by 13th of the month following every month. Input service distributor will take the credit and distribute the credit to the branch officer so that the branch officers can take the credit. So that is 13th of the month following every month. GSTR 7. So TDS details. This TDS details, GSTR 8 TCS details. So this TDR and TDS and TCS will be filed by 10th of the month following every month. GSTR 9 is an annual return. That annual return is to be filed by 31st December of the succeeding financial year. GSTR 9C is a reconciliation statement. Previously it was audited and now it is self-certified. To whom it is applicable? So persons whose aggregate turnover during previous year exceeds 5 crores. So then this reconciliation statement will be applicable. Along with annual return, they need to file reconciliation statement. GSTR 10 is a final return to be filed by a person whose registration is cancelled. So that is within 3 months from the date of cancellation order, or within 3 months from the date of cancellation, or the date of cancellation order, whichever is later. Here it is whichever is later, not whichever is earlier. GSTR 11 is details of inward supplies to be filed by a person obtaining refund. UIN holder obtaining a refund will be filing this GSTR 11. These are the various returns. Then who are not required to file GSTR 1 and 3B? Those who are required to file other returns are not required to file GSTR 1 and 3B. That is, so remember tonic in the T square. So TDS, TCS, because they need to file GSTR 7 and GSTR 8, and O, that is OIDR supplier, because they need to file GSTR 5A, N, NRTP, because they need to file GSTR 5, I, that is ISD, because they need to file GSTR 6, C, composition scheme dealer, because they need to file that is CMP 8 due to that reason. Then who are not required to file annual return? Remember CAG tonic, CAG tonic, CAG, Comptroller and Auditor General, that is whose records are subject to audit by CAG, not required to file annual return. Then tonic, T, TCS, not TDS, TCS deductor, and then O, OIDR supplier, N, non-resident taxable person, I, input service distributor, C is casual taxable person here. So these people are not required to file annual return. Then we can file the return through SMS also, nil return through SMS. Which return? GSTR 1, GSTR 3B and CMP 8 you can file through SMS, but all entries in that return should be nil. Then QRMP scheme. To whom this QRMP scheme is applicable? A person whose aggregate turnover during the previous year does not exceed 5 crores, or in any current year quarter it does not exceed 5 crores can go for QRMP. And so they need to file GSTR 1 on a quarterly basis by 13th of the month following every quarter, and 3B also they will file on a quarterly basis by 22nd or 24th of the month following every quarter. Then they need to pay tax monthly. So for the first month and second month in the quarter, they need to file tax, they need to pay tax by way of deposit in the payment challan PMT 6 by 25th of the month following every month. What about the third month? Anyhow, for all the 3 months put together, they will be filing GSTR 3B, in that they will show the tax amount. And B2B invoices may be furnished in IFF. Invoice furnishing facility is there. So that is, even though they file GSTR 1 on a quarterly basis, but first month and second month in the quarter, they can furnish invoice furnishing facility, and this is optional to report the B2B invoices so that the recipient can take the ITC. And QRMP scheme is like registration wise, not like composition scheme. Actually in composition scheme, all in or all out, that is all registrations will be into composition scheme or all registrations out of composition scheme. But QRMP is not like that. So QRMP is GSTN wise, which means that I have 4 registrations. So for one registration I can go for QRMP, other registration I can go for normal. What is the time frame to opt in? So within 1 month after commencement of the quarter and within 2 months before commencement of the quarter, A for after, B for before, 1 month after, 2 months before commencement of the quarter, they can go into QRMP scheme. And what is the condition for opting in? The last return should have been filed. The last return must be furnished on the date of exercising the option. GSTR 1 or availing invoice furnishing facility. The scheme provides invoice furnishing facility for the first 2 months to furnish the details of outward supply by 13th of the month. Already we have seen. And suppose if you file that invoice furnishing facility invoices, those invoices again we don't have to enter in GSTR 1. So auto populated in GSTR 1. Otherwise all 3 months invoices we need to enter in GSTR 1. And there is a limitation, that is we can enter the details of invoices for a value up to 50 lakhs in each month, not beyond that. Then for payment of tax, we have 2 methods. Fixed sum method and self-assessment method. Under fixed sum method, we have to check whether the previous 3B filed is quarterly or monthly. If the previous 3B filed is quarterly, whatever is the liability, net liability into 35% we will take, and we will pay as the liability for the first and second month. What about third month? Actually, we will pay based on the quarter. Then suppose if the previous 3B filed is monthly, then 100% of net liability we will pay for the first and second month. Alternatively, we can go for self-assessment method by taking inward supplies and outward supplies and seeing what is our net liability, and we can make payment of that. And compulsory opt-out, when they will be compulsory opting out. So that is whenever their aggregate turnover exceed 5 crores in a quarter, they will compulsorily coming out of this QRMP scheme. And interest, suppose under QRMP scheme, Suppose if they are going for fixed sum method, so then if there is any differences means under fixed sum method they pay 35,000, but actually it's 40,000. On that 5,000 rupees no need to pay interest if they pay the tax by the due date of GSTR 3B. If there is any delay, then only interest will be payable at the rate of 18% per annum for every day beyond the due date till the actual date of payment. Whereas under self-assessment method, on the difference interest will be payable. That's a basic difference. So therefore, under fixed sum method, on the difference no need to pay, provided that amount is paid by GSTR 3B due date, otherwise interest at the rate of 18% payable. But in case of self-assessment method, we need to pay, okay, so on the differential amount. Then levy of late fee, yes, we need to pay late fee for delay in filing GSTR 1 and GSTR 3B, but not on account of, you know, this interest pay, IFF or any payment of tax, no late fee. Then what is the late fee for delay in filing returns? If it is GSTR 1 or GSTR 3B, nil return means 10 rupees per day, other than nil return means 25 rupees per day. And what is the maximum amount? In case of nil return, the maximum amount is 250. All this computation is under CGST Act. The same amount is payable under SGST Act also. Suppose if it is other than nil return, if aggregate turnover during the previous year, so it is aggregate turnover during previous year, and what is the maximum late fee? Okay, if the aggregate turnover during the previous year exceeds 5 crores, then the maximum late fee is 5,000. If the aggregate turnover exceeds 1.5 crores and does not exceed 5 crores, it exceeds 1.5 crores but does not exceed 5 crores, half of this 2,500. If it exceeds, that is if it does not exceed 1.5 crores, then it will be 1,000. So this will be taken as the maximum late fee, okay. And then see, many students, you might think that I am going very fast. This is marathon. This is not a fast track batch. Try to understand my problem also. I have to quickly revise everything for the purpose of last minute, one day before the exam. That's why I am going fast. If you want me to discuss detailedly, so already in my app it is there. So you can check that. So fast track batch, it is there if you buy the book for 500 rupees, or you can pay 500 rupees and you can see, watch that lecture. So in detail it is there, okay. So in detail in the sense like comparatively, but this is for those who already attended fast track batch and regular batch, for them only this revision is. That's why I am going little fast. Try to understand. So please don't comment that, so please repeat, or I have not understood. So then you should have watched different lecture. This is rocket revision, a marathon for last minute revision. Try to understand. So then, so we need to check if aggregate turnover during previous year exceed 5 crores, maximum late fee 5,000, exceed 1.5 but does not exceed 5, 2,500, does not exceed 1.5 crores, then 1,000 rupees. This is the maximum late fee. For delay in filing GSTR 5, 5A and GSTR 6, nil return, other than nil return, same, 10 rupees per day, 25 rupees per day, but the maximum is both cases 5,000 rupees only. GSTR 7 and GSTR 8. GSTR 7 is what? TDS. GSTR 8 is TCS. In case of TDS return, so the late fee will be 25 rupees per day subject to maximum 1,000. Whereas in case of TCS, 100 rupees per day subject to maximum 5,000. GSTR 4 is the annual return to be filed by a person opting for composition scheme. Nil return means 10 rupees per day subject to maximum 250. Other than nil return means 25 rupees per day subject to maximum 1,000. That's it. Whereas in case of annual return, normal annual return by a person other than opting for composition scheme, 100 rupees per day subject to maximum 0.25% of the turnover. So this late fee chart we need to remember, mainly in MCQ this can be tested. This late fee is under CGST, the same amount of late fee is payable under SGST also. Then rectification of returns. In GSTR 1 we filed, and if there is any like mistake that we noticed and we need to rectify that, through amendment we can rectify that in the next period GSTR 1. What is the time limit for this rectification? Due date of GSTR 1 of the September, that is 11th October of the succeeding financial year, or date of filing and return, whichever is earlier. So due date of filing return for September next year means 11th October of next financial year, 11th October of next financial year, or date of filing GSTR 9 annual return, date of filing GSTR 9, whichever is earlier will be taken, will be taken as the time limit. So three places we have this relevant time limits. One is for credit note, So 30th September of the succeeding financial year, date of filing and return, whichever is earlier. Another place is time limit for availment of ITC, 20th October of the succeeding financial year or date of filing and return, whichever is earlier. And then third case, this is rectification, that is 11th October of the succeeding financial year or date of filing and return, whichever is earlier. Then how the details of outward supply should be entered in GSTR 1. B2B supplies always we need to enter invoice wise, but B2C supplies interstate, intrastate we need to divide. B2C means recipient is unregistered. So intrastate consolidated means we will not report invoice wise. Interstate, invoice value exceed 2,50,000 per invoice, invoice wise. Invoice value does not exceed 2,50,000 per invoice, then state wise consolidation. This is what we need to follow. Then with that, returns chapter is over. Then two more topics left. Listen, GST Practitioner. GST Practitioner as per section 48 is appointed for the purpose of carrying out certain activities on behalf of the registered person. What are the activities that a GST Practitioner can do? So they can apply for registration, they can file returns, and they can make payment of tax and apply for refund, and they can act as an authorized representative. So these are the basic activities. In addition to that, they can furnish the details for generation of e-way bill, and they can furnish the details of goods sent on job work or received from job work. They can make an application for amendment or cancellation of unique enrollment number for a transporter or warehouse keeper, and they can file an intimation to pay tax under composition scheme or withdraw from composition scheme. These are the 8 activities that can be done by a GST practitioner on behalf of registered person. And what are the eligibility conditions? So they should be citizen of India, and they should have a sound mind, not adjudged as insolvent, and not convicted so for an offence with imprisonment. So then if there is a GST practitioner appointed and if they file the return, who is responsible for the correct filing of the return? GST practitioner is not responsible, registered person. The responsibility for correctness of particulars lies with the registered person. So before filing, so that data should be made available to the registered person and seek a confirmation over mail or SMS, and then only it should be filed. However, failure to respond request for confirmation shall be treated as deemed confirmation and the return will be filed. Then last area, e-way bill. So e-way bill is a document to be filed by every person who is causing movement of goods, and this information needs to be given to the GST department through the e-way bill portal. It is to be generated before movement of goods, and e-way bill is not required in case of exempted goods, and it is not applicable if the value of goods is less than 50,000, does not exceed 50,000, but while counting the value include GST. However, in case of job work and goods sent on job work and handicrafts, e-way bill is required even if the value does not exceed 50,000 rupees, and it is applicable in case of movement of goods whether under supply or without involving supply. So whether the movement of goods is under supply or not, so then also e-way bill is required. Here e-way bill is for the taxable goods, whether that is covered under supply or not covered under supply, e-way bill is required. And e-way bill has two parts. Part A comprises of GSTIN details, invoice details, etc. Part B contains the vehicle details. Part A should be updated by the registered person causing movement of goods, and Part B should be updated within 15 days of updating Part A. So then Part B may be updated either by supplier or transporter or recipient. Now, what is the validity of e-way bill? So the validity will be like if it is over dimensional cargo, that is it's a big lorry, then in that case it will be 1 day for every 20 kilometers or part thereof. Or multi-mode transportation. Multi-mode transportation means, so up to some distance it will be transported by one mode and thereafter another mode. In that, if waterways is there, up to some distance by railways, thereafter by waterways, and again by railways, like that. In that case, so then also 1 day for every 20 kilometers or part thereof. In all other cases, it will be 1 day for every 200 kilometers or part thereof. This is the validity, and the validity should always be counted from the midnight of the day in which it is generated till the midnight of the next day. Okay. Then the validity of e-way bill system may be extended within 8 hours from its expiry. Suppose if the validity is over, so then it should be extended within 8 hours. What will happen if it is not extended within 8 hours? Then it is as good as goods are transported without e-way bill, and the goods are liable for confiscation and penalty will be levied. E-way bill cannot be generated with respect to outward supplies if returns are not filed for 2 consecutive tax periods. If return is not filed for 2 consecutive tax periods for outward supplies, e-way bill cannot be generated, that will be blocked. Then in case of bill to ship to transactions, one e-way bill is sufficient. We can mention both billing address and shipping address. Multi-vehicle updation is possible in e-way bill, means up to some distance in one vehicle, thereafter another vehicle, we can update part B in e-way bill. Then there are some FAQs on e-way bill. So very important FAQ number 1, that is when e-way bill is not required. If it is a non-motorized vehicle means, so that is bullock cart, horse carts, etc. Then if goods are under the control of customs officer, then also e-way bill not required. Then transit cargo to Nepal and Bhutan, or if goods are related to Ministry of Defence, then empty cargo containers, e-way bill not required. Or we are taking the goods from our factory to the weigh bridge and it is within 20 kilometers to weigh the lorry with the goods. So for that weigh bridge also e-way bill not required. Then goods are transported by rail belonging to government, then also e-way bill not required. Then states will specify some goods as exempted from e-way bill, then not required. Then LPG. So LPG for household, that red color cylinders, e-way bill not required. Kerosene oil under PDS, e-way bill not required. Postal baggage, natural or cultured pearls, jewelry, then used personal and household effects. These are the specified goods for which e-way bill is not required. Whether this 50,000 limit is for taxable goods or exempted goods, taxable goods only. Means if in an invoice there are both taxable and exempted goods, take out exempted goods, only see taxable goods, and if that value exceeds 50,000, then only e-way bill required. So who will generate e-way bill? Suppose if the supplier is registered, supplier will generate. If the supplier is unregistered and the recipient is registered, recipient will generate. If both are unregistered, then the transporter will generate the e-way bill. Then whether transporter should generate e-way bill, if the supplier has not generated e-way bill because of that 50,000, say 10 consignments are transported, each consignment value does not exceed 50,000, but cumulatively it exceeds 50,000, then the transporter has to generate e-way bill for each consignment. Okay. So that is this. Individually it is less than or equals to 50,000, but in total it exceeds 50,000. Then the transporter has to generate the e-way bill. So with this we completed GST. So the marathon. So we started and we completed. So all major points we have completed in this. So this will be sufficient for you for quick revision purpose. And so this video you can keep it, and one day before the exam you can revise it. Hardly, so it is around some 5 hours and odd only. So because we started at 7, now it is at 1, and in the middle I gave some breaks. So therefore hardly 5 hours, 5.5 hours only, not more than that. So this will be sufficient for you for revising one day before the exam. Okay, you can revise this and you can go for exam. Then next thing is that 2 more things I will be doing from my side. Number 1, I will be doing some questions on all past exam questions related to question number 1, consolidated questions. I will upload that video in the YouTube, you can watch that. And then second thing is amendments, because many students ask me to share the amendments video separately, so that amendments also I will do. Then ICA study material questions, I don't know whether I have time. Suppose if I have time, definitely I will do that. Otherwise kindly forgive me, because it's already there in my fast track batch. So you can go to my fast track batch in the app and you can watch that. Okay, so thank you here, thanks a lot, and so all the very best for your exam. So you can post any query in the Telegram group. I am there for you to provide you the queries, and the Telegram group is THARUN'S GST. So suppose if you want to join the group, so it is THARUN'S GST, so you can join, or directly if you want to send any message, use this ID, IDT wizard. This IDT wizard, like that, if you enter also, you can directly chat with me. Okay, so in Telegram. So whatever is your queries, you post it, I will be able to reply to your queries. Thank you all, take care, and so one day before the exam we will meet, and whatever revision that is required for you, I will do that. So at that time I will be discussing top 50 questions I will be discussing. That will be sufficient. Okay, this rocket revision plus that 50 questions is more than sufficient. Thank you, take care, and a small request to all of you finally. So please share this video with as many students as you can, so that they get benefited. So they should not think that GST is difficult. So requesting you to share, so that they will know, okay, this is the portion, these are all the areas that they need to learn, so they can quickly complete the revision for that purpose only. Okay, thank you all, take care, pa.